Hi, break the leg.
All right, thanks, Greg. Hey, everybody. Jeff Gibby over at Metastock. I hope you're doing well. It's good to see you. Thanks for coming today. We're going to go ahead and kick off things. As I said, my name is Jeff Gibby. If you're watching us on YouTube and you like the event today, make sure to like and subscribe. It helps a great deal. If you have any questions as we go through today, feel free to ask. If you're watching YouTube, just ask in the chat. If you're watching and go to webinar, there's a little questions area that'll allow you to kind of log in and ask a question. So without further ado, let me go ahead and kick off with our legal disclaimer. We'll go ahead and get started. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and guidelines and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So without further ado, I want to say thank you for coming. It's really, really good to just have you here. I want to encourage you to ask any questions that you have. I want to encourage you to have a good time, get some coffee, relax, and let's learn a few things. As we get started today, I want to say thank you to Stocks and Commodities Magazine. They've been a sponsor of all of our Metastock events for a very, very long time. You can find out more about stocks and commodities at www.traders.com. Also want to invite you to join our community. We have a community of live traders where you can come in, talk about the markets, do live market chat, learn all kinds of lessons, lots of free resources that are available for you. And you can do all that at thetradersforum.com. So, of course, we are Metastock. There's going to be a couple things as we go through today. We're going to be giving away prizes all day. If you're watching us on YouTube and you haven't registered for the event yet and you want to qualify for a prize, make sure to go to the registration link, which Greg is going to put right now in the actual thing. That way you can kind of be eligible for the prize. I would do that right away. I'm going to pull the list and we're going to get the prizes ready and we're going to all do all that kind of stuff right after we get started. We are, of course, Metastock. Metastock's been rated the #1 software program in its price category 32 years in a row, and we're going to be talking about it and using it and talking about how good it is at scanning and identifying trades all day long today. So without further ado, our first guest today, Serge Berger, is going to be joining us. He's going to be, he always does a really, really good job. We love to have him on, and we're going to kick off with him today. So, Serge, let's go ahead and get you started.
Awesome. Hey, Jeff.
Hey, good to see you.
Good to be here. I actually do have my camera on. I just realized I can, there we go. I think that's my camera, yeah.
Yeah, we can see you.
Just so you know, I'll turn it back off afterwards just so I can focus, but I want you to know I'm here, and I'm going to show my screen. Give me just 1 second. There we go. It's always a thing to get going on a Monday morning. Alrighty.
All right.
We are. Share my
You excited
screen.
to kick us off, Serge?
What's that?
You excited to kick us off?
Oh, I'm super excited. It's I should mention this. It's going to be it's a pretty important week this week, so it's going to be pretty critical that we're kind of on our A game in terms of being aware of what's going on here. But I can talk about that.
I can see your screen. I'm gonna go ahead and turn it right over to you. Let's go.
I appreciate it. Thank you so much, Jeffrey, and as always, you and the team for putting on a great education series here. As I just mentioned, we have an important week here this week, and I just got off the phone with my morning calls with some investors in New York and in London and in Zurich, and it is the positioning here is pretty much all in on most investors right now. That does not mean that things have to crash, but we are seeing this is pretty critical point. In fact, I can show you guys something real quick, and I want to quickly say one thing before I get started. I'm on sort of on the road here right now, and I don't have access to my complete platform. So everything I'm going to show you guys today is 100% something that we can use MetaStock for. Okay, so I just want to make sure everyone knows that, because obviously Jeffrey and the team have a wonderful platform. So I just want you to know that this is 100% something that you can and probably should consider using on MetaStock. So just on my end, that's sort of my my disclosure. But what I'd like to talk about here today is something called momentum trading. That I want to frame it a bit before we get started, and so let's do that. I think the introduction here on the part of Jeffrey is probably suffice, but you know, from my perspective, I think it's really important to keep in mind kind of where we are in the big picture, and then consider the trades. And right now, and I'm going to turn my camera off in a minute because it's distracting me. But right now we are in an environment where there's a lot of stimulus. It's fiscal in nature, it's monetary in nature this week, as well as we're probably going to get somewhat lower rates, and it's happening on a global basis. And that can lead to people getting extremely bullish, overly bullish, maybe actually definitely at some point. But it's a momentum environment. And the thing when we're in that kind of environment is that momentum swings both ways. Be that Tesla the past few days on the upside, but there's plenty of stuff that can also swing to the downside. Because when you have momentum, it's basically an algorithmically driven market. And those are momentum markets. And over the course of my career, I've been very fortunate to be able to kind of expose myself or get exposed to different markets of different asset classes. And momentum markets can be extremely lucrative as long as we understand, you know, what they actually are. So that's me. Just quickly from a risk reclaim perspective, and I am going to turn the camera off in a minute so it doesn't distract me. But it is important to know that, you know, trading and investing carries a lot of risk. So I would always encourage people to make sure that they take this serious and get yourself educated. Also, none of what I'm talking about here is investment advice. This is purely educational. So we are here right in the middle of September here today, and you know, I don't know about how much of a storm we have the potential here for, but we have certainly the potential to get a little bit of risk aversion coming back into the market, if only for a few weeks. But a lot of times that can trip people up. And from a momentum perspective, the good news is that we can measure that, we can trade it, and hopefully, you know, make money from it. So let me turn my camera off so it doesn't distract me, but just so you know, I am here, and I'm happy to cam up again afterwards if anyone needs to see me for some reason. Anyway, so yeah, so that's where we are right now. We're kind of, you know, again, it says calm before the storm. This is not meant to sound alarming. It's just meant to be telling you that, you know, we are kind of at a point where things could get a bit more turbulent. My promise, of course, is that I'm going to show you exactly how we like to trade momentum, and the process that I use to, you know, with a repeatability and confidence, sort of navigate through those kind of markets. So by the end of this, you'll know exactly how to protect your money and position yourself to potentially and hopefully profit in really what typically tends to be, for me, the most interesting and even most active time of year between now and, let's call it, mid-December, before we kind of shut it down then for the year. Now, right now, you know, not a whole lot matters beyond rate cuts this week, of course. That's the gentleman on the right. And, you know, basically, you know, semiconductor chips that are AI in nature by the gentleman on the left. He's the CEO of NVIDIA. A lot of storytelling happening. This is not meant to be critical on my end. Just, I think it's important for people to understand that there is an incentive for particularly the gentleman on the left to continue the move, because there's a lot of stuff happening there that interconnects. So we want to just make sure that people understand that the markets don't typically go linearly, which is why it's so important, we believe, to take advantage of again, something called momentum in the market, which allows us to not only to risk manage our way through the market, but also be able to give us a much better sort of you know, outcome in the end, hopefully. So that's where we're at. But volatility, in some ways is practically scheduled. I think when we look at volatility, and this is now a bit of a seasonality aspect, and I always like to warn people that seasonality is an oversimplification of how things work. It tends to be a bull market phenomena. But volatility, particularly right now, has a pretty clear schedule. So I'm going to show you guys this in the next couple of charts. The summer months tend to be a little bit calmer, with lower volatility, but then once you typically get to August, you tend to see a little tiny hiccups. We saw that this August, even tiny, but there were a couple. And then once we get to particularly the second half of September and into October, we tend to see a bit more of that. Again, we're not talking catastrophic stuff, but there is the potential for a little bit of a pickup in volatility. You can see, for example, here, this is the volatility. So you can see volatility tends to jump around the mid-September movement point, and then into, this is the VIX, and then into the sort of first part of October. It doesn't have to be to the day or to the week, but that's the tendency. And again, the point here really is that this is going to, or should bode well for people that are willing to take advantage of momentum moves, like even just, for example, what you're seeing in Tesla here once again this morning, and of course last week, is purely momentum driven, and I'll show you guys how the signals we received to take advantage of those momentum moves. So there's a few reasons why we're heading into a more volatile environment. Again, there's a bit of pre-earnings announcements that we're going to start to see come out again early here the next couple of weeks before we head into a Q3 earnings season in about the second week of October. We have economic data. We have Fed, of course, as you know, seasonal memory. So let me just go through a couple of those a bit more specifically. But I think the thing that we need to understand about September here is that there is, again, a lot of economic data that tends to be focused on for the rest of the year and heading into 26. And so the Fed meeting that we're seeing here this week on Wednesday is very important. And we've seen a big rally, a big risk on, hope springs eternal move into the Fed. So it wouldn't be, and this is not my forecast because we're going to let momentum guide our way, but we are going to see, in our view, the odds increase here dramatically for a bit of a sell-the news event. Even if it's not immediately, it can happen within the next couple of weeks, and that would still be sort of appropriate with the timing that we're talking about. The other thing is, seasonal memory. This is something also to keep in mind. A lot of people remember some of the bigger market moves, and they all tend to happen in September, October, be that the Great Depression crashed. I mean, that's not recent memory, but even 87 certainly isn't recent memory, but people talk about those points, and so it kind of gives a bit more credibility to September, October being volatile. Even 2008, which for most people is a distant memory too, but that financial crisis was a September, October phenomenon as well. So there's a bit of memory there as well from that perspective. Now, the question, of course, is how do we tackle volatility? Well, volatility, particularly within the context of a bull market, and a bull market where you have liquidity being provided both fiscally and now also monetarily, meaning fiscal spending, so government deficit spendings, but also lower interest rates, both in Europe and certainly now, or it appears likely for that to start happening by Wednesday here as well. That can cause a lot of momentum in both directions. And volatility is essentially built on momentum. Momentum is a very repeatable pattern, and momentum is largely driven by computer algorithms that we can actually have a good chance of predicting on what the next move is going to be. So knowing when these momentum spikes are coming is the hardest part, but if we use a process and specifically a tool for that, that could be very, very beneficial to us, particularly since it also allows us to cut out the emotions. So, to us, it's all about having, I guess, peace of mind. We don't just, we basically just buy when the system tells us when there's a momentum buy signal, and sell when there is a momentum sell signal. And credit here to Jeffrey and the team. They've been quite instrumental in helping us implement this momentum, particularly momentum strategy, particularly on meta stocks. So you'll see this here shortly. One thing I want to just quickly caution of, I guess, a lot of people have a lot of different trading tools, but I think it's important to understand that we don't need 15, 20 different indicators. What we as market participants, be that on the trading side or the investing side, really need is we need a couple of tools that kind of span across different time market conditions, but also kind of suit what we're trying to do. So if you are a trader, right, how many people in here today consider themselves to be a trader, at least to some extent? Who thinks, who sort of labels themselves a trader, at least part-time? Type in a yes, Y-E-S, into the, I think it's the questions box here. That's the one that where you, or it's the chat box. Okay, so there's some people, or question or chat, whichever one it is. And so there's probably quite a few of you that label yourself that. What I want to just mention to you, if you are a trader, at least even just a little bit, what you really are looking for is essentially something called momentum. And momentum is a strategy that is likely going to be with us for a long time, because it's algorithmically driven. It comes from the computer systems, the big algorithms run by hedge funds and to some extent family offices and banks and so on and so forth, that basically ride momentum. And so what is momentum, just before we get started and looking at this, we can define momentum in sort of a mathematical equation, which a lot of the engineers here today will probably enjoy. It's just P is momentum, and it's essentially the mass of an object times its velocity. And that may not be that telling for some of you who are not engineers, and it wasn't that important for me either, which is why I wanted to show it to you this way. So here again, you can see P equals M times V. Really what it is, but the way I look at it, and again, I'm sure there's some engineers that'll disagree on the exact definition, but the way we look at it in the markets, and what's typically also understood among many hedge funds and other market participants that we speak with on a daily basis, momentum is essentially the rate of acceleration. So let's say the car is driving along here at 45 miles an hour and speeding on and pulling onto the highway, and merging onto the highway, and all of a sudden speeds up to 75 miles an hour. It's that rate of change is what we consider to be momentum. And I have a great chart for you guys here in just a second on this. So that's really, as a trader, if you're looking to make a directional bet, which is what most traders try to do, you're really looking for momentum and not so much trend. Those are two very, very different things. I'm doing a daily session now with our best clients throughout the entire month of September, where I'm explaining to them the difference between momentum and trend. And it's for a lot of people, it takes them a couple of days to understand what it is, but once they understand the difference, they become so much better at being sort of at one with the market and being at peace and not constantly getting chopped up all the time. But basically, stock market momentum, the way we look at it, is something that is fleeting, right? So in other words, it's not permanent, it's temporary, which is very different from trends. Trends are not permanent either, but they tend to last much longer. But momentum can change day to day, week to week, month to month. True trends tend to last much longer. But momentum, and that's again, as a trader, what you guys are looking for the most part, it's temporary. It's not a constant. It comes and it goes, and that's actually a good thing as a trader investor to have that that type of strategy under your belt, because that's really what most people are looking for. So momentum, the best way to kind of explain it to you is on this long-term chart. You can see two green arrows on this chart. One of them is the light green one. That's a longer-term bullish trend on this particular stock. And then you have in the more near term, you have a green arrow, which is a momentum arrow. That's the arrow that is more, again, you can see more short-term, and that's where we have momentum come back into the market. There's also momentum to the downside if you look at that previously, but the broad big trend remained intact. As a trader, where traders get in trouble is when they mix the definition of a trend with a trade or momentum, right? So a lot of people will consider this to be momentum. This part, it's not. This is a trend. It's not momentum. Momentum is when the rate of change, our definition, and again, quite broadly used definition among market participants. Our definition of momentum is when that trend changes, or sorry, the trend doesn't change, but the rate of change among the trend changes, either to the downside or to the upside. Okay, so hopefully that makes sense. Now, the challenge that typically we have found people have, and we did as well, with traditional momentum indicators, like stuff that might come off of your chart, sort of out of the box, is that a lot of them, if not most of them, tend to have basically lagging signals, and that can be basically leading to more false signals than one would like to have. That leads to frustration. That leads to just a lack of confidence or deterioration of confidence, and because of that, a lot of the traditional approaches or indicators to momentum and thus to trading for most people tend to also not be adapting quickly to market changes. So we think it's really important to be able to understand what actually is momentum and why it requires a very specific focus. What our approach to momentum, it's specifically an indicator. Again, it's all entirely available on MetaStock. I'm saying this because I'm on the road and I don't have access to my full PC right now. But what we do is we are using a process and an indicator that detects momentum in more sort of a real-time fashion. And so it uses exact parameters to give us what we believe to be way more accurate signals with specific profit targets and stop losses built into the signal. So there's no guessing. Most momentum indicators don't do that. They don't give the operator a specific profit target and stop loss, and that's so important for momentum trading. So that's what we're seeing here as a critical point here for all of this. Let's see here. All right. Here is just before we start going into this. Here's what the trender actually looks like. The trender indicator, as you'll see it here in a few minutes, essentially gives us buy and sell signals, and it very importantly along the way gives us these signals based on and it also includes a profit target and stop loss at the same time, right? And that's really important because from a risk management perspective, that's what momentum trading is all about. So a couple more words of this, and then we'll show you this, and then we'll go into the actual charts as well. Again, all this is on MetaStock. I want to be very clear on that. And again, Jeffrey and the team have been very instrumental in helping us build this out. Why is the TST trender indicator so awesome in our view? Well, what it does is the way it's designed, it increases accuracy by detecting true momentum. And true momentum has to be detected in our view by measuring what algorithms are doing, or at least using a major input that they are also using. And that in turn provides, in our experience, much more timely buy and sell signals for thus better entries and exit points, and it tends to adapt much quicker to the market. Now, to give you just a bit of a perspective of kind of how this has worked so far year to date, and I actually want to just quickly sidebar and give you one signal that's happening right here, right now, live this year. And again, this is all totally available on MetaStock. You can see Tesla. This is a live chart of Tesla. We'll see if it works or not, but we have a momentum sell signal that triggered earlier this morning, and we've got a trailing stop in place, which is right there. So we'll watch this and see how it unfolds. In fact, I should probably also, if anyone wants to follow along on this, I'd be more than happy to give you some of these parameters here. If you just give me just 1 second, I'll show this to you guys here in just a second. Give me just one minute here. All right. So what we have here, I have to quickly make an adjustment to the charts because I have a different screen resolution. So here is the parameters. Again, this is a new sell signal we have right now live based on momentum on Tesla. Again, you can open up your meta stock platforms and check it out. You can see the trailing stop, and we've got a profit target right there on the green dotted line. So we'll follow up on this in just a minute, but I want to just wanted to show you something here that's happening in real time, so we can kind of see if it works. Of course, I don't know, but that's the good thing about it. We have our clear entry and sell sales. Okay. All right. So let's just quickly talk a little bit about the momentum moves here in 2025, just to give you some perspective. One thing that we have noticed repeatedly here in 2025 is that momentum and algorithms have been good at sniffing out before a move has come. And so, for example, just that this is I think one that everyone probably remembers or maybe remembers. This was back in April, and what happened is we had this big announcement by Trump at the time that they were going to delay the implementation of tariffs for a while. What we are seeing here is a buy signal that came about 90 minutes before the actual news came. And so what ended up happening is we got a buy signal that triggered, and then the news again came about whatever it was, like 60 or 90 minutes later, whatever. You can probably count the minutes here if you want. And then of course we had one of the biggest days in the S&P 500 in one day, up 8.9%. So that's what happened there, and that's just one little example. But and we actually narrated that in real time to our clients as well in our members area on top of that. But just to give you some other ideas, like for example, this is uranium, and you'll see this more in the next couple of charts even better. But when we get a buy signal from a momentum perspective, we also receive immediately, and again, this is beautifully available on MetaStock. You'll see this as well. We receive a free profit target and a trailing stop. And for momentum trading, that's critically important to have, because if we don't have a free profit target and trailing stop where we can take partial profits, then momentum trading is nowhere near as profitable in our long-term experience as it should be, right? So uranium, for example, the URA ETF, you can see we reached a profit target, got the buy signal, and when we get the buy signal, it also gives us a trailing stop and a free profit target. And then we take part of the position off. There's a specific percentage that we take off, and then we can trail the rest. Here's another stock. This is Cameco. And again, if you guys open up your meta stocks, you'll see how beautifully it's presented there. You can see a buy signal, then the free profit target, and the trailing stop. And the trailing stop then went on for an 80% rally or more at the time when I took this chart. Silver, right? We had a beautiful buy signal with profit targets, and platinum as well, and whatever. These are just different stocks. Or open. In fact, I can show you guys open in a minute. I'm sure some people saw it's gone even higher. In fact, we received a momentum buy signal in the ticker symbol OPEN in early July, and it's actually up, I think, 1,000-something% right now. So I will show you I will show you that here in a minute. But the way we do this is, and I think what's important here is momentum trading, and the way we use our trend or indicator it's essentially designed to solve the two biggest problems that have caused traders to fail. We think that a lot of market participants don't have what's called a repeatable strategy for entry, and because of that, there's no disciplined process for risk management, right? So it's not that hard for someone to find a buy or sell signal. The problem is if there's no risk management embedded, it becomes a problem. So it turns into more of a hope and guess, or as I like to call it, I still have to chuckle at this, a spray and pray approach, which, believe it or not, you know, and you can admit this to yourself or not, but most people use a spray and pray approach, meaning there's no real repeatability. So what our trender indicator does, and so, sorry, the spray and pray, I should say, leads to basically not knowing where to enter. It gives us sort of random emotional decisions, and it leads us to basically become chart chasers, which is a term that I think a lot of people understand, right? When a stock goes higher, you keep buying and buying and buying, and that can work. But if there's no risk management with it, it can ultimately turn into, you know, not such a good decision or situation, and of course can lead to very suboptimal profits, if any at all, and quite frankly, many times quite crappy losses. So it's that constant feeling of insecurity that one has if one does not have an actually embedded risk management process. So I think not knowing when to take even just partial profits is a big part to why a lot of market participants don't do very well. What we do with our trender indicator is it doesn't just give us buy or sell signals, but as I showed you before, it also gives us what's called a free profit target and trailing stops directly on our charts. Again, obviously also very much available on beta stock. Here's what this, for example, looks like on like something like Adobe, right? Just to give you an idea, this is a chart that I took, and I'll show this in more detail. So you can see essentially what happens here. So every time we have an up arrow or a down arrow, so you notice, like, for example, the red arrow is a down arrow, the green arrow is a buy signal. You can see what the sequence is. As soon as we get a signal, it gives us a free profit target and then a trailing stop. The trailing stop is the purple line. And then it gives us a buy signal, free profit target, and a trailing stop, right? Sell signal, free profit target, and a trailing stop, and then same thing there. If we zoom in on those signals a bit closer, I'm going to zoom in on this one here just for illustration purposes, then you can see a bit more specifically what this looks like. So you can see a sell signal, which means we would maybe buy a put or short the stock, you know, if one swings that way. What we do, and what's really important, is that we trade in pairs of two, meaning at this point I would buy 2 puts, or, you know, in pairs of 2 or 4 or 6 or 8, or we put spreads, or do, you know, sell short 2 shares of stock, whatever, right? Because we want to take partial profits, and again, there's a very specific ratio of how much profits we want to take, which we can talk about a bit later if we have time, so that we end up being what's called a free trade as quickly as possible, right? So that's what we do, and that's why the risk management process and the predefined free profit targets and trailing stops are so critical. It optimizes our chances of being successful. Here's the next signal that came on that chart, so this one here. So let's zoom in a bit closer on this one. Again, you can see a buy signal. The minute the buy signal appears, we get a free profit target where we take, again, a certain percentage of the trade off, and then we can keep the rest until the trailing stop hits. There's the next signal after that, sell signal, free profit target, and so on and so forth. And, you know, I can show you this in some other stocks, like, for example, I think we have it here also on some other names. Let me just make sure that was Adobe. Let me just quickly go forward here. We actually added up all these trades, even just to show you a little bit how this tracks. So these are, what, 4 trades or whatever they were. I put them into a spreadsheet. You can see the first trade, in this case, reached $470, $17.50, the profit target, which was a 5% gain locked in. And then ultimately that trade with the trailing stop made 15.5%. The next trade made 5, the one after that made 10. That's with stocks. Obviously with options, you know, one would have had much bigger results. But what's really important is once we reach our free profit target, which again is calculated by the indicator, we have in each of those situations had no, we're not able to lose money anymore, at least not unless there was a significant event, or if we held the trade through earnings. And we don't hold trades, not investments, but trades through earnings, right? So that's important to understand. So the quicker we get to the free profit target, the quicker we are at a point where we can have what we call a free trade. Let me just quickly pause here for a second and take a sip of water. Does this make sense to everybody? Do you guys see how this works? Can you see the logic of having the risk management process? And maybe some of you, maybe a lot of you, have noticed that you've been in trades where you chased, or you had a successful trade, didn't do any risk management, and then sort of you know, that didn't work out for you. Here's another one. This is Citigroup, and we'll go into some live charts here in just a few minutes, so you can kind of see how this is all works. But here's Citigroup, and again, you can see the signals: buy signal, free profit target; sell signal, free profit target; buy signal, free profit target, and trailing stop, and so on and so forth. So if I zoom into these signals a bit more closely, you can see again what they look like: sell signal, free profit target, trailing stop, right? Buy signal, free profit target, trailing stop. The trailing stop turns from the red dot into a purple line, okay? And again, you can see the signals, what happened, you know, almost 5.7% once we reach a free profit target. Then the stock was up, ultimately 7.3% was the trade before it got stopped out. Again, this is just with the stock, right? The option, of course, would have made much more, and that was the short signal. And the latest signal, the buy signal, is still going on actually, and the stock is up, I think 40% or so as well. So that's still ongoing. Just wanted to point that out for those of you guys that are asking. One question that I see coming up is, does this work in the S&P 500? Yeah. So in fact, if you guys would like me to show you this intraday, we'll come back to this on the swing trading side, but just so you guys can see this intraday, like right here, right now, here is the buy signal that we received on the SPY ETF. Okay, so this is the SPY ETF. So this is for Bernard. We received a buy signal. This is a live chart. Okay, and you can see how the trailing stop is working. Can you see that trailing stop? Right, that's your trailing stop right there. So we're trailing this right now. So the worst I could do if I took that signal is make, gosh, it hasn't been a big move since then because the market just opened. It's Monday morning, right? But this is what it looks like intraday on that. And we should probably look at, let's go back to Tesla. Our trading setup in Tesla, it's still actually kind of just teetering here, but here's what it looks like. We'll check back into this, but you can see we received the sell signal, and so far we're still going here. The free profit target is around 406.40 right now on an intraday basis. Okay, all right. So let's continue on this, and I'm sure there's some tickers you guys would want to look at. So let's go to some tickers that I saw some people mentioning before, or let me have a quick look here. There you go. Okay, so I'm going to move this over here, and let's have a look at some of the charts that have been requested. Tesla on the daily chart. Okay, so let's just focus the switch here. Switch the focus, I guess is the better way of putting it, to Tesla. Okay, so this is now on the daily time frames. If you're wondering how does this work with something like Tesla on a daily chart, okay, so we received a momentum buy signal on Tesla on that day right there, which was the 7th or 8th of August. and you can see that we then reached the free profit target, and the trade is still going on, right? So one of the things that I suggest people to do when they get started is just to go from signal to signal. So Tesla so far now since then is up, since that signal is now up now 26%, right? You can look at something like an extreme example would be something like Open, right? So Open Door Technology, which just, I don't think a lot of people realize what this is, a house flipping company. Like they flip homes, essentially what they do. So just as a risk disclaimer. So here you can see what happened, and let me quickly adjust this. Yeah, here, so I have a different resolution on my other screen. So you can see the buy signal, it reached the free profit target very quickly in this case, because this was a huge mover. You can see it reached a free profit target like the next day. But if I'm using a trailing stop right now, my trailing stop is here, right? So at like 560, I can use a tighter trailing stop, which would be the blue line. But this stock, since the buy signal, and I'm just showing this because I know a lot of people are aware of this stock is up 1,200% or something like that. You know, I think this is a critical kind of, again, these are momentum moves that we want to look for. What about the S&P 500? Sure. What about the S&P 500? So let's switch focus to just the S&P 500. So let me quickly show you that. So let's look at, for example, SPY or QQQ. Does anyone trade those things on the daily charts? Here is here's what's going on in S&P and NASDAQ, right? So this is just these are daily charts. Let's just go back to maybe April or so in the interest of time. So you can see we had a sell signal, a free profit target where we take part of the position off, and a trailing stop, right? Then we had a buy signal, a free profit target, and a trailing stop. Okay, so that's how this works. So if all I did is use momentum, and again, this is using our TSD Trender momentum indicator, then I would have had, you know, whatever this was, 7-8% move here, and now we've got a really big move to the upside. So just to give you some percentage numbers around this, so that first trade probably made, if all I did is go from signal to signal, right? And we get this, we can get this sent to us in real time, depending on your platform. It'll send you an email or a text message or whatever, right? And in fact, Metastock is a beautiful scanner as well for this that you can use, that Jeffrey built. And so if all I did is go from signal to signal in the S&P, I would have had one trade that made probably about 7%. This is the S&P, those are big moves, right? And we have a momentum buy signal that would have started in, I think it was late April or something. And so far the S&P, it's still trailing, and it's up now 19+%. Okay, so that's how that works. Same thing for the NASDAQ 100, right? I mean, if you're trading the QQQs, you can see the signals there. Again, sell signal, free profit target, buy signal, free profit target, and then again the trailing stops along the way. Does that make sense to everybody? If you guys have questions, again, please do let us know. Some other stocks that I know that people like to follow. I'm trying, and again, if you guys have specific tickers you want to put in there, please just chime in. Like I think AMD is a stock that people like to watch, right? So here's AMD. Let's just bring it up here on the chart. So here's AMD. This is Advanced Micro Devices, and again, you can see the buy signal. You can see the free profit target and the trailing stop. Now, again, what's unique about our approach is that we have a very clear risk management process. So when we reach the free profit target, we have a certain percentage of the trade that we want to take off, because mathematically that then gives us, in our experience, the best risk-adjusted returns, but also the best probability to be more consistently profitable. Does that make sense? Can you look at TQQQ? Yeah, here's TQQQ for Bernard. So if I would have used this on TQQQ, that first trade, again, reached the free profit target very quickly. Then if I would have just taken it from signal to signal, if that's all I did, I made almost 30% on that first one. And buy signal here, and I would now be up about 77, 78%. Do you see that, Bernard? I'm just taking the question as you're asking. I'm not trying to not trying to show you something that you're not asking, right? So hopefully you can see that. So, again, what's important is the risk management process and the predefined profit targets and stop losses. There's stocks like, I don't know, some people like to look at something like CRWD, right? So CrowdStrike. I think that's a stock that a lot of people have been focusing on this year. So in fact, we're just literally right now getting a new momentum buy signal on the daily chart. So you can see sell signal, and if all I do is go from signal to signal, I would have made about 5% on that one because it reached a free profit target. Then that second one made 22%. Then this one made 5%. Now we're getting a new buy signal, right? And by the way, on CrowdStrike, in case you care, you can see it right now. The free profit target on CrowdStrike is 475. The trailing stop is 428 right now. This is live. I'm not making this up. Tesla, quick Tesla update on that trade. You can see we're still trailing right now. Again, the nice thing is that we have a trailing stop. So even if this trade were to get stopped out right now, right, you can see that we entered the trade around here. The signal became valid right there at the beginning of that next bar after the signal. You can see the trailing stop is now here. So it's going to be very difficult for me to lose money, or certainly not lose. It's very difficult to lose a lot of money in this because the trailing stop is now much tighter because of the way that the stock has moved down. Make sense? What about CHWY? Alrighty. Okay, so CHWY, this is Chewy, right? Oh, that's the company, the pet foods or something. Yeah, so let's have a look at it here. You can see the past few signals. Again, buy signal, free profit target, trailing stop. If all I did is go from signal to signal, that should have been a nicely profitable trade there. So let me, what happened to my stuff here on the right? Give me 1 second. Okay. I'm gonna go quickly to I have to reset it because I have a different screen resolution on the screen, so apologies for that. Here. All right, so here's what this looks like on Chewy. So you guys can see this. We had a buy signal. Let's zoom in here closely. Buy to sell signal, that's 5%. Sell signal to buy signal, maybe 2%. And 18%, these are gains. Sell signal to buy signal, about 4%. And now we have a new sell signal. That's how, that's as a beginner, that's how you want to use this. Now, for those people that like this kind of stuff, let me just quickly show you how you can gain access to it. And again, this is all, of course, available on Metastock as well. So what you're looking at here is something called the TST Trender. And again, I have to thank Jeffrey and the team for making this available on Metastock and making it, super user-friendly. They even have a scanner for it. It is available on other platforms as well, like TradingView and NinjaTrader and Thinkorswim and stuff like that. But what we do is with the Trender is we're able to give you a full 12-month access to this so that you can really learn how to use it. We're running an 80% discount here for the event here that Jeff is has so graciously invited us to this time around. And if you want to receive 80% off, you can grab the link there that will show you the next screen. It's $397. That's it for the full year. You also get some trade alerts that we send out as well. And of course, we do member sessions at least once a month. So we do live trades so you can see exactly how it works and how to use it. As a beginner, the best thing to do is to just literally go from signal to signal. I'll reiterate that in a minute. Here is the link. It's just www.metastock.com/trender. And you can even use PayPal and the different credit cards and so forth. If you have a phone number you need to call, if you have questions, you can do that too. The phone number, I believe Jeffrey just put it into the chat box. It's 800-882-3040 is how you can get a hold of that. We have a couple of bonuses for you as well. One bonus that has been very, very well received by people is access to what's called our 3x triple play strategy. So these are 3 additional strategies that you get access to. One of them is a longer term strategy, one of them is a swing trader strategy, one of them is a short term strategy. It's all included with checklists and specific parameters as well. And of course, we have our members in the members sessions. The next member session is September 22nd. In those member sessions, we teach you exactly how to use the indicator, what kind of stocks we like to focus on, or ETFs. We also tell you exactly how to use options with this. So, for example, we'll go back into the charts here in a second, but we teach you exactly how to use options using this strategy, right? That's an important part of what we do in the member sections. A lot of people like to use options, and so we have a very specific way that we want to use options. Super simple, by the way, but it's very effective. And so we'll teach you how to use that. So just if you're joining here today, make sure you circle September 22nd as your as the date for the next member session. You're going to receive an email, of course, and an onboarding phone call. So that's all taken care of. Yeah, that's what's in store for those of you guys joining us today. I do want to quickly just address a couple more things here that people might have questions on. Jeffrey, are there any questions that you see that I could address on your end before I go into some other stuff that I see here?
Tons on YouTube. So
okay.
Jeffrey wants to know, a nice name, Jeffrey, by the way. Does the trailing stop when you have the trailing stop? Could you continue if it came up above the upside, or would you wait for a new buy signal?
Yes, you can. So okay. Let me show you. That's a really, really good point. Let me quickly try to give you a chart here. So we'll look at, I don't know, let's look at the SPY. Just that's a simple one, right? So let me show you how this works. So when we start with this, when you get started with the trender, so this is the S&P 500. I think this is an easy way to kind of show it, right? This is the S&P 500. And what you can see here is we have a buy signal or received a buy signal, right? Now, what's the most important part about it is to take partial profits at the free profit target. Mathematically, this is key, right? So not only is it important how much profit we take, but where the profit target is, and they are predetermined by our algorithm. And again, we talk about this in the member sessions. If I understand the question correctly, is if the stock were to go below the trailing stop and then it goes back up, would you re-enter? I think that's the question. The answer is yes. However, that is sort of, I'm going to say that is the second step you want to learn. First, let's learn going from signal to signal. So all we want to do is go from sell here, buy here, but take the partial profits. Once you've done that for a few months, then yes, do exactly as the question from YouTube suggested. But that is, and we'll guide you through this in our member sections, right? So that is the second step you want to do. But first, just go from signal to signal. Most importantly is you take partial profits along the way.
Okay, cool. Can you hear me still?
I can hear you.
Okay, wasn't sure if I turned off my thing. A question on it, can you use this with options?
Yes, we used options a lot with this, and of course everyone's got a bit of a different sort of way that they want to use options. We teach people how to use options with this because there's my camera. Because a lot of people want to use options, and so we teach that in the member sessions, right? Because what's important here is that this is a directional indicator, meaning it's a directional trade. We're not making a non-directional trade. So the point, momentum by definition means something either goes up or down, right? So we say direction. So we want to use what's called a directional strategy with options, and we teach you exactly how we do that in member sessions.
Bernard wants to know, does this work better on intraday or daily time frame? Do you have a preferred time frame?
Totally indifferent. It depends whether you're a day trader or a swing trader. Momentum is everywhere, right? So that really depends what you prefer. Do you prefer to do day trading or swing trading? I will tell you this, and I day trade as well, you know, I'm more as a macro guy, but day trading will burn people out over time. Take this from someone who does this for 26 years now. I know the young guys won't tell you that because they don't know, but day trading ultimately will burn you out. So what's a good thing to do is to have a strategy that you can use intraday if there's an opportunity, but don't get married to just intraday. It's also just a very nervous way of living. That's just my view.
Bill wants to know, are those lines derivatives of moving averages?
They are. So there, these two lines are helping us get the signal. What these two lines are what's part of the algorithm that we know are what big algorithms use as a signaling point, and they're also helping us give us risk management, so as trailing stops as well. So it's two things. They have two purposes.
Cool. Let's see. Jacob wants to know, does this work on gold?
Yes, it does. Of course, I don't know his time frame, but yes, it does. So with gold, for example, we just received a buy signal a few days ago or a few weeks ago at this point. This is the daily chart. So I don't know, again, I don't know what your time frame is. This was the buy signal. You can see the free profit target. Now we're trailing along the trailing stop.
All right. Those are the end of the YouTube questions. Greg has one that I think I will show a little bit and talk a little bit too, because he's like, there is a day in a swing trader setup on Metastock. Can you explain how to use the custom setup? Brad, thank you for using this. I actually go into a lot of detail in the training that's included. It's if you bought this, it'll be up on your downloads page. But there is a day setup and the swing trader setup. The custom one allows you to go in with the system tester and test different values and customize it to what works best on the instrument that you want. So from a 1,000-foot view, that's how you'd actually kind of use it. You go in, perform a system test. If you want to go in and adjust the values for the parameters of the indicators based on that, you can. And that's what the custom setup is for. And I do go into a lot of detail in the training that we did right after this came out. So
I can also add to that, Jeffrey, if you don't mind. Basically, what the modes, the day trading and swing trading modes, and the custom settings, that's a good part of what we talk about in the training sessions, right? So if you can make it live, I would highly suggest you come live on the 22nd. Obviously, we're going to record it. We always record these member sessions, but it's critically important to understand, you know, whether you want to use this for day trading or swing trading. And so we go through that in good detail. Okay. So that's what's happening on the 22nd.
Lei Heng Sam, and I hope I said that right, wants to know if it'll work on Forex.
You can use it in Forex. Look, I think what's important to understand with Forex is an extremely nervous market, right? So from a momentum perspective, if you're looking for and again, I've traded Forex my whole life as well. Momentum trading is less nervous in equities and ETFs, and to some extent commodities. Forex, does it work? Yes, it works in Forex. It's just the question is, do you want to expose yourself to Forex, which is a more nervous market than other kind of markets? But I mean, I can give you an idea so you kind of see what this looks like. So let's say you wanted to trade this on Forex, and I have no clue what your time horizon is, right? But let's say, for example, your time horizon were, you know, intraday. So let me just quickly bring up a chart on like a major pair so you can kind of see what it looks like. Give me just 1 second. I have to flip to a different thing here. Okay. So here, for example, is what you have today. on like euro dollar. Let me just bring this over. Sorry, Jeffrey, I'm just trying to show people the chart so they can see it best. So this is, for example, today, euro dollar, right? This is a 5-minute chart. You can see the sell signal, buy signal momentum, and so on and so forth. I don't teach Forex, no. I do not teach Forex, no.
Can you believe it's been an hour already?
I know, it's crazy, right? We got to wrap it up.
Yeah. I think what I'm going to do is actually kind of show a little bit of the things that make this unique to Metastock. We've had a lot of questions about what platforms you support or this supports. Do you want to list those off really quick?
Yeah, I quickly show them. So, I mean, obviously Metastock, right? That's, you know, and again, I said it several times, but Jeffrey's been very instrumental in helping us develop this. That's why it's so awesome in Metastock. Really, you can use it in other things like TradingView and NinjaTrader and Thinkorswim as well. So
okay, great job, Serge. I'm gonna kick you out so that you don't accidentally shut down the room.
Yeah, that wouldn't be good.
Thank you for spending some time with us today.
I appreciate it, guys. Have a great week.
All right,
thanks, Jeffrey.
thank you very much.
Bye.
Okay, let me go ahead and make me the presenter real quick. I do want to show this, and I'm gonna spend just a real quick. Bill, you wanted to see a chart of the 5-minute S&P, so I decided to go ahead and do that. There was a question in there about how can you kind of understand the signals, and so this is the signal. This is the day trading mode signal. Again, there's the day trading, there's the custom, and then there's the swing trading. This is the day trading signal. It did give a signal this morning on SPY. Been kind of moving up a little bit. I've put this arrow right here, okay, just so you can kind of see what the actual commentary say. Here it's saying the TST trender is long. Here's your initial profit target, which is also drawn up here. Here's your trailing stop, and the TST trender is currently giving an exit signal for the short position. So kind of gives you an idea of exactly what you should do. The other thing I love about Metastock, and this is something that's very, very unique to Metastock, is as a trader, you have so many thousands of different, options that are available. And stocks, I mean, is more what I meant to say, although options is pretty accurate as well. One of the things that I love about Metastock is the ability for it to go in and find stocks that fit a parameter that kind of match up. And so if you're using TST Trender, I just ran this on the swing trader mode. I ran it while Serge was talking, and I ran it on the S&P 500, the NASDAQ 100, and the Dow 30. So just a quick list so I could get some results to show you guys. You can run it on Forex, you can run it on gold, you can run it on pretty much anything that you want to. If you're in India, you want to look at Indian stocks. India is a great market for us. You can do this on anything you want to. But out of those 501 stocks, I had to look at all of them. If I'm just looking for stocks that have an opportunity to go long today, these ones that have a 1, KLA 10 core, Micron, cores, Reality Income, Arch, get the idea. All of those are the ones that are going to have long signals. If I'm looking for stocks that are short, you've got Newcourt, you've got kind of a list down here. So this will go through it for you. It'll allow you to kind of see what's out there, and it'll save you a lot of time, which for me is important. Like I wish I had more time to look at the market, but that's just kind of the way that goes when you're a busy professional and you work. So Serge did a really good job of talking about this. I wanted to show scanning. I wanted to show the commentary because those are particularly unique to Metastock. So we did also sit down. And I'm going to kind of just skip a little bit ahead. We did sit down and do a 2-part session. It's available as soon as you actually purchase the product. In it, Serge discusses the setups, how to use them. I do a second part where I talk about tips and tricks using Metastock and the TST Trender on Metastock. And so I'd recommend you watch that, especially if you're interested in kind of the custom mode and testing and kind of tweaking out the variables the way you like them. So want to reiterate everything that Serge is including with this. You get the 12 months access to his 2% club, you get the add-on, you get the scanner, you get the commentary, all that stuff's included. We even back it with a 30-day money-back guarantee. So if you try it out, you don't like it, you get a refund, no questions asked. And we want that to be an easy process for you. When you're trading, I wish every trade I took came with a money-back guarantee, but if this is helpful for you, we know you're going to keep it. If it helps you find better trades, we know that you're going to keep it. It's going to And if it does that, it's going to pay for itself. And so we stand behind our products. Take a look at it. If it's helpful for you, you're going to keep it. And it's $2.97. It's cheap. Okay. We will throw in, if you haven't tried out Metastock yet, we'll throw in, you'll have access to all the other platforms that Serge was talking about. Those will be provided as part of it. We'll also give you a free trial to Metastock, so you can try it out. Metastock, if you haven't heard of it, has been rated the best software program in its price category. It's been rated that way for 32 years in a row. And so there you go, $397, metastock.com/conf promo. If you have other questions, if you want to get it set up with a trial, all that kind of stuff, 800-882-3040 or metastock.com/saleschat. So with that being said, I need to move on. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. We appreciate all the work that they've done in putting together or in helping us do these shows. They've been making magazines since 1982. They've got 17,000 articles. And if you go to www.traders.com, you can find out more about them. So, and of course, we are Metastock. We're going to be talking more about Metastock. I'm going to get us back on time. Now, Greg is our next guest. Greg, I've known for a number of years. What I really like about Greg is the pattern-based setups that he's going to talk about today. He does a really, really good job. And what's kind of interesting is we did a lot of business with Greg many, many years ago. And one of the things that I think says a lot about the kind of the methods that he uses is they really haven't changed. You know, the plays that he has, the setups that he uses really haven't changed over the years. So Greg's going to do a great job. We love having him on here. Very, very well spoken, easy to understand, all the things I like about a good presenter. So Greg, let's get you started.
Fantastic. Hey,
all
Jeff.
right, I can hear you.
Thank you. Yeah, cool. I can attest to Metastock being around for 32 years because I started using it like 30 years ago. So,
I think it's actually like 50 years now for Metastock, but 32 years has been rated #1, so that's cool.
Yeah, I was probably, when you said 32, I think how long I've been doing this. Is my first platforms. I started probably, 1990.
Mm-hmm.
So, yeah.
Cool.
I'm looking for the little screen that to show. Oh, there it is. Okay. Show.
I am seeing your snap.
Yeah, I'm gonna do it.
Okay. While you're doing that, Micah says, "Will I be able to watch the recording?" And you will be able to. If you go to youtube.com/metastock, you can go there anytime. If you're gonna go to a webinar and you have some audio issues or something like that, you can always try youtube.com/metastock. All of the recordings will be available there, Micah. So there you go. Greg, I can see your screen. I can hear you.
Okay, so let's do it.
All right, I'll get out of the way. It's your turn. Go.
All right, thanks, Jeff. So I'm going to be focused on swing trading today. And one of the things, so I saw some of the questions that were being asked, intraday swing trading, it's all applicable. And Jeff saying that what I've taught and used all these years doesn't change because the foundational method is not only universal to all instruments and all time frames, it's based on just information, simple information to understand. So what's difficult about trading, which everybody say, oh, it's, difficult. Well, it's between what's in your head. And if you're looking at too much information, it becomes overwhelming. So let's put together a plan for swing trading. And, I'm happy to take your questions. A little bit about myself. So, we already gave you a little bit of insight as to how long I've been doing this. As you could see, I started knowing absolutely nothing in the late 80s. Was trial and error. And eventually, it was like 1994, I met another individual through, some of you might be familiar, Alexander Elder wrote the book Trading for a Living. I used to be a participant in his trading group. It was mostly about conversations and talking about trading and sharing ideas, and there were market makers there and specialists and hedge fund managers, and I was enamored by the people that were there. I also learned that these people at the time know next to nothing about technical analysis. It's come a long way, of course, because of the education. And I've educated a lot of them over the years. But I mean, back in the time I had a fax letter, we sent out faxes. This was before the internet, hotline services. It was the first online chat room. And they did seminars through hotels. And Master Trader actually used to be a brokerage firm. It was one of the first brokerage firms that was available to retail traders. So there was the company at the time was called Pristine. I'm going to show you an old slide from many, many years ago. Anyway, I sold all that old stuff, recordings and PowerPoint presentations to another company in 2015. They essentially gave me what they call an offer you can't refuse. I was like, here you go. And after a few years, started off again and used as master trader. I used to do a lot of trading challenges. As I said, I taught hedge fund managers, specialists, prop traders, retailers, so many in the industry. A lot of them today either work for some educational company or they have their own. And it's really a testament to the method is timeless, universal, it's lasted all these years. So you can see some of the companies that on my website, if you care to go and look there, there's a list of some of them. There are many more, but you can go see about us and some of those individuals. So that's me in the middle, right? This was over 25 years ago, 1999, the first Traders Expo. You can see it was about teaching traders about training, trading, and technology. We called it T3, and that was, the pristine day trader. Some of you might be familiar with that from many years ago. Master Trader was the brokerage firm, and we used to go to these trader expos, and they're still around today, but they're primarily brokerage firms and software and such. So I haven't been there in many years, but we used to go there with these giant booths and, speak to a lot of individuals. So I've been around, as you can see, for a very, very long time, and the method is timeless. But how do I come to trading? You build a belief system about trading and your method. And one of the things that was kind of an aha moment for me was that technical analysis, what we do is we look at pictures, and these pictures display for us other people's beliefs and what their expectations are that they create with money as they place trades. However you're coming to the markets, whether it's through fundamentals, technicals, whatever the time frame is that you're utilizing, or indicators, it creates a belief system. Once you have a belief that something's going to go up or down or sideways, you're going to use an instrument, whether it's options or trading the underlying or an ETF, but it's going to create a chart. It creates price patterns. And those patterns communicate to us what others have done. What is their belief? What is their expectations? And that realization, being applied to my own trading. Here's a question I would say to you. Have any of you ever sold the bottom of a move? Meaning you bought something, you thought it was a buy, it went against you. Maybe you didn't even know about stops or money management, and you held it and you held it and you held it, and eventually you sold it. You just couldn't take it anymore. And it started going up. Have any of you ever experienced that? You can tell us. I have. No one wants to admit it, but there's a picture for that. And so if you keep a trading journal, right, you find that these pictures repeat. And if you can define the pictures along with other concepts, you can create a trading plan. So these candles tell us, as I said, about others' expectations on an ongoing basis. And I coined the term trading candle language, right? It gives us these thoughts on a continuous basis. Now, one candle can mean nothing, and you have to put in the context of other information. And what is that other information, which I'm going to get to? Well, part of that information after reviewing hundreds of trades, you come to this technical analysis idea about looking at these charts and pictures and such, and the pictures being repeatable, right? Pattern recognition and being repeatable. Well, after looking at hundreds of trades, and I said, why did this trade not pay me like that trade? Why did this one stop me out? Why didn't this one work? And that's part of the journey we're all on, to find out what has consistency in what we do. Not that it's going to ensure a winning trade, because we never know. But if we can build a plan that provides us with greater probabilities, which gives us consistency in what we do, it builds confidence in our method. And so looking at that, it led to what you're seeing on this slide. Okay, I'm sorry, it wasn't moving up with what the other ones was. So this was about what's happening in the broader markets, right? So the broader markets often move the underlying stocks that are made up in there. However, there's this other concept called intermarket analysis. How does oil have an effect on the economy and on oil stocks? And, oil goes up, transportation stocks could be under pressure, or oil goes down, less inflation. That's part of the theme right now, inflation and interest rates, or interest rates going up. Interest rates are going down, which would suggest less inflation or a slowing economy. Yes, gold is going up. So sometimes this becomes confusing where things are out of alignment, but that happens with internal market analysis. They can get out of alignment, get back into alignment, but over a very long period of time, it works. And then there's market internals. How do individuals feel about the market? Right? It's called sentiment, and we can measure that. What about breadth? Right? There's been a lot of talk over the last few years about the Magnificent Seven or large cap stocks moving the market, and anemic breadth. It happens. And so using that breadth, is there a broad market participation? Is there a limited participation? I have to go and look and see where the majority of that participation is. But I call this a three-legged stool, because if the three of them are together, they hold up, right? The broader markets, they hold up, give greater probability to your trading plan, and I call it techno fundamentals. And this is, as a swing trader, this is really important, because you may say, well, I'm going to trade XYZ because it's got this pattern. But meanwhile, the techno fundamentals are saying, you know what? The market's environments are changing here, and these longs are going to become less likely to continue. Or you're in a bear market. How do I determine that the bear market is near complete? This is the answer. And it's worked for decades. And this is where I share with subscribers through newsletters and through education, because most of us, our goal is to become self-sufficient and less reliant on others. So let's define what is swing trading, which you probably already know. We're looking for something to hold on to for 2 to 10 days. Right? I'm not an investor. I'm not a day trader. I'm looking at weekly and daily charts, and I'm looking for setups. I'm looking for those pictures that communicate to me what's going to happen in the future in a relatively short period of time, and how am I going to take advantage of that. If you're a day trader, it's just changing time frames. The analysis is the same, and always the same. But you're changing time frames and different perspective on how I'm going to take advantage of that. Right? So swing trading, why do you want to do it? Well, some of you might have found out that day trading is stressful. It requires the ability to process information a lot quicker. And I'm not suggesting that you shouldn't do it. If you love it, I do it, but I do both. I don't really need to choose one or the other. but I put it in perspective, and you get a lot more information as a day trader as to going to trade this, going to trade that. You have to really be disciplined to limit your choices as to what you're going to do. Otherwise, you're going to be overwhelmed. So swing trading is a great way to get started, especially. And I use the analogy, look, if you didn't know how to drive a race car or a car at all, right? You just got your driver's license, you're going to drive a car, your kids got a driver's license and they're starting to drive. Are you going to put them in a Ferrari and tell them to, press that accelerator to the floor? Or would you rather put them in something a lot slower that you're not going to crash? I think the slower ability. Give me 1 second, please. Sorry about that noise. So take it slow if you're starting out. Take it slow and give yourself a chance. And I'll give you more to go on that. So swing trading, flexibility, you can find tons of opportunities, believe me. Day trading, yeah, you can find opportunities every day, not all day. Some do, but I don't. But we can find swing trading opportunities all the time, and income potential, what we're after. As I said, I'm doing this for a long time, right? No fluff. You really don't need indicators. I use moving averages and some simple things. Why? To speed up the analysis. I know what I'm looking for, and software is a fantastic tool to find what you're looking for, and that's why we use it. So let's look at some examples and let's break it down. So we're trend traders, and as a swing trader, I'm a trend trader. Now, you can use swing trading charts to trade options like credit spreads, right? That's something that we do. But if I'm trading the underlying, I'm trading directionally, right? And I want to find opportunities, right, for directional moves. I need to define where the buyers are and where the sellers are. You may say, well, how are you going to do that? Well, I'm going to look at the chart. We're also looking to capture the middle of the move. And I'm looking to get in it at a very opportune time. And I'm looking to get out before something turns down significantly. Flexibility. I don't have to watch the screen all day. And some of you might do swing trades, but you know what? I get a swing trade. I put in alerts where I want them, and I don't look. I'm doing my day trades during the day, and I'm looking for new swing trades, but I got an alert in. If the alert goes off, I'm going to take a look. Right? Lots of opportunities, longer term investing. I can profit in up, down, or sideways markets. Now, sideways, you say, well, that's directionless, Greg. Well, wide sideways markets, I have to define those sideways markets. Everything is about defining what it is you're going to trade and how you're going to trade it. It's called a trading plan. What are the challenges? Well, sometimes things gap up, right? If you're shorter, they gap down, and they can gap down significantly. Earnings reports. You need to know when those earnings reports are coming out, and it's readily available, right? So you know when there are Fed announcement, you're going to trade on Tuesday at 2:00. Well, probably be foolish to be doing that, especially as a day trader because of the volatility, but you need to be aware of that news. So with any kind of trading, right, looking at a higher time frame to create a bias, for me, it's just common sense. So that would be a weekly chart. It could be even a monthly chart, and looking at what's the direction. I'm not necessarily totally focused on candlestick patterns on those higher time frame. I look at them, but I'm mostly interested, is the trend going up? Is it going down, or is it directionless? That higher time frame. Now the micro time frame as a swing trader, that's my daily time frame. That's where I'm expanding the data. I'm getting more detail. And so if I look at a monthly time frame, I compress the data, and I may not see what I would call a bottoming tail bar or a bullish 180 reversal. They're different names for different patterns, right? But all of these patterns, which I'm going to show you in a second, they depending on how you compress the data, is what you're going to see or possibly not see if it's compressed too much. So I don't want to see a 5-minute chart if I'm a swing trader. That will be your nemesis. And if you want to tell the truth, like we all do, if you look at a 5-minute chart as a swing trader and you gave up your position because of a 5-minute chart, and 2 days later or the next day you said, why did I do that? Right? Because it took off. Right? That smaller time frame is not going to be to your advantage as a swing trader. That's where the noise is. So got to stick to your plan and what your focus is. So as it's trending up, right, the light blue line, it's going up. That's all I need to know. Right? The odds are on my side. The dark blue line, right, is where I've expanded the data, and it goes up and it starts to pull back. Well, you might think, well, why is it pulling back? Because the bigger time frame's going up. Well, people in smaller time frames are taking profits. And as it pulls back from a high, there's this saying that the markets climb a wall of worry. Right? We've all heard that. Well, climbing the wall of worry means it goes up, and then when it pulls back, sometimes it pulls back sharply, but then buyers show up again. And that's your opportunity. That's your pullback setup. And there are different names for that. So as it pulls back, right, I'm thinking, okay, show me a picture that the turn within that pullback is beginning to happen in alignment with my big picture bias. That's my entry point. And I'm going to assume that it's going to go up and it's going to take out the prior high. Why would I assume that? Because I've got multiple time frames aligned to the upside. And if I'm short and they're both going down and I get in, if you flip this upside down, it's the same thing. You just flip it upside down and it retraces up into resistance and you get a pattern and you short it, it assumes it's going to continue to go down until some pattern forms that communicates for longs that it's topping out, or if you're going down, some bottoming pattern, which they both all have distinct pictures of how that occurs. Candlesticks. Let's simplify this. There's so much hype around these candles. And the way I look at them is there's big candles, there's little candles. Sometimes the little candles have the same shape as the big candles. I mean, you can have small bottoming tail bars, and you can have big bottoming tail bars and topping tail bars, or just bars that open and close at the opposite ends or near big ones. But the big ones are the ones that display commitment and emotion. And you might say, well, volume. Well, volume can be an additive. It can be helpful. But primarily, that big candle is going to mean something big happened, and institutions are part of it, right? Unless you're trading, some little micro or what do they call them? Those bulletin board stocks or any of that. So, I'm not saying it's not, but institutions aren't there. So I'm looking for these big wide range bars. And if they're big topping tail bars, right, they went up and came back down again, right? We look at that as sellers took control. Now, when it was a big green bar, someone was buying the top and it got driven all the way back down. Now it says, where is the location where it happened? Right? Did you get a topping tail bar at resistance in a downtrend? Now we're starting to put it together. Or did you get a big bottoming tail bar where buyers took control at an area of support in an uptrend? So we're building the probability that we are going to get in at an appropriate time where the odds are in our favor and the big picture trend is going to continue. Right? That's what trading is, putting together a trading plan that you have confidence in that puts the odds in your favor. But narrow range bars have a place because wide bars can eventually evolve into small bars. And the contraction of those ranges can lead to very powerful patterns. Right? So let's continue. So hopefully you got the idea of candlesticks down. We are simplifying this where our focus is, what is the bar? Is it a big green bar? Is it a big red bar? Is it a big topping tail or bottoming tail bar? Or are they little narrow range bars? What preceded the big bar? Right? Or what came after the big bar? So we have to build on this, or what I call bar by bar analysis, and put this in the context of the big picture, because by themselves, individual candles are meaningless. Right? We have to put them together into groups. Now, let's talk about trends. There's a lot of different ways to define support and resistance and trends, and there's tons of add-ons to different platforms. I have one with Metastock. It works great. But what do we want from this add-on? We want it to show me what is part of my trading plan. Right? So let's talk a little bit, not long, about the psychology of trading. In the quietness of your analysis, and you put together your trading plan, wonderful. You've looked at it, you've kind of back tested it, you've got confidence in it. But the real moment comes to press the button. Is this really a trade? Software can put together your thought process to tell you this is what you said is your trade. All right, so let's continue to build on that. So for me, it's like, what is support? What is resistance? How is it created? And what is it? How does it trend? Well, I call it a pivot. What's a pivot? A pivot starts with individual bars. And I define that there has to be 3 bars to the left and right of both sides of that pivot. Okay, it's created some support. Now I have a pivot. What am I going to do with that? Nothing yet. I can't do anything with it because what am I going to, if that was the chart I told you to look at, you say, well, okay, what am I going to do with that, Greg? Well, what you're going to say is that pivot has created an area of support. And I believe that if it gets tested, there are going to be buyers there. This helps build your trading plan. So as prices pull back to a prior pivot, buyers are going to be there. I guarantee you they're going to be there. That's the mechanics of how trading works. People see a prior reference point, they look to the left, and they see a reference point, and they're going to bid there. They're going to buy. Now, the big question is how many? I don't know. Will they create enough demand to turn it back up? I don't know. But what I do know, if the trend is up in multiple time frames, the odds are that they're going to show, enough of them are going to show up to turn it back higher again. And that's the essence of multiple time frames. Because the more time frames that are aligned together, that means that you have more individuals with the same bias. So if the monthly trend is up and the weekly trend is up and the daily trend is up, everybody's on the same page. Now, that doesn't mean intraday traders aren't shorting that stock at the appropriate time intraday. But from a swing trading perspective, pretty much everybody's in alignment. Somebody might think, oh, it went up too far, it's extended. You might think it's overbought or oversold based on some oscillator. But look, if it pulls back to a prior pivot low, there's going to be buyers there. And if it pulls back to the prior pivot high in an uptrend, there's going to be buyers there. Simplicity, prior high, what was resistance becomes support. Keep it simple, stupid. So at these pivots, there are going to be buyers, there's going to be sellers. So we're building what I call a thought process. This is what we do. Rather than having indicators tell me what to think, which in my mind, opinion is foolish, we have to build that thought process on our own with prices. Then if we want to create some type of software that does some of that thinking, right, that we want it to do, it can be extremely helpful, especially for finding opportunities. Now, I like to use a few moving averages, and I'll call them smart moving averages. What makes them so smart? What makes them so smart is because they align what's happening in different time frames when I'm looking at one time frame. So I can choose moving averages that are the same moving average in another time frame. And this is an example of what I'm talking about. So you go ahead and look at the trend, look at the location of a moving average in one time and another. Right? So if you have a daily time frame and you've got a 20 MA and you change it to a weekly time frame, it's going to be in a different spot. So you're saying, well, it's in a different spot. Why is that? Well, because you change time frames. It's calculating different data. But that 20 MA on the daily time frame is the same as the 20 MA on the weekly time frame, 100 MA on the weekly time frame. So you get the idea. Is we're looking to calculate these moving averages that tell me what's happening in one time frame when I'm looking at another. So the 60 MA on the 20 is the same as a 240 on the 5-minute chart. That's the calculations. So this is what we would do if we were intraday trading. I said the weekly 10 MA is the same as the 50 on the daily time frame. So when I put that 50 MA on the daily chart and it's pointing up, I know the 10 MA is pointing up on the weekly. I don't even have to look at the weekly time frame. It tells me that the week is pointing up. Fantastic. This is for intraday trading. This is what you would do if it were intraday trading. And for intraday trading, I would use the 20, 60, and 200. Right? So let's look at a chart like this. So I want to be a trend trader. I got to define the trend. By doing that, is it making higher pivot highs and higher pivot lows? That's what those little dots are right there. It's just a bar with 3 higher lows to the left and right. And I think almost all software packages have this. Right? You just set the parameter to 3 and the highs, 3 lower highs. So if it's moving up and the pivots are higher highs and higher lows, the trend is up. Now, I put a 20 MA, the blue line on there. It's pointing up. The 50 MA, equal to the 10 on the weekly. It's pointing up. The 20 is above the 50. The red line is the 200 MA, which is equal to, right, very close to it, the 10 MA on the monthly. All these moving averages are above each other, and they're pointing up, and the 200 is starting to point up flat. The big picture is up. Your job now is to find entry points, which could be a pullback toward a prior pivot. There's going to be buyers there. Then you look for a candlestick, like a bottoming tail bar. I've put these green boxes around these bars here that are little bars going sideways. Things tighten up. After the ranges expand, buyers come in and push something up aggressively. It needs to consolidate. And if it goes sideways and it's tight, rather than pulling back, that's called a correction through time. And that's bullish. What does that mean? That means that while most want to buy cheaply, less expensively on a pullback to whatever reference point they may be looking at, a moving average, a fib level, or who knows what, it won't pull back. That means demand is strong. That's the essence of a breakout. And so when things tighten up after range expansion in an uptrend of multiple time frames, it presents itself with opportunities. And for shorts, you just turn it upside down. Right? So here's one. It's a little more erratic, right? But it wasn't a downtrend. You can see the moving average is 20 under the 50, and it's pointing down. Yet the 200, the red line, is pointing up. The monthly time frame is up. What does that tell Greg? That tells Greg, while he can short this from a daily chart perspective, the big picture, the big picture is still bullish. So keep your expectations in alignment where, from a swing trading perspective, I'm all good with that. But I know that institutions are going to come back in because the big picture is up. Now I got to look to the left and find those pivots, right, which you cannot see on this chart. But maybe that 200 MA is in alignment with some support. Why did it turn around there and flip back up again? We get deeper and deeper into the analysis, but that's what you would be looking for. Right? Now, as it turns back up again, where it says trend change, prices traded above the prior pivots, there's been a clear, objective, 100% situation where overhead resistance has been taken out. Now, as I look at this picture, I want to speed up the analysis. I'm looking at that and I say, okay, well, it's bottoming out, and I've seen bottoms before. You know, I like to use the term, they can be treacherous. It might turn right back down again. Okay, fine. Well, as it continues to go up to the right side of where it says trend change, it goes up to the next pivot. Look to the left over there. There's more dots. And now it pulls back. It pulls back to where it broke out of before. Minor support at the green line, right, the 50 MA, and you get reversal candles there. That's your entry point. So this is the thought process as it evolves. Are multiple time frames in alignment with each other? Are some in line? And the big picture in this case, the monthly, it's pointing up. It puts my bias in alignment with what's happening in multiple time frames. So once it starts moving up, and I see you can see a wide range bar. This wide range bar right there. And a wide range bar after multiple bars moving up often precedes a stall in momentum. And if you look to the left, there's some supply there, some resistance. So it begins chopping around. Now, look, here's a situation where it's like, I'm holding on to it. Your stop might be under here. You get stopped out. It happens. But what's the lesson here? One of the lessons here is that when multiple time frames are in alignment, in this case pointing up, the probability is institutions are going to come back in and they're going to be bidding down there. Now, that's an assumption just based on historical charts and what we see happening, but you got to adhere to your stop, because you can't look at a chart like this and say, oh, this is what is always going to happen. For whatever reason, it could crash down here and now you're screwed because you didn't adhere to your stop. Money management is so important. But prices returned right back up again. So I'm not that surprised that this happened, because why? The 20 MA is pointing up. The 50 MA is pointing up. The 200 MA is pointing up. And it came out of a bottom. Okay. Now, the other choices, you certainly could use bigger stops. You could sell half. There's a lot of things you could do to money management, the flexibility once you get into more advanced money management. So another example, price support to the left, converging moving averages. What does that tell me? Well, over here, they were pointing down. It broke down and it came back up again. Now it's up above the pivot highs. These moving averages coming together is not about the moving averages. It's about telling me that the spring, the coil has been wound, because all of this price data is being averaged in and it's coming to the same spot, which communicates to me the majority are now coming into alignment. There's little differences in opinions as to up, down, or sideways. It's more of it sideways. I don't know what it's going to do, but a gap up. We could be looking at volume, but that's not the lesson here. We could be looking at a gapped up on volume. That's a big shift in momentum. Changes my bias. 20 MA is above the 50, 50 is above the 200, but they're flat. This is the beginning of a move. As it evolves, the moving averages will start to move away from each other. This gives me an objective bias of something getting extended Overbought is meaningless. I don't even like the word, right? Because was it overbought here? Oh, maybe you need to change the parameters of your indicator because it kept going up. That's the trap with those indicators. Right? So red bar ignored, buyers at the prior lows. Right? So this tells me anticipate buyers down here. Don't act, but anticipate buyers are going to be down here because why? Multiple time frames are going up. It's bullish. Why did it pull back? I don't know. At this pivot high, it retested it. There were sellers there. Maybe the market at that time had a hiccup and money comes out, but then the buyers are going to just show up again. And that's why the 50 is an institutional point of reference. You anticipate they're going to be buyers there. You look to the left, you see if there's some congestion, and now you wait for your pattern. There it is. Wide range bar coming up. Buy it above the high of the bar. Stop down here. Oh, share size. Now you're getting into the money management part. I'm going to show you a little bit about that. Right? So someone could say, well, why didn't you buy down here, Greg? Well, these are little bars. They're not that convincing to me. It's like it's beginning to make the turn. It may have continued to go sideways. I don't know. This jumps out at me. That I know what to do with. So as I look at different patterns, I know what they mean, but they don't necessarily mean act. Now, if I could take one of those big bottoming tail bars and put it down here, like if this green bar had a big tail on the bottom, that gives me a clearly defined stop. I know what to do with that to buy it above that high. And why would I think it's going to get above here? Multiple time frame alignment. MAs are sloped up. Odds are that it's going to continue to go up, right? This is an odds game. How do you define the odds? Well, I'm telling you how we define the odds. Okay. Now, does this work on anything? Right? Someone in the other presentation, someone asked, what about Forex? Well, I've never traded Forex because I don't care for it, meaning you got all these brokers and people, different quotes and so on and so forth. For me, it's, I don't know, I think it's a bit of a fraudulent situation there. I don't want to get into that conversation, but if I'm going to trade a currency, I'm going to trade futures. For me, that's an honest market. And that's an opinion. Right? These are bonds. Does it work on Forex? Hell yes. Does it work on bonds? Yes. Does it work on oil? Yes. Does it work on gold? Yes. Because what we're reading are the minds of other people. Human nature always works. Sometimes human nature is crazy, where you get erratic bars overlapping each other, like down here. This is insanity. This is like, I don't know what the hell's going on. And you see the moving averages intertwined with the prices. But when they start to tighten up, that communicates I'm a lot more confident about what's going on now. Multiple time frame alignment. You have more and more individuals, and this is bonds. You can trade bonds, you could trade micro bonds, but you have more banks and hedge funds and so on. And just because you got a lot of money, that doesn't mean your mind cannot get twisted or confused about what's going on in the world. Right? Because this is related to interest rates. But as they begin to tighten up, or you get a wide range bar exploding like that, now you've got the majority coming together out of a consolidation. Multiple time frame alignment, pulling back to an area of support. That's where buyers are going to be. This is a continuation pattern right there. This little bar, this inside bar next to the big red bar, and then this bar that takes out the low, that's a continuation pattern. This is a continuation pattern, multiple time frame alignment. We're putting the odds in our favor. Right? And this is how we do it. Now, Metastock. This is from one of my prior presentations, but you want it to define the trend for you? Yes, it's going to do it. Is the trend changing? Turning neutral. Is it now bullish? Are things coming into alignment? Yes. You want to find pullbacks to support. You want to find the trend. You want the buy signals. It's going to do it. And so software, if it is utilized in the proper way, it's amazing, because once we define our method and we can tell the software that method, right? I was told once, if you can tell a programmer in clearly defined words as to what is, and if this, then that, it's great. And so this is what this does. If this, then that. If this is happening in the trend and it's bearish, tell me. If it's moving, if turning neutral, tell me. Is it in alignment? Tell me. Is it a buy setup? Tell me. So software is fantastic for doing that. A little bit about money management. So you need a checklist, right? As a swing trader. What's the weekly bias? I told you how to do that. Multiple time frames. What's happening with the daily? I told you how to do that. Trade setup. I showed you that. Right? We look at these candles, and we can get a lot deeper into different patterns, of course, but trend and price patterns. This is one of the biggest, and you're going to take it for granted, right? Long entries near support. You say, of course, common sense. Well, then why did you buy 5 bars up from the support? Oh, because I saw it going up. It was clear. Yeah, it was clear, right? And now the people that bought near support are starting to exit positions. And now, because you didn't manage it properly, you're going to sell near support. Right? If you just follow this in alignment with what I'm showing you, the odds are in your favor. Shorts near price resistance. Interchange the word support with demand. Interchange the word resistance with supply. Sellers, buyers, risk management. You know, many years ago, SOS bandit days, buy 1,000 shares. Oh, it's starting to move, buy 5,000 shares. Just press the buttons. Well, it was great when it was working, 1999 and 98 and so on. But when things turned, it was like, oh my God, there's nobody on the bid. Well, look, be smart. This is a very basic thing to start that'll keep you in the game. I just made up numbers to make them easy here. Account, how much will you risk per day, maximum loss per trade, maximum losses per day, right? If you lose $1,200, 4 losses in a row, clearly you're doing something wrong. You got it wrong that day. Stop trading. Share sizing. What's your stop? Right? Share sizing accordingly for your max loss per trade keeps you in the game. If you do this, and even if you got a $100,000 account, if you change this to 0.5% because you're starting out and you're really not sure of what you're doing yet, you're searching for your method, you've just increased your odds of making it exponentially. And you've all heard the odds. 95% don't make it, 99% won't make it. Who knows where you get these numbers from? Who's ever really calculated it? But if you follow some very simple money management rules, even if you had a $500,000 account and you say, I don't know what the hell I'm doing. And you say, I'm going to just trade 10 shares on trades. No, you're not going to make a lot of money, but you're not going to lose a lot of money. And you're going to journal things and keep track of it. You're going to last long enough that you're not going to lose all your money. Right? Discipline and rules. That's probably the most difficult part, because if things aren't moving the way you want them to, right, it requires discipline not to go press the button on something that could be not even in your wheelhouse, right? Not even close. But you press the button and you do it, and now you're reinforcing bad habits. So rules are a trading plan. So with rules, it tells me what I can do and what I can't do. And if you don't define rules, you're screwed. If you don't have rules and you don't have money management, you just may as well give it up now, because you'll save yourself. I'll save you a lot of time, frustration, and heartache, because without this, you have no success. Your odds of making it are zero. Okay. But what I've given you today puts the odds in your favor exponentially. I assure you that. So we're on YouTube and Facebook and X every morning at 9 o'clock, reviewing the broader markets and our positions and new positions for the day that we're looking at. So you want to kick the tires, get on YouTube. There it is, YouTube/C/Master Trader. There's recordings there. We have an MT Live this Wednesday. You can watch it from there. And so, yeah, there's a tremendous amount of education there. I give credit spread ideas every day and so on. So great information there to get started. What is my offer today? I'm creating a new course. I'm not done with it yet. A lot of candlesticks, a lot of trend analysis. I'm doing it different than my other courses, meaning I'm making not only the slides like I'm showing you here, explaining things, but a lot of relatively short videos, 2 minutes, 4 minutes, 6-minute videos showing what's happening and explaining the concepts. A lot swing trading, of course, and even intraday trading. So a lot of intraday. So basically something for everybody. You can check it out at the site, and there's a lot of detail there about it. But since it's a new course, it's coming next month. It's 50% off. It's a no-brainer. So check it out. Consider it. If you have questions, email me, Greg@Master Trader. Check out the website, my blog. There's a lot of great information there. Basically, what I'm telling you, get to know me, Dan, and Master Trader. And I believe we are unsurpassed as far as quality education that's been around for 30 years. And we've stood the test of time. The method has stood the test of time. And if you can bring up a chart, you can start using it. If there are any questions, I'm here for a couple of more minutes, I think I have.
Yeah, Micah wants to know if this will work with Forex markets.
It will work with Forex markets, but as I said, I rather trade currency futures rather than Forex. And as I also said, everything is the same. So there can be different volatility based on different news, whatever's influencing it at the time. Your job is to define the trend and setups and when the time is to act. So it doesn't matter what you trade. Some people think Forex is the best, it trends and this and that. It has its advantages, but it also has its disadvantages like anything else does. And I have a choice. If I think the euro is going to go up or the British pound, I can trade the futures contracts, which in my opinion is an honest market. There's a bid, there's an offer. I can bid, I can offer. And, so yeah, I don't have to trade it, but yes, it'll work because human beings are trading it. And there's certainty, there's uncertainty, they trend, there's support, there's resistance. So yes, it's universal. It'll work.
All right. Thank you very much, Greg. I appreciate that. I do want to, if it's all right with you, I want to spend a couple minutes talking about your add-on that we just finished. But before I dismiss you, I want to say thank you for coming. Thank you for being part of the event. Thanks for all the help over the years as well.
Welcome, Jeff. Thank you. And thank you for inviting me.
All right. Very good. Thank you very much, Greg. Right.
Does it work on tick interval? It'll work on anything, James. So look, you got to start with a higher time frame. Give me a second, Jeff. If you're going to go down to the smallest time frame available, you're going to get chopped to death if you don't have a plan that starts with a bias from a higher time frame. It'll work on anything.
Yeah. And Rommel asks, are these classes being recorded? They are. Actually, we're streaming this to youtube.com/metastock. At the end of the week, we're going to send you the direct link, but they're really easy to find if you just go to youtube.com/metastock. You can watch them there. They're going to be available. They're already there. So there you go. They are being recorded and they're live. Very good. Thank you, Greg.
Thank you.
All right. Do this. Okay. And Greg, it looks like you can see my screen. All right, let's go ahead. Just want to talk real quickly about the Greg Capra add-on Master Trader Methodologies. It's brand new. We just released it a couple of weeks ago, and it includes like a lot of the setups that Greg has been using for years and years and years and decades. So in terms of the categories of different setups there's trend following setups, there's guerrilla reversal setups, and here's a list. I'm not going to go through all of the list in terms of kind of what's on there. This is a list of the trend following setups. On the next page, I have the guerrilla setups, but these are all kind of available. They're notated, they're kind of annotated on the chart, they're scannable, and here are the guerrilla counter trend, the reversal type setups. These are the ones that are there. And again, feel free to kind of pause the video, take a look at what these are, read through the table. We just don't have time to go through it, but all of these setups are kind of put together. And again, they're really built to work with the methodology and the engine that is Metastock. So if you want to run an exploration, find any of them, it's going to help you kind of identify them. They're all going to be available on the chart. In addition to that, you have expert commentary that's going to allow you to kind of see what's going on there. So here's actually an example of the commentary. This was an exploration I ran, and it was given a signal on MagZilp. Here it's going to give you a long position, an initial stop. It's going to break down the target, management, alternative management. A lot of the times the questions that we get are, this is a brand new methodology for me. How am I going to understand how to use it? What kind of resources are available? And I love the commentary for that, because you can kind of go in there and you can know what's applicable right now, where things are going to line up, what you should be paying attention to. And it's very, very specific. And Greg, when we went through and put together this initial commentary, really did a good job of fleshing it out and putting it together. So in total, there are 17 explorations that you can run through. With the explorations, we talked a little bit about those, but the scanning is one of my favorite functions in Metastock. It allows you to really cut through the noise and say, okay, well, I don't want to look at 6,000 charts a day. Which ones fit the criteria of the methodology that I'm looking for? And it allows you to kind of take out all the junk and focus. As a traders, we want to focus on the stocks that have an opportunity. And for me, I could probably trade without scanning, but I couldn't trade nearly as effectively without scanning. It does come with the Master Trader Trend Indicator, that's part of it. And it also comes with 2 months of Greg Capra's membership advisory service, which is normally about $149 value. Coming up shortly, I believe this is actually a couple weeks from now, we're going to be doing a class September 26th at noon Eastern, where it's going to be a 2-part class. This is going to be part of the launch. We're going to record this and I make it available for you. But what we want to do is want to make sure you understand kind of the setups, the best ways to use it. So Greg's going to do a part where he discusses the setups, how you can apply them in the markets today, how you can do everything like that with it. And then I'm just going to show you how to run scans, how to set up your chart, how to get everything kind of exactly the way that you want, and the things that I'd recommend that you do to kind of get the best experience out of Metastock. So that's going to be, again, September 26th. It's going to be at noon Eastern. If you get the add-on, you can join us live. You can ask questions. And if you're not available for whatever reason on the 26th, this will be recorded. We'll make it available as part of the something that you can watch anytime you want to. So in total, with this, what you're going to get is you're going to get 16 volume and price swap setups. Again, we're looking at price activity, It's great for swing trading. It's great for day trading. It's designed to be scannable, so you can kind of go in and find all of those, and has complete documentation with it. So the normal price on this is $19.97, 17 different setups. As part of the introductory special at the conference, what we're going to do is we're going to do a $9.97. We are going to back that with our money back guarantee, so you get a chance to try it. If it's not something that works well for you, you can cancel it, get a full refund. There's no risk. And if you haven't tried out Metastock, we'll give you a 30-day access to Metastock. I did mention earlier how it's been rated the #1 software in its price category, and it's rated that 32 years in a row this year. So to do that, you can go to metastock.com/mastertrader. You can call us at 800-882-3040, and you can go to metastock.com/saleschat. Greg, okay, so there you go. Give it a go. Give it a try. Again, if it's something you don't like, they're very low risk, but the reward is if it's something that's helpful for you, if it helps you identify those better trades, that's going to work well for you, and then you're going to want to keep it. So metastock.com/mastertrader, 800-882-3040, or metastock.com/saleschat. Greg Lewis,
Yeah.
would you be available to give me a hand for a second?
Absolutely. I have to say my ears kept on perking up.
Oh, I can't hear you.
I
I can kind of hear you.
Oh,
I-
can you hear me now?
Have you tried talking into your microphone?
Can you hear me now?
Barely.
I'll
So,
fix that next time.
okay. What I want you to do is I want you to help me give away a prize, and you might need to actually text me the number based on how loud you are. But if you will, we're going to give away prizes as much as we can today. Got a lot of prizes. The prize that we're going to give away next is the High Profit Candlestick Pattern Book by Steve Bigelow. Steve was a great technician. He's a very, very good friend of mine, and I'm going to give you his book. Great book. We're gonna mail it to you. And to win the prize, what you need to do is you need to, if you're watching us on GoToWebinar, you're already registered. Your name's already on the list. If you're watching us on YouTube right now, hello. After you like and subscribe, go to the registration page, which Greg is going to put in the comments right now. Go to the registration page, register for the event. It'll take you a couple minutes, and then you'll be added to win a prize. Okay. So, Greg, what I need from you in order to kind of give away this said prize is I need a number anywhere between 1 and 3,967.
Can you hear me better now? Jeff?
I can barely hear you.
Okay, go on without me.
All right. Greg is going to text that number to me. You can put it in the live chat. And while he does that, I'm going to go ahead and say, if you haven't yet, I want to invite you to join us at the Traders Forum. We have a lot of fun up at the Traders Forum. There's a lot of lessons. There's a live market chat. You can talk to other traders. You can visit with other traders. It's a free community of traders designed to help other traders. So if you haven't joined it yet, we've got about 1,300 members. We'd love to have you in there kind of sharing ideas with us, learning about the markets. And you can do that at www.thetradersforum.com. Since I can't hear Greg, I'm going to take a number that Rahul gave me. Rahul gave me the number of 248.
Jeff, can you hear me now?
No, I can't hear you still. But that's okay. I got a number. I mean, I can barely hear you. But Rahul stood up to the plate. 248, Johnny H. in the USA. So, Johnny, I might need to get an address from you, but if your name is Johnny and your last name is H and you're from the USA, that might be quite a few different people, but there's a good chance you won. So I'm going to go ahead and kind of make a note of that as we get going with the next session. But congrats. We'll make sure this gets sent out to you. So there we go. We are, of course, Metastock. We're going to talk more about Metastock as soon as we're done with our next great guest. Our next great guest is Rahul Mohindar. Rahul Mohindar has been a partner in Metastock for about maybe just a little bit longer than I've been an employee, which I started back in 1997, then the 1900s. So Rahul's been on CNBC India. He's been on CNN India. He has a great network of offices in India where he trains people how to trade. He's he does a really, really good job. And I love Rahul for a number of reasons. But one of the things I will say that's nice about him is that he does a really, really good job of kind of explaining concepts in a way that I can understand them. And I always think that shows a good teacher. So Rahul, let's see if we can hear you. Are you ready?
Well, I'm up against Greg. I hope I'm clear.
I can hear you, yeah.
That's
let me go ahead and
fantastic.
do this. Let me turn the presentation over to you and we'll make sure we can see the right slide.
All right.
I'll let you know when I can see it too. Right on. Rahul,
Perfect.
that's it. I can see you. I can hear you. And I'm going to get out of the way. Your turn.
Thanks, Jeff. First of all, thank you all for being part of this conference. It's always amazing to see that sometimes I wonder that Metastock's faster than the season. Every season changes. We have a conference. Sometimes it's every month. So it's amazing that a company like Metastock shows this commitment to its users of offering not just free education, but above all, giving you a plethora of speakers and all so that you get a better perspective on analysis and trading with the end goal that you become more successful in your endeavors of be it an investor, be it a trader, because I completely understand and I talk to you trader to a trader, investor to investor. I'm not someone who gives financial advice. That's not my main business. That is not my business at all. In fact, I really just try and make money off the charts myself with my own money. So trading is what I'm committed to. And when you'll hear me today, you'll see where I'm coming from, because my end goal is that if I can help you become a little more independent, a little more effective in your own trading, a little more practical in your analysis, that's where I'm trying to shoot from. So the whole goal of today is to give you a very crisp outlook into the RMO and the Armo ATM, some of the key studies. Of course, it's too little time to run you through everything, but crisp enough so that you can pick up some neat pieces which you could immediately use and immediately get help with in your analysis. So let's dive straight into charts. Let's dive straight into my first model, the inbuilt RMO that you have inside of Metastock, which is really not an add-on. I'm going to build it up from here because you need to know where this is all coming from. So the RMO, which is included in every version of Metastock for probably the last couple of years, I think, in fact, quite a few years, maybe a decade by now. The Armo has been around for a long time. It's been a very popular tool. It's something I designed for my own trading. And, in those days when Scott Brown saw that I'm using such a tool, he really pulled me up and said, we've got to give this to all our clients. And, that's how it all began. So that was the journey of the Armo. And the Armo was something I designed when I was looking at many indicators, the typical indicators we all use as traders, the RSI, the stochastics, candlesticks, moving averages, stuff like that, just the regular indicators. And what used to happen with me, it was always a lot of labor, drawing the trend lines, trying to find chart patterns, sometimes identifying, divergences. There was too much of mix and match. And I realized that what was happening was I was falling prey to my mind rather than a method. In fact, I would really start using, studies which suited me. It wasn't really, for example, if I felt the market's going to go down, I'd say, hey, the MACD is a sell there. Or if I see, oh, there's divergence because I'm bearish, but the market kept going up, and I realized that I was sometimes biased just because of one signal. And I realized that a lot of these indicators seem too old and less adaptive by nature. So the whole concept of building a tool like the Armo was, can we get a more adaptive concept? So when you looked at, I'm just taking you back to a chart of Apple in the heydays when it was a 30, 40, $50 stock. You can see even when we went from 50 or 60 all the way up to 120, we still had negative divergence on that oscillator, right? We went from 120 to new highs of 150. We still had negative divergence. So often it just blocked me out. Whereas if I looked at the RMO, which is this green histogram here, the RMO stands for Rahul Mohindar oscillator. You could see that if the RMO is above zero, and I'm not worried about the curvature or humps on this oscillator, I'm just looking at, is it above zero or below zero? You can see right in the beginning it was below zero, and when it went in 2016 above zero, it's just been bullish for so many years. The RMO has been bullish, and what you've been focused as a trader or investor is that to stay in the direction of the primary trend, which is on the buy side. So whether you had divergences or MACD sells or stochastic crossovers, in essence, I always remember that the primary trend was up and my real goal was to buy. So the whole idea of building a system like the Armo was to be a little more inclusive, be very focused towards a long-term primary trend, and this is how you apply it. You right click on a chart, you apply template, and use the Armo trade model. So to sum up, we had three advantages. Number one, we're on the direction of the primary trend. This increases our odds of winning. And of course, number two, you're trading in the direction of the stronger force. So in other words, if we are in an uptrend, you're really trying to focus where to buy, not where to sell. And as I said, you're focusing on the big picture. We're not trying to fight the trend. We've all heard the cliche that the trend is your friend, and that's very true. I mean, it's only when you make a mistake you realize how important that line is, that the trend is your friend. If the market's looking good and it's primarily up, let's not try and be the guru trying to say, oh, this is the peak of the market. And that's what's been happening. If you look at in the recent run of the Nasdaq or the Dow, there have been a lot of people who've come in and said, oh, things are not great, we're going to top out, we're going to top out. Until this very day they've just been saying we're going to top out, and every month has surprised them one after the other. So again, let's not try and be the smarter wisecrack, as I would put it. Let's try and accept that the RMO has been bullish, it is bullish, and we continue trading in the direction of the stronger force rather than fighting and trying to, get a medal by saying this is the perfect peak, right? So we're not here to bottom pick, we're not here to top pick. And the whole goal of the RMOs, there are three studies when you open the template. There are three studies: an arrow, a bar color, and the oscillator. So the buy arrow occurs when you get a blue colored arrow. The blue bar is a medium-term trend, and the long-term trend is defined by the RMO. So just to sum up very briefly, the buy arrows are really the short-term signal. The blue bar is my medium-term trend, and the RMO bullish is my long-term trend. So just look at the synchronization. We're looking at a signal where all three, short-term, medium-term, and long-term, are in alignment. So let's recap. The short-term buy comes with the arrow here. But what's the problem here? You say, no, but it's a red colored bar. The medium-term trend is still not turned. So by now, when you see this blue bar, you say, okay, I've got the buy arrow and now medium-term trend's up. So you feel a lot better. But a couple of bars later over here and much higher, you say all aligned, because from RMO bearish, you can look down at the x-axis ribbon. This was RMO bearish and this is RMO bullish. You say there's a perfect alignment of all three, right? So I've got my arrow, the bar color, and the RMO turning into a bullish zone. So that's a major long-term primary trend breakout. Similarly, you could have what we call add-on breakouts. This buy over here, again, satisfies the three-dimensional buy, as I put it. Why three-dimensional? There are 3 pointers to it: the blue bar, the buy arrow, and a positive arrow. You have all three over here. So what about this red arrow here? You totally ignore it because A, it's in a zone where the RMO is bullish, and B, even the medium-term trend is not tickled here. It's not even turned red. So there's absolutely no reason to even consider a red arrow over there, because some of you may think, oh, can I take some profit? Well, of course, if you're a scalper or if you're someone who's a very active trader and says, okay, I want to kind of move out and move in a little lower, fair enough. But again, it's not like the primary trend is deteriorated by any chance, right? So a three-dimensional sell is, absolutely flip opposite. Of course, all the examples in the last couple of months have been more on the buy side, but let's kind of look at what a sell would look like. A red bar, the red arrow, and the Armo rotates from a bullish to a bearish, so from a positive zone to a negative zone. So when you see that, it's fairly simplistic, and the why I kind of loved it is, and again I speak with with personal pride, because this is what I use with my own trading. When you look at it, I don't have to look at 10 different indicators. I don't need to mix and match. I don't need to look at three different intervals. A lot of people look at, let's look at 30-minute, let's look at 60-minute, let's look at daily, let's check it with the weekly. Well, you don't need to do all that, because what's happening in such a template is it is already checking a short-term, medium-term, and long-term parameter. The arrow is doing the short-term job, the color of the bars is doing the medium-term job, and the oscillator is doing the primary or long-term job. So if I could have a template which does all three, that's much more robust than having to, go and put in all the legs to do it manually one by one. So bear in mind that what's important is to have a system which is more inclusive, rather than have a methodology which depends on you going to multiple indicators and multiple time frames, right? So the goal here is to try and look at a system which makes it a little more hands-free, and more than just being hands-free, a system that also makes it uh, easier on the decision-making process. Now, I always say use a rule of trigger, which means buy above the high. The simplest test of strength is let it go above the high of the previous day. So why have I marked this dotted vertical line here? You can see the buy arrow came in here. You can look at the blue bar colors that came in, but look at the bottom on the x-axis, Armo was bearish. It only turned green where I've marked that dotted line. Notice it does not cross the high areas over there. Not just that bar is high particularly, but if you see in and around it, it does not clear the major points there. If it fails to qualify, it fails to really stay above that high point, it means it's not really a breakout, it's a fake out. And that's where I'd say this is simple filtration, which will help you not get into a bad signal. Now let's look at this one here. There's a red bar, a red arrow. And this time if I use not just this low, even if I use this low, I can see that low breaches. So RMO is bearish, and that's how it makes it a lot easier. So let's use a simple rule of trigger. When I'm buying, I want to buy above the high. When I'm selling, let's try and sell below the low of the signal bar. Is the RMO something which will help you tweak tops and bottoms? Absolutely not. If you're someone who feels that, oh, there's a big fall come over here and this is a daily chart, you'd say, in this entire fall, the RMO has been bullish. Well, that's because it is a long-term oriented study. If you're trying to look for shorter term trends, we've got studies within the ATM suite to help you do it. But if you're primarily looking at the RMO, it's more a long-term oriented study, and hence do not expect this to be a top or bottom picker. But again, what matters is not about whether we caught the top or bottom. What matters is what is our success ratio? How peaceful am I when I trade? Do I need to look at too many indicators? I'm someone who believes that you've got an indicator quick list of about probably 200 plus for sure. And I keep telling Kelly and Jeff and the entire team, I wish I could shorten that list to just 4 or 5, because someone who's using too many of those indicators in the list often could, land up in a big soup, because too much is often confusion, not clarity, right? And that's what tends to happen. There's an information overload, there's an indicator overload. And the idea of having a template like this is very vanilla, and it's very easy on the eye. And if it's easy on the eye, that's the first step to good decision making, right? So some important pointers. Now I've gone into great depth over here of marking out, and let's just run through it. You have a buy signal where you have the rectangular box, but what's bad with that? The Armo is bearish. But where's the point which looks perfect? It's this point, because not only is the blue bar there, the buy arrow, the Armo is also turned bullish, right? So it's not like it's perfect. You had a bullish signal even prior to it over here, right? So that does happen. You sometimes have a signal doesn't work out. You had a sell after that. But finally over here, you have full alignment. and that alignment seems to kick in very well. So sometimes if the previous trade is a bad one, don't give up on it. You have to have consistency. So you can see even though the market had several peaks and troughs, you had red bars. None of these red bar lows broke, right? So not even the medium term trend got dislodged. The Armo, of course, has been pretty solid and bullish. So what I'd like to conclude is if you're using the inbuilt Armo, which is of course the standard setup, you focus more on the first breakout, not an add-on breakout, right? So in other words, you're not trying to look for anything but a first breakout. Use a filter, as I said, buy above the highs, sell below the lows on the signal bar. Stay disciplined with rules. When I say disciplined with the rules, this I think goes without saying because no matter what system you use, if you're not on the same stock with the same quantity 10 times in a row, how do you know you're 6 or 7 out of 10 times correct? Right? So give yourself a fair chance. The problem is if we have one or two bad trades, we walk out of that stock. We change the stock or we change the indicator. That's what most of us do when we're at that beginner and amateur state. And that's where I'm trying to come in at that in case you're someone who's beginning with it, have no fear. In fact, I go the other way around. If I have one or two bad trades, I get a little more confident on that third trade or fourth trade, right? It's just math. If you know and you've done your work and seen that three or four, if I have a 65 or 70% hit rate, and if I've got two bad trades behind me, your odds obviously have increased for the next one. Easier said than done. But again, let me tell you, that's how it is. That's how disciplined you need to be. Volume, of course, works as an excellent confirmation. And if you're someone who does Fibonacci, it helps you with support resistances. Let's talk a little bit more about what else is included with the ATM setup. When you have the ATM setup, you can actually look for three very interesting cases where you have an integrated buy, in other words, where all three have aligned into a buy or sell. Then you have an integrated sell setup where all three have integrated into a sell, where in other words, you got red bar, red arrow, etc. And then you have the super filter, which is another study, which is a more improvised version. And let me just explain to you what the super filter does. The super filter now, instead of just a red and blue color, comes to you with four colors on the bars. Notice there's an orange, red, light blue, and dark blue. The beauty of the super filter is it filters out the RMO itself. It kind of includes the RMO component and further filters it out. Based on the volatility of the stock, it adjusts the values to give you a more tailor-made output. When I say tailor-made, it's not like I could use the same indicator with the same formula across the board. So if a stock's a little more volatile, it does factor in, a slower value for the indicator. So like you can see over here, the Armo, bumped into a bullish zone here, bullish zone here. But what happened to the bars? They stayed red and orange, which prevented me from unnecessarily going long. So does it mean that this is just a slower indicator? It's not. The bar colors doesn't mean it's slowing it down. Sometimes you'd even get a faster signal. Let's look at a slightly bigger picture. You can see over here, the entire left-hand side of my chart is a light blue and dark blue color, whereas the right-hand side of my chart, and this is the Indian Nifty index, you can see how primarily most of 2024 has been bullish, and come September, October, we translated into a bearish price act move, and that ran all the way into Feb, March, right? So you can see that even though the Armo went bullish, there were phases it moved, this stayed orange and kind of locked you in on the sell side of things. So it's all about smoothing out the RMO itself. And how does it do it? It's tuning up to the chart. When I say tuning up, it's adjusting to the volatility of the chart. So you can see more here that saved you, right? Over here, this is the original Armo. You had blue bars. You had, you probably say, oh, did it cross the high? You probably want to use more filters. Was there volume on that move? So when you have something tailor-made, it's truly going to be a better fit, and of course a lot more accurate, right? So even here, this is an example with forex data, and again, I've just quickly extracted something out of a euro chart. Again, these are not up to date, but just to give you a ballpark idea, where have I got alignment with the super filter, where you got a deep red over here. Notice the deep red comes in much before the RMO even went to negative. and that is good enough for you to start initiating the sell process. Similarly, uh, you got to understand that when I get a buy, I got a dark blue over here. The high of that is not crossed. The Armo went into a buy much earlier, which could have kind of flocked you into a buy, which we get saved from. So the super filter is definitely more eye candy, much easier for your trades, and definitely, as I said, it all starts when it's easy on your eye. It's going to be easy for you to interpret and trade better, right? This is very important. For me, visual appeal is something which is extremely important because it all translates into accuracy. So, here's another example where you can see the dark blue bar by comes much before the RMO even moves into bullish. So don't think that the super filter is always slower just because it has a smoothing effect. It also can be faster. So notice over here, it was much faster to give you a buy, but here it was much slower to give you a sell. The RMO went into negative, but it was still light blue. It waited till it turned red. So it's all about, over here, what happened? What made it go slow? Maybe the last couple of bars were not very volatile and therefore it needed to expand its value base and therefore slow down the indicator. So if volatility drops, the indicators need to start giving you more cushion. If the market starts speeding up, volumes start increasing, volatility goes up, you want your indicators to also start, accelerating in terms of value. So that's the beauty with the ATM. All the indicators that we use have this acceleration and deceleration process. So you can see when you see a deep red bar over there, that's way before the RMO turns into a negative. You may say, but that's just 4 bars ago. But look, that could be 2,000 points on the Dow. So that's how different it could be. It's all about getting that edge. So having something more efficient, more easy on the eye, and you kind of understand when dark blue rotates into light blue, something's turning. Light blue moves into red, that's a problem. The red low breaks, and that's totally it. In between, you have a solitary light blue, doesn't take the high out. So you can see how beautifully it's synced in. Plus, you have the RMO on the axis at the bottom. You completely understand this with a much more holistic view. Let's look at another very interesting study, which is completely based on volume. I'm not pausing for questions. I apologize, but I will leave 5 or 10 minutes towards the end for any questions you may have. And that's because I want to cover some important content and then kind of roll into questions. But again, feel free to make note if you have a question. I'll definitely try and address them towards the end. SWI is the Strength Weakness Index. It's one of the studies which only uses volume. I repeat, it does not use any other piece of data. Volume is its core ingredient. And the only other piece of data is the market going up or down. It doesn't even know the price of the security actually in its calculation. So the SWI looks like a little line which dissects the chart into bullish and bearish territory. So when you apply the template, you'll see your bars turn into a dark blue and red color. So when you look at the dark blue and red color, we have got a red right over here indicating a sell, and that's totally based on volume. Now, what does it use in volume? So we all have this saying, if price goes up with volume, that's a good sign. But what if price goes up and volume was declining? Or when the price went down, the volume suddenly increased? This whole equation is married into the SWI, and it keeps doing this comparative study to the immediately preceding trend. And when it sees this differential activity on volume, it starts giving you a buy or sell. So mind you, this is not using moving averages, not using price data, not using any of your typical. So, when you looked at the RMO super filter study, that's all price driven analysis. This is completely volume driven analysis. I'd say any good trader, any good analyst today needs to have a blend of both price and volume. This is very important. A lot of us are either extremely overbought on price driven indicators or extremely overbought on a pattern formation or extremely overbought on just a volume. It needs to be a blended formation where can you see that price breakouts are in alignment with volume breakouts, because these are the two most essential pieces of data that we have. So if you look at the chart of Apple, fairly up to date, I think till yesterday at least. If you look at this chart, this is a daily chart just on the SWI alone. Notice over here, you've had little red bars that came in, low not broken. Red bar that came in, low not broken. It's really been from a volume standpoint, even though we dropped from 240 down to 225-ish, it was all above SWI. And even when the market was going down in that March, April early phase, we dropped from 230 down all the way to 170s. You could see we were all SWI negative. Right from that point over here, we had red bars, right? So you can see how beautifully it can calculate. For example, Tesla on a daily chart using the SWI. And mind you, of course, today it's been a great runner. And I'd like to just share with you, if you were using it all the way from April 25, just running you very quickly almost into 6 months of data, we were in a sell that turned into a buy in April. We got a one sell bar over here, but did it really trigger? Did it go below the low? Never, right? Never. And every time it went above the blue, didn't cross the high. The last time it crossed above the blue here, crossed the high, and that's what's got you into the 400 plus zone. That buy fired you at about 345, 350s. The previous buy that happened was somewhere here in April, which was around that $260 mark. And of course, as I said, we didn't catch the bottom, but you got in at 260, you saw a pretty good down rally, like we got in here at 350, and you're seeing 400. So it's fantastic how just on volume alone, you have this input. Now imagine if you marry the two, if you married price and volume. I mean, this is a chart of Starbucks. This is a stock that's obviously been declining. And again, this is not absolutely live or up to date, but I think at least till about yesterday's data, you can see a 30-minute chart here, and where the SWI has actually been on a negative from the $88 mark, or as it breached 87 for sure. You've really been in a negative zone, and we had a good 10% decline on the stock right over the last couple of days. And again, I'm not attributing reasons or corporate actions or fundamental views here. I'm just looking at where the volume is moving. Volume is equal to money, and that's been factored into the SWI. It was bullish, and now you could see that really the sellout started as we had that red bar. So as that low broke, you had one solitary blue. Again, that's one 30-minute bar. That's it. Didn't cross the high. So it just tells you where we stand from a volume trend, right? So this is very important. A lot of us miss this component. And again, something I love about Metastock is it leaves no room for error sometimes, because you've got a beautiful expert advisor where we punch this commentary in for you, where you can see that the SWI is bearish, the RMO is negative, the zone detector is another tool. I'm not talking about that today, but you can go through the manual and in various videos that we have up there. So the expert advisor really interprets it for you, and you can take your mouse to any bar and ask for interpretation on it, including the current live bar. So the beauty is you can blend in. So here's an idea. What if I blended in the SWI and the super filter? I'm just doing something absolutely crazy just to help you understand. So the bar colors that you see now are based on the indicator of the super trend study, which is there's a super filter study that we have, and then we've got the SWI, which is really ironing it out for you from a volume perspective. So you could say, look, the SWI is broken, but I'm not selling because I'm still blue, right? So you won't have these mishaps. Instead, you'd say, okay, I'm going to buy every time you cross the SWI, I'm going to buy you, right? That's more interesting to me. When I became orange, okay, that's a good point to sell you. I'm not going to. So you become more, uh, aligned with not just the price breakout, but also with the volume breakout. So you can do things like this and make it really interesting for you, because you can see, okay, I've got light blue, but I've also crossed SWI worthy of a buy. I got orange, broken the SI worthy of a sell. So you have rotation there. Similarly, over here, you got a buy based on the SWI. You say, no, I'm not going to buy here, because not only is it red in color on the super filter, there's no agreement, right? There's no agreement on the trend. So the beauty is you can combine. So as I said, always have some price-based studies or trend-based studies. So there are three elements actually. Here I've written two. So I said trend detect using the RMO super filter, volume detect using something like the SWI. And the third thing, which is very important to me, is also historical support and resistances, or what I call the important block points on your chart, right? So trend detection is all about using tools like the super filter where, it uses various components in it where you will be able to understand whether there's a short-term, medium-term, long-term alignment of the trend. But I think how about we give some attention to historical support resistance data. So here's a quick extract from actually the ATM manual of ours. And here I've explained to you that you've got two kinds of levels. One is a purple marking and one is a blue colored marking. The purple ones that you see are really the support levels, and the blue colored markings that you see, they are resistance. Mind you, these are marked automatically on your chart. So the minute you put on the Auto SR template, you will get these markings like you're seeing on my chart, right? So here what I'm seeing is their trend flare lines, which I've marked here. But again, pay attention right now to just the blue lines and the purple lines. So the minute I have a a lower support level, when I see that purple and I can see the market rotating up from it, that's a good sign. But what's a confirmation is when I break a resistance. So for me, crossing that first resistance point is very important. Once I cross that resistance, it just kept on a roll, and nowhere did I break the support. Where did I break support? So you can see there was a support here. That support breached, and that's where the trend aborted, right? So what you're trying to do is, again, look at three components: the trend element through the super filter, the volume element through the SWI, and the levels element through the support resistance tool. So this is again a fantastic go-to tool if you're trying to understand that am I at a critical zone of support or resistance. And how I like to look at it is if I've got a support here which hasn't breached and thereafter I've subsequently crossed a resistance, that's a strong signal. So every time it rotates down, if the support is still there, you still hold on. Now later on you may say, okay, but the support broke over there. Well, one closing below that, I need to break the low of that bar. Okay, so it's important for me to not just intraday penetrate it. I need one bar to close below it, and that could be a 5-minute bar if you're on a 5-minute chart. It could be a 30-minute bar if you're on a 30-minute chart. All I need is one bar to close below that support and then puncture that low out, right? But the rhythm is clearly up when you can see. So these two lines that you see over here, the blue and the saffron, the green and the saffron line, they come from an indicator called the trend flare suite. I'll talk about that in a bit, but that's what we call baselines. That also helps you understand market trend. If you're above both of those lines, you're bullish. There's a short term or a normal speed baseline and a slow baseline, right? Again, this is very well detailed in our manuals as well. So do not panic if you're new to it. As I said, even if you could just simply pick up the support resistance concept, that's what's important to me. So you could see the reason I've kind of clipped off a lot of data here is back in April, when Apple was having a drop in February, March, April, that whole phase, notice it was unable to cross resistances. We didn't have a single bar that closed above the blue area. But finally, when we closed above that, that's when we kind of developed traction into the market, right? So that's important that resistance needs to be crossed. So look at this resistance here. This is the Indian Nifty index. You close above it, don't cross the high, right? So finally, when it does close above it and crosses the high, that's when the traction kind of comes in. This was in an uptrend. Where did it all break down? That was support. That's the first bar that breached the support on a close. You broke both the baselines and you come in. So support resistance is again, this is a Forex chart here again. You can see the first time every time it's not crossing the blue. First time it crosses the blue, that's the big one. Every time it holding the support level, the next time it breaks the support, that's the drop, right? The first time it breaks the support, that's support, right? So it's a beautiful study. I mean, it's one of the most underrated studies out there. I would say the ATM support resistance tool, something we very recently released in 2024. So it's a great update we did. So with the ATM4, we added the trend flare suite, we added the support resistance template. And again, for those of you who've been using my studies, I don't just do upgrades every year for the heck of it. I sometimes do an upgrade once in 3 years. And that's really because it takes me a lot of time to think whether what I'm going to add is really adding value and supersedes what was already there and takes you a level higher, right? So for me, it's a quality game. It's not about me giving you 70 studies. It's about giving you 7 studies. So it's really important to me that I try and help you from a practical standpoint. So, if I combined a tool like the SWI and support resistance, here's another combination that's beautiful. You'd understand so well that you can see volume gave you a signal to sell over here, and you can see support levels breaching, right? That all points to a sell. Similarly, I got a buy over here on the SWI, but no resistance being crossed, no blue level over there. There was a blue level that came, but after that, did I close above it? I didn't. So it's beautiful when you blend in. As I told you, let's start looking at a model that collectively does my short-term, medium-term, long-term trend analysis, which is the RMO super filter, something which takes care of volume, which is the SWI, and something which takes care of major trend points on the chart. So how do I look for these combinations? What helps me? So uh, you have the Explorer, which is again a beautiful tool for you to identify where have I got a new SWI buy. So you may be someone saying, give me a point where I've got a new, let's take you back into an SWI chart. Let's say I want to find out where have I got this formation where the previous bar was SWI negative, but the current bar is an SWI positive. You can do that using the Explorer, and you can do that for any interval that you trade. I understand some of you may be using a daily chart, some of you may be using intraday intervals. You can do that beautifully with the Explorer. If you want to have automatic interpretation, as I said, you've got the beauty of the expert advisor giving you that knowledge. And the whole thing is it's very well intertwined. And you don't have to combine it. You can use each study on its own merit too. I'm just trying to show you a combination perspective because I think that's where it would really shine. Uh, and of course, a more recent study that we released here, as I was talking about, is the Trend Flare Suite. And this trend flare suite is probably maybe as a beginner level, I would say that you shouldn't come to this study right away. You come to this maybe after using the ATM suite for a couple of months. So this is more designed around a trader who's trying to look for much faster entries or a little more proactive trader. So we call these flare ups. So you can see the little flame that's going up. This is a flare up of the trend. Similarly, the flame down is a flare down of the trend. But then you need to understand that there's a blue block. The blue block over here tells you I'm in a bullish phase. So if you're having flare downs in a bullish phase, that may be just opportunities for you to actually think of where can I buy, right? Think of it as maybe a call option buy point, or maybe a point where you should not get too excited. Wait for more clarity. So let's look at over here. You got a flare down and you're in the negative zone. Now you can see the red block plots for you on the downside. So these flares are marked by diamonds, right? Blue diamonds are flares up and the orange diamonds are flare downs. What I call SS plus and SS minus. And my code word for that is sweet spot plus and sweet spot minus. So I've called these sweet spots because these are spots where the trends potentially changing. Now I need to identify, are these sweet spots above the baseline or below the baseline? The baseline is this green line. So all that is computed over here into a binary format too, right? So if you're someone who prefers not using the price chart and is more comfortable with the binary format, that is something you can definitely look at. But the whole concept of the flare is someone trying to chase an earlier signal, and therefore, as I said, it may be for a slightly more advanced user where you've used the rest of the ATM suite and you're looking for, much more clarity. So when you look at the flare, it becomes easy when there's alignment. Of course, if you're new, even you can definitely use it. There's a flare up, 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 and you're above the baseline. Those are easy buy points. You got the blue diamonds, they're simply buy points because they're above the so example, look at this blue diamond here. It's below the baseline, below that green baseline. You want to be a little careful on that one, right? You'd rather focus on these ones where they're above the baseline. So the flare has multiple concepts on it. And, I'd probably urge you to kind of read through the manual, go through some of our past videos too. or feel free to reach out to us and we'd educate you on it. But I just wanted to kind of wrap up today and show you how important it is to use a blend of the volumes, the price levels with that support resistance, trend detection through the Armo. And the flare, of course, comes in at a later stage because this even has a beautiful trailing stop concept. For example, this circle that you see is what I call a TSL, or a trailing stop loss. So TSL is if you're holding a long position, you exit when the trailing stop level breaches. So when you're at a more advanced stage of trade management, you do want things like this. So for example, here you're in an uptrend. When you see the brown circles there, that's TSL plus, and why TSL plus? Trailing stop loss for long trades. The minute that the price breaches that level, you get out of long trades. So these are all helpful in your exits as well. So that's why we've made it a little sharper, so you can get more close into that trade. But again, I kind of would say that today we kind of did quite a quick recap into what all are the various studies to use, whether it's from a trend perspective, a volume perspective, a support resistance perspective, the flares, which give you early entry and exit. But I think I'd kind of leave you with the point that let's kind of be consistent with it. Whichever setup you take up, I want you to give yourself a fair shot, give yourself 10 trades in a row, same stock, same quantity, same commitment before you kind of, write it off for yourself. Sometimes we're not fair on ourselves as traders. We assess things too quickly. So I'm going to leave the last 5 minutes or so for questions, Jeff, and you could talk about how users, if they're not already signed up, could take advantage of signing up as well. So let's hand it over to questions and Jeff.
Sounds good. Let's see. Kenneth wants to know, for the built-in RMO templates, which one do you recommend?
What do you mean by which one? There is just one template.
Well, okay. So with the templates that we've got, I actually, the answer that I had was the RMO shaded. For the built-in RMO models, we have the kind of the new views. We have the classic view, the shaded template. So, and then we have the pro mode. I probably would recommend the shaded.
Okay, all right. So you were looking at the various views. Yeah, I think it's a very personal question because each one, the whole idea of the various views is it's not like you're getting different signals. The Armo is still going to give you the same signal. It's just different viewpoints. But again, if you're looking for the super filter, that's of course going to be a notch up. So because of the fact that it's auto adjusting to volatility and almost getting it tailor-made.
Right on. Kenneth wants to know, for the RMO that's in Metastock, should you combine, which explorations should be combined? Like, would you run the bullish zone plus the blue bar plus the blue arrow?
Not pro at it, but of course, if I had to choose one, I just look at the integrated buy and sell setup. It saves me the effort of combining the blue bar, the buy arrow. Of course, you otherwise need to use 3 explorations. If you have the ATM, just the integrated buy does the whole job for you.
Well, that would be all of the questions. So let me talk a little bit about how to get it. Rahul, thank you for being here.
Thank you very much, Jeff, and good luck to everybody.
All right, very good. Let me go ahead and do this. Yes, okay. Let me go ahead and share my screen as well. Oh, that's my webcam. Hi. All right, and then my screen as well. Okay. And let's just go back over to the slides for a second. I'll talk a little bit about RMO ATM 3, and I think normally the RMO ATM 3 has all of the breakout systems, and I believe my slideshow actually talks about all the systems that are included. But normally, if you picked up RMO, it'd be $149. As part of the conference that we're doing a special promo where you can get $99 per month, and that's a promo rate that you can keep forever. With the RMO, there's no commitment on the subscription. So if you decide that you don't want to, if you don't like it, if it's not helpful for you, all that kind of stuff, you can cancel it. You'll get a refund on it. So very, very good with that. In the ATM 3.0, you get the breakout catcher, the counter trend breakout system, the volume based momentum reversal systems, a trend decider, and all of that's normally $99 as part of the thing today. One of the things that we're going to do is last time we created the add-on, we sat down and we did a very special mastermind series. It was a series of, I think, 3 or 4 classes. And you'll get access to that as part of this. You'll get through a 3-month subscription and 3 recorded training classes. That was the retail value on that is $886. If you do it as part of the webinar, you'll get $499 as the price. With this one, the pricing is not available online. What you need to do if you want to take advantage of it is give us a call, 800-882-3040. You can also chat online with us at metastock.com/saleschat. So a big thank you to Rahul Mohindar for being part of the event today. We appreciate it. And thank you for being here as well. So again, the phone number, 800-882-3040 or metastock.com/saleschat. As we kind of move on to my presentation, I want to say thank you to everybody for being here. I do appreciate that. I hope you're learning some things. I hope you're kind of getting some insight and all that kind of good stuff. So I do want to thank our sponsor, Stocks and Commodities Magazine. Stocks and Commodities Magazine has sponsored our events for like the 15 years or so that we've been running them now. Great magazine. They have 1.3 million subscribers. They've been publishing articles since 1982. If you want to subscribe to it, you get access to all of their articles. There's more than 17,000 of them. So you can do that at www.traders.com. I do want to say thank you to Stocks and Commodities for sponsoring the event today. Also want to thank the Traders Forum. You can go to the tradersforum.com. We do sessions every week that are free where you can come in and we'll talk about different indicators, different markets, we'll run a scan. We bring in experts and we talk to them. We do a little bit of a podcast twice a week. We also have an active market or active traders that are in there talking about the trades that they like, the things that they're looking at. And it's been a lot of fun. I'm glad we kind of set this up a couple of years ago. Right now we've got about 1,300 people in there. There's no fee for it. You can just come in, you can join, you can be part of the community for free. And you can join at thetradersforum.com. So there you go. Oh, Bet, I'm sorry, I didn't see your question. But if you want to email me at jeffrey.gibby@metastock.com, I'll get an answer for you. All right. Of course, we are Metastock. Greg, do you want to test out your audio? See if it's working?
I mean, yeah. Does it work?
Yeah, there you go.
It just required 2 reboots and 2 unplugs and replugs and a couple of these and jumping jacks.
I want to let you know I did get prepared. Just in case we couldn't get you back on here. So I did have a Google random number generator. I'll probably keep that tab open because I know that, well, I might need it a little bit later anyway. All right.
Hey, before you proceed, I did want to say one thing. Several people have asked us to share subtitles on the YouTube side of things. Unfortunately, as far as I know, you cannot do that when you do extended long, hour plus streams, and so we can't do that. But if you know a way that we can do that, please shoot me a line and I'll change it. But right now we cannot.
I don't think I'm not sure because I was trying to get a more definitive answer to that. Usually it used to be that if a video went over something like 8 hours, it wasn't subtitlable.
Yeah.
And I don't know if that's still the case. I'm assuming
I did a little research off, when I could this morning, and it still appears. And I actually tried to make it happen, and it just stared at me blankly saying, I don't think we can do that. So
I don't think it does subtitles real time anyway, because when we upload a video, it then processes it. I think it's something that subtitles.
Right. I think it can do it for shorter streams. If I'm honest, I'm not sure, but we can't do it. Sorry. And
too much for them. But I do understand why people like it, because then it can translate.
Yeah. Well, especially for our people who aren't speaking English as a first language, I think it helps a lot.
Yeah, for sure. In any case. Should we do a random number? I'm going to give away another one of Steve Bigelow's books. Steve, great mentor, somebody I learned a lot from. Handle Profit Eliminating Emotions is a book we're going to give away. It's a $97 book. And if Greg picks a number that is your number, then you win. Greg, why don't you spend a minute and make sure everybody that's watching on YouTube knows how to make sure that they're in the list.
Absolutely. First of all, if you're watching on YouTube, the link to do this is pinned right at the top. And if you want to be eligible to win these door prizes, which we do almost every break, just go to metastock.com/traders-conference, or go to metastock.com and just slam that button right at the top of the banner right at the top of the page. It's really simple. It takes just a second, and we won't bug you with too many emails. And if we do, then you can just opt out. Simple.
Yeah, and yeah, there you go. That's all you have to do. If you, I'd do it right away because I'll update the lists probably after my presentation. I'm definitely not going to do it during, but that gives you some time to go up there, register, and then you'll get eligible to win all the prizes.
And they don't have to be. They don't have to be in attendance, right?
Yeah.
They can just. So even if you're not, so yeah, if you know you're not going to be there one day, still go ahead and do it because you could still win.
Yeah, I might even be running over to the FedEx Dropbox to send you this book. I might be. All right. So Greg, what I need from you is a number between 1 and 3,967.
I've already put that in, and according to, wait, what did you say? Give me that number again.
3,967.
Sorry, you
I'm pretty
changed
sure
it.
that's the number. I'm blind in this side and I can't see out of this side, but that is the number.
Okay, and the number I'm coming back with is 1,896. That is 1896.
And the winner for that is a Henry G, also in the US, with a Yahoo address. So we try and avoid saying your full name.
Congratulations, Henry.
So we won't dox you on the internet, but congratulations. If your name's Henry, your last name's G, and you're in the US, and you have a Yahoo address, that's probably, you very, very well could have won this book. So the other thing I would tell you to do is when I send you an email next week and say, hey, I need to verify your address so I can send you a book, respond to that. It's not a scam. All right. Thank you, Greg.
Hey, aren't you the next presenter?
Uh-huh. Do you want to intro me?
I'm going to do a quick intro.
All right.
First of all, I want to, I'm going to guess again, I get it wrong every single time. Jeff has been with the company quite a bit longer than I have. I'm thinking it's now, so I've been here now 20 years. You've been here 26 years?
Started in 1997.
Okay. And the high-low, how many presentations
20.
live do you think you presented for this company?
1 billion.
Yeah, at least, I'm not even joking. It's got to be pushing 1,000, right?
It didn't come in as high as I thought last time. We had kind of maybe calculated, and I think based on like X amount of presentations a week, it might, I think it was like 1,300 maybe. So.
Well, if you just count the where you're introducing other speakers, that's one thing. But even just doing your own presentations, it's got to be in the hundreds. Anyway, needless to say, Mr. Gibby is definitely the international authority on Metastock, a very good trader himself. He does do a great job running the trading group over at, he doesn't run the trading group, running the trading forum over at tradersforum.com. And if you'll give him 60 minutes of your time, I know you won't regret it. Jeff, break a leg.
Thank you very much, Greg. You might regret the first part though, because I am going to legal disclaimer.
No.
Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the event today should be construed as investment advice or the solicitation to buy a security. So hope you enjoyed that. We're going to minimize this. And let's go ahead and get started finally. So I'm just getting some notes over here ready. If you have questions as you go, I can see them. So make sure to ask. without further ado, as Greg said, I started here. You can read this slide. I'm not going to. I started here back in 1997. So I believe, doing a little bit of math in my head, 28 years. I started in inside sales. I didn't know what a stock was when I started, and I quickly kind of learned all about technical analysis, the markets, that kind of stuff. When I started, I started as a sales rep. And for a good decade, if you had questions about how Metastock could help you, or maybe if you're just looking for a way to kind of improve what you're doing in trading, for a good decade, there's a good chance that if you called us or you chatted with us, or if you sent us an email, that you talked to me. I very much enjoyed working with traders and in inside sales, and it was a really, really good experience for me. For the last, I don't know, 15, 17 years, I've had a variety of stuff. I'm in charge of all of the partners and the events that we do. And I've learned a lot working with people that are really good at the markets, people that we've had speaking this week and that kind of stuff. So and anyway, that's me in a nutshell. I do trade quite actively, almost every single day, unless I'm out of the office. And I wouldn't be able to trade as effectively without Metastock. So hopefully you've read this page. There's a couple of things I want to point out. We get all of our data from the London Stock Exchange Group, which used to be Reuters. Reuters sold it to Blackstone. The only point of that is it's an institutional quality newsfeed. They have a lot of really good news, but they also have a lot of really good data. So we will be playing with charts today live. We'll be teaching about charts today live. I want to say that regardless of where you're at in the world, we cover almost 300 different exchanges. LSEG itself covers about 95% of the global market cap. Literally one of the best news and information services that are around. So let's go ahead and get started. There is one thing I want to brag about with Metastock, and I've said this a lot today, and I'm proud of it. 32 years in a row, Metastock's been rated the best software in its price category, including this year, including last year, including the year before that, and then the rest of the 32s. I'm not going to belabor that point, but we're really, really proud of that. And a lot of our customers have been using us for decades. If you're somebody that's been using Metastock for a while now, I want to say thank you. Appreciate it. I hope you get as much value out of it as I do, and I hope you like it just almost as much as I do. So let's go ahead and kind of get kicked off today. I want to kind of talk a little bit about the market. So here's my agenda. I think it's important to have a trading plan. I'm going to talk a little bit about that, not too much. We're going to talk about understanding what a trading plan can look like if you're using technical analysis, and the vehicle. I like that word. The vehicle that we're going to use is the MACD. Okay, I'm going to teach you the MACD. It was designed by Gerald Appel. I'm going to teach you how it's calculated, how to use it, how the 3 common ways that you can use the MACD as a signal, as a way to generate buy and sell signals in the market, as a way to look at momentum and that kind of stuff. And then we'll talk about testing trading ideas, testing those business plans to see how they work in the market. If you have a stock that you want to look at, I'm going to encourage you to type it in now. We're not going to look at a lot of different stocks today, but we won't look at mine unless you don't type in the stock. So, and then we do have a special offer. We've been talking about it to help you get started. So let's go ahead and get started. The first thing I kind of want to ask, and this is going to be kind of a bit of a community question, but they did a bit of a study, and I read an article about this. What do you think is the best profession for trading? So you got a number of answers here. You've got the teacher or educator that I'm going to assign to A. I wanted to make things easy for you. You just had to type in a letter. A would be a teacher or an educator. B would be an engineer or an architect. C would be a psychologist or a psychiatrist. D would be an airline pilot. E would be a performer. And I think artist and musician might actually fall under that same E category, but you can put F for those. So what do you think? What do you think is the best profession for trading? Okay, and let's go ahead and guess. Metastock guesses D, which is pilot. I think he might, he might already know the answer. Kenneth says D. And while we talk about this, actually, I'm going to give you a little bit of a chance to answer, but I know people that have fallen into a lot of these categories. The person coming up right after us is a gentleman by the name of Jake Bernstein. Jake's been in the market. He's been a prolific analyst, and he started as a psychologist or maybe a psychiatrist, and he has some very interesting stories about that. Somebody else I respect a great deal, his name is Dr. Alexander Elder. He wrote Come Into My Trading Room and several other books on trading, but Come Into My Trading Room was one that I would recommend. Not that I wouldn't recommend the other ones, it's one that I've read. So, and it talks a lot about kind of his experiences, but he started as a psychologist. Pilot, over the years that we've worked with different pilots, Greg Morris wrote a book. Oh man, I can't think of the book. I should have this memorized, but he wrote a book on candlesticks. Candlestick Charting Explained. I don't think that was the right one. Anyway, he did a lot of statistical analysis. He was a technician. He taught a lot of people how to trade. When he retired, which was a few years ago, probably several years ago, the way time flies, he was managing about $19 billion for Stadium Money Management, and he was literally a pilot, like literally a Top Gun. Well, Chuck Hughes too was also an airline pilot. So there's some answers. I don't think there's a correct answer, but the result of this study was D. So for all of you that guessed D, Kenneth, Greg, you're correct. Airline pilot. I kind of think why is that? And I think the majority of why that happens is it comes down to discipline. This gentleman on the screen is Richard Dennis. Richard Dennis, and this is what I need my notes for, so I'm going to find him real quick. And you can read them along with me if you want. Richard Dennis was named the Prince of the Pit. He borrowed about $1,600 from his family and made it reportedly into about $350 million trading futures contracts in about 6 years. Obviously famous trader in the 1980s. Yeah, he believed you could teach people how to trade. He believed it.
Hey, Jeff.
Yes.
I'm sorry. You've put a note.
Yes, I'm reading off of that note. You can read along with me if you want to, Greg. It's intentional.
Oh, I apologize. I assumed that was an accident. I beg your pardon. Well, since I'm interrupting you, something on your desk is kind of noisy. I don't know if you have a mouse pad you could use your mouse with or something like that, but that could help too.
No, I'm just generally kind of noisy. That's kind of
okay. But you're doing great. You're doing great otherwise. I'll get out of the way now. I beg your pardon.
I'll try to be quieter, but yet still talk out loud. Anyway, he had a buddy called Bill Eckhart who was also a famous trader, and they had a little bit of a disagreement. He thought you could teach people how to trade. Bill Eckhart believed that you couldn't, purportedly. So they put out some advertisements. I think they put them at Barron's and the Wall Street Journal, and they attracted a group of 23 traders. 21 of those traders were male and 2 were female. In case you're interested in that, those were the initial group known as the turtle traders. It ended up being not profitable, but extremely profitable with about an aggregate profit of about 175 million over 5 years. So there's a little bit of story, okay? And the thing that let me get rid of the notepad now. The thing that they really kind of, the thing that they always talked about was discipline. They wanted to kind of teach people how to trade and follow rules, a set of rules. And here's a quote that I thought was kind of important. I always say you can publish the rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. There's a couple of other quotes over the years. This was in an interview on discipline. And I think that when we talk about the best profession for trading, I think discipline kind of is something that you'll learn as an airline pilot. And then possibly even like a Top Gun. So with your sets of rules and all that kind of stuff. So today I want to kind of teach. I want to talk. I want to teach a little bit about Gerald Appel. Gerald Appel is the inventor of the MACD. Quochen, I think you put in a symbol for RGTI. We'll look at that in just a second. If you have more signals you want to look at, go ahead and type them in. Okay, so this is Gerald Appel. He developed the MACD about 40 years ago. He wrote about 17 books on investments, and he published a newsletter called Systems and Forecasts for over 46 years. In addition to the 17 books that he wrote on investments, he was an avid photographer, and he published 5 books on photography. So the reason I like to talk a little bit about MACD is it's a very popular indicator. One of the things, actually, at the time where I kind of created this as a lesson, our most popular video on YouTube was MACD. What I understood is a lot of people kind of understood a little bit about the MACD, but they didn't understand how it worked or kind of how it was calculated and what it was designed for. That's why I created a class on it. So hopefully you learned something. Some advantages of the MACD is it's objective. So everything that we're going to talk about is measurable. We're not going to be talking about, the interest rate, what might happen in the future, what inflation is going to look like, and what the effect of that is. What we're going to be looking at stuff that's objective, not subjective. Okay, and that's one of the things I love about technical analysis, because if you can kind of keep things objective and not subjective, you can keep things less emotional and more disciplined. And that's, I can think, kind of the whole point of what we're kind of going to talk about. It's easy to interpret. If I go through it properly and kind of explain it properly, you'll understand. And it helps you trade in the overall trend of the market. Okay, I'm going to say that the MACD indicator measures trend and it measures momentum. And we're going to talk about both of those in due time. Okay. Some disadvantages of the MACD is it can be prone to whipsaw, and it is a lagging indicator because it's based on moving averages. So let's go ahead and kind of talk a little bit about the calculation of the MACD, and we will throw those in here. Okay. Quack, thank you for the signal too. All right. When Gerald Appel developed the MACD, he didn't use whole numbers. A lot of people think it's the 26 and the 12-period exponential moving average, and those are close. He actually used a 0.75 exponential moving average and a 0.15. Okay, for the point of simplicity and kind of making sure you understand it, and because almost everybody else uses them, I'm going to talk about it in the way of a 26 and a 12-period exponential moving average. Okay, we're going to go ahead and open up a Metastock here, and we're going to kind of talk about how to calculate the MACD. Okay, so what I'm going to do first is let's go ahead and close this chart out. If you're curious in terms of what the S&P is at right now, it's at about, that SPY is at 660. Qs are up at 590. Let's go ahead and just kind of clean this out a little bit though. So don't need to save the changes to the chart. And what I'm going to do is I'm going to open up maybe a chart or two. So I'm going to come to the Power Console here. I'm going to click on the chart tab. And what I want to do is open up kind of a clean chart. Okay, so those clean charts will do RGTI. And I'm going to actually also just open up another chart while we're doing it. I'm trying to think of which ones I want to do. Really good stock that I've been doing, watching a lot is Roblox. So we'll go ahead and do RBLX as well. Okay, go ahead and open these up, and let's just kind of look at them. Okay, I do have actually the Darvis box system in here. There are a bunch of different systems in Metastock. That's not really what I intended. So I'm going to spend just a second actually cleaning up the chart here, kind of getting it back to just a clean chart. Okay, this is a candle chart. Wow, RGTI really had the run up, had a bit of a run down, and it looks like it's been going up as well. Interesting chart. I wonder how MACD will perform. We're going to find out. Okay, this is a candlestick chart just because that's the template I was looking at. I do want to let you know anytime you want to change anything in Metastock. Very, very simple. I'm going to right click on this chart and go to properties. And if I wanted, I'd prefer candlesticks, but if I wanted to change this, I could change this to bars, candle volume, equivolume, Fibonacci. There's a number of different charting styles that are in here that you can pick from. I'm just going to use candlesticks though. Okay. And yes, bars is a format you can use if you prefer bars. So what I'm also going to do is I'm going to actually kind of apply those moving averages that I was talking about just a second ago, the 13 period and the 26. Okay, so what I'm going to do is I'm going to come up here to our indicator quick list. There's several hundred indicators in here that you can kind of pick from. And one of the things that we've recently added is the ability for me to just type in what I'm looking for, and it kind of, everything right now that says MOV in it is going to be in this list, which allows me to find moving average fairly easily. So I'm going to go ahead and drag this out. I'm going to add 2 moving averages here. It's a 12 and a 26 period. They're both exponential. So we're going to do 12 period exponential moving average. I'm going to go ahead and do the color. We'll go ahead and make it blue. I like to make them a little thicker just so you make sure you can see them. Okay, I'm going to do the same thing with the same indicator, but this time I'm going to do a 12 period exponential moving average. And I'm going to, so that I can refer to them as the blue line and the, I don't know, we'll do the green line. I'm going to make it green. Okay, so go ahead and click OK. Oh, looks like I already did the 12 maybe. Which one is this? That's the 12. Okay, let's do the 26 as a green. Okay. Okay. I'm going to go ahead and plot a MACD on here. So let's go ahead and find that. I prefer to use the MACD with a histogram. So I'm going to go ahead and grab MACD histogram. I'm going to go ahead and drop it on the chart. And while I'm in here, I'm just going to go ahead and thicken up all the lines as we go. That way I don't have to come in and do it later on. Purple. And then histogram. Okay. All right. Cool. Let's talk a little bit about what these are. Okay. If I wanted to tell you how to calculate the MACD indicator, this red line, all I'm going to say is I'm going to take this shorter term moving average, the 12 period exponential moving average, and I'm going to subtract it from this 26 period exponential moving average. The difference is going to be this red line. Okay, it's just the difference between those 2 moving averages. Okay, I think it's helpful to understand that because it kind of helps you understand that you're looking at trend, but you're also looking at momentum. And what I mean by that is, if you're, let's say that you're in an area where stock is moving up fast, the stock that you're looking up is moving up fast. Let's say that this is moving up fast. It moved up about 585%. What's going to happen is, because of that momentum, your shorter term moving average, the blue line, is going to move faster than your longer period moving average, which is your green line. And so what you're going to get is you're going to get a sharper rise in MACD, as opposed to if you're in a downtrend. Okay, I'm going to call this a downtrend. When that happens, the value is going to kind of come together. It's going to normalize. But the faster that this drops, the deeper your MACD, and the faster your MACD is going to drop. That's why it looks at not only trend, but momentum as well. Okay, if you're in an area that's kind of flat, I'm going to call this area kind of flat, your MACD is going to be a lot more shallow. So it looks at trend, it looks at momentum, and that's kind of how. Okay, I think that's important. Let's talk a little bit about kind of the other moving averages, and then I'll talk about the 3 different ways you can use them. Okay, so right here, as we talked about this red line, I'm going to go ahead and kind of just delete this to kind of make it a little bit cleaner on the chart. I like my charts to be clean. This is the red line. We talked about this. Right here, this is a blue dotted line. I'm going to go ahead and zoom in so we can kind of just see it a little bit closer here. This is a dotted blue line. You can kind of see that it's dotted, but I kind of made it fat, so it's not terribly dotted, maybe perforated. It's basically a 9 period exponential moving average of the red line. That's all. It's a moving average of your MACD, stochastic. We're not talking about stochastic today. Gerald Appel called this the signal line. Okay, and what he would do to use, what he would use it for, the main interpretation for the signal line is to help you identify the trend and to get buy and sell signals. And I'll talk about that in just a second. Okay. Before I do that, I want to talk about this histogram, because he did not create the MACD histogram. Okay, I believe, and it's in my slideshow, so let's not go with belief. I believe it was created by Thomas Asprey. And all it is it's, if I took the red line and subtract it from the purplish line here, I'd get this blue line. It's the difference between the signal line and the histogram. Okay, that's it. That's how you calculate a MACD. You take a shorter term moving average from a longer term moving average, and you get this red line, your MACD. Okay, you take a 9-period exponential moving average of that, and you get your signal line. You take the difference between those, and you get the histogram if you want to use a histogram. It's that simple. Okay. Jake, thank you. All right. Let's talk a little bit about, I'm going to go through 3 different interpretation methods for this, okay? Because there's 3 different, there's tons of ways you can look at indicators and stuff like that. There's 3 common ones that you can use. The first one, you use the MACD and a signal line. You can also look at the histogram. But the first thing that we're going to use for MACD is we're going to use it as a way to measure trend, okay? And it's very, very simple. If our MACD is trading above its signal line, it's going to be in a bullish trend, okay? Based on the MACD. If it comes down below its signal line, it's going to be in a bearish trade based on the MACD. Now, what I'm going to do really quick right now so that I can kind of have this help us explain things and help you visualize things. There's an expert advisor in here called MACD. I'm going to attach it to the chart. There's tons of these expert advisors. Like there's one that'll identify candlestick patterns and stochastics and just all kinds of stuff. But this one is going to help us kind of interpret different candlesticks, or MACD. Okay, not candlesticks. Okay. Right here, you can see that the MACD is above its signal line because the histogram is positive. Okay, because we were just subtracting this number from this number. If one's above the other, it's going to be positive. You can also look down here. There's a reminder. There's a trend ribbon. I'm actually going to move it up here. If this is above its signal line, it's going to say that it's bullish. The MACD is bullish. Okay, when it comes down below its signal line, which it did right here, then it's going to be bearish. That's it. That's how. That's the first way you can look at the MACD. Are we bullish or bearish? If we're bullish, we anticipate that the stock is going to rise. In this case, our GTI is going to go up. In this case, it did. It doesn't always. If we're bearish, and we anticipate it'll go down. And in the case of this one, this signal might not have been good as the first one. Okay. The reason that Gerald called it the signal line is because when it goes up above its signal line, it'll give you a buy signal, as you can see right here. Okay. So the reason this buy arrow is generated on the chart is because the MACD crossed up above its signal line. Very simple. Okay. When it crossed down below its signal line, it gave us this sell signal. Okay. That's it. Now, again, this is objective, right? So I can say, okay, well, right here, if I would have sold here, that was about $1.29, which is, to be honest, cheaper than a stock that I'd be interested in. But if I close that position at $1.33, I'm going to lose 4 pennies. So I know, one, that's a losing trade. I know exactly what the losing trade is because I just took it, right? If we sold here when it gapped down and stopped going up, we could say, okay, well, we got in at $1. We got out, let's say we got out at the open on this bar, $12.92, $12.65 actually is where it opened. And we could say, okay, well, we bought at $1, we sold at $12. Was that a good trade? It was a great trade. Okay, we can continue that process. If we sold here at $12.65 and we bought here at, what price were we here? 8. Yeah, that's about 4 points. Not as good as 11, right? But you can kind of get the idea. There's nothing subjective about this. I can know exactly where the buy and sell signals come in. It's completely objective. Okay. And because it's objective, we can test it, which we're going to do in a minute. Okay. But before we get that, I promised to talk about the other 2 ways that you can kind of look at MACD. The other way you can use MACD is to determine if it's overbought or oversold. Okay. And this comes with a caveat because with overbought, oversold, there's a saying, and I don't know who this is directly attributed to. So if you do know it, put it in the comments, because I always try to attribute when I quote people. But the market can stay irrational for longer than you can stay solvent. Okay. When you're looking at overbought, oversold, I like to kind of treat them as an early warning system. Okay. If your MACD starts to move too fast, too far, there might be a reversion of the mean play right there. And you might want to start to get a little bit more protective because things are moving, but you're always going to want to confirm it with another indicator or with price action. Okay, and for that reason, I like the way that they worded the expert commentary in this one, because I think it makes a lot of sense. Okay, to look at overbought or oversold, you see where it starts to highlight. Normally we have the normal green. You notice right here where it starts to highlight the bars blue. That means we've stretched into an area where we might be considered overbought or oversold. In this case, we're selling off, so we might be oversold. My metastock just stopped by itself. Let's hold on just a second. That only happens when we're demoing live. Okay. At that particular time where you start to see it overbought, oversold, you do want to wait for a bit of a confirmation, but it's not a reason that you're going to. I would recommend that you wait for a confirmation. We're going to go ahead and reload metastock. As soon as it comes back up, I'll go ahead and kind of continue off there. In the meantime, let's see, where are we at? Let's make sure it is actually rebooting. Give me just a sec here. Very interesting that it just, okay. I've been running it all day and no problems until I start to show something. What stock were we looking at? RGTI, okay. Oh, it's actually gonna be RGTI.O. And I might just, okay. I'm gonna try not to get flustered here. Okay, here it comes. All right, we'll edit, delete all, okay. I'm just going to attach the expert advisor real quick, and I probably won't do the moving averages. I think we got the point with the moving averages, but I'll definitely put the MACD back on there. So expert, now this is the Darvis box one. The other thing that I really like about Metastock is it makes everything so much easier to find. I can just attach things to my chart. We can kind of see where things are, et cetera, et cetera, et cetera. Let me zoom back in on this, okay? And just pretend nothing happened. I almost had to break out a dad joke though. Okay. MACD histogram. Okay. And we're going to do it with the standard. Okay, we're back to where we were. Thank you for your patience. All right. So right here, yeah, if we start to see the oversold readings, we might want to be looking for prices to get here. We had a buy signal that came in here. That's fine. I want to point out how early, and I think this underscores why you want to use this. I think you should always use a confirmation when you're using overbought, oversold. But I want to show you we're starting to get really overbought, oversold right here. And did the stock continue to go up for quite a distance, right? So again, there you go. All right, so that's the second way you can look at MACD. Is of the measurement of momentum. We're going to have that reversion to the mean. And if we look at the commentary, which is what I was going to do before we were so rudely interrupted, I just put the, I want you to notice this triangle right here, pointing at it, this blue arrow that's pointing straight down, okay? Right now it's bearish, okay, since it's crossed down below its signal line. It's going to give us an idea of how long it's gone down. The price has decreased about 21%, not bad. We're in an oversold ranges, but prices, oversold range, but prices may consider to move lower for some time. Wait for prices to move higher before considering a long position. Okay, that's the second way you can look at MACD. The first is the signal line. The second is overbought, oversold. I bet you're wondering what the third one is. Let me go back into the PowerPoint real quick here because I like to get this quote exactly right. Let me go ahead and start right here. There's a whole bunch of slides I'm going to skip until we get to the last one, which is divergence. Okay. Alexander Elder, in his book, A New Trading for a Living, calls divergence. When you go read the quote, it's about divergence. I always thought it was about MACD divergence, but it's divergence in general. And I always thought it was about MACD divergence because every time we bring in Dr. Alexander Elder and we talk about kind of his methodologies and kind of what he sees in the market, he talks about MACD divergence. But in his book, A New Trading for a Living, Dr. Alexander Elder states divergence are among the most powerful signal in all of technical analysis. When prices make new highs and make fails to make new highs, this is called a divergence signal. Okay, so let's kind of talk a little bit about how you'd see that, and I'm going to teach you as best as I can the way that Dr. Alexander Elder likes to look for divergences. And he says there's a couple of pretty important components with it. He does it based on the MACD histogram. And what he wants to see is he wants to see a cross down below 0, okay, and then a new peak, okay. Here we have a MACD peak. I'm going to zoom in on this because there's a whole bunch of price activity, and I think we're going to see a little bit of a kind of a better view if we look here, okay. We may not see a divergence, usually we don't, but what I'm going to say is right here, we had a little bit of a peak for MACD, okay. It dropped, MACD histogram dropped below 0, and we're not really peaking yet. So I'm going to use this as my second peak. I'm going to use this as my first peak, okay. What I'm going to do is I'm going to draw a little bit of our measurement tool. I'm going to use a measurement tool, and I'm just going to draw the distance between that peak. And I'm going to make a statement that I think you guys can very much agree on, okay? And that is this peak is higher than this peak. We also went down below 0. There's about a drop of about 72%, which isn't a huge drop in MACD, but if you look at the slope of this arrow, it's definitely pointing down, okay? If I look at the same area here, okay, actually, let me do the measurement tool as well, because I like to show off the measurement tools because they're kind of new. All right. But if I was kind of looking at the peak here, I'd say that this value is higher than this value, and by roughly about 4.45%. Okay, this is actually divergence. Okay. What we have is we have a new high in price. Okay, if we're just ignore the rest of this value. Okay, ignore everything else. We have a higher price here than we had at the beginning of our line, 4.45% higher. That is not supported by MACD, okay? This peak is definitely higher. Those lines, I would argue, and I think you could get on board with this as well, this one's going down and this one is going up. That is a bearish MACD divergence, okay? And when that happens, the terminology Dr. Alexander Elder uses when he talks about it, he calls it breaking the backs of the bulls. He calls it the most powerful signal in technical analysis. So that's the third way that you can look at technical or MACD as divergence. Okay. So now I kind of want to step back a little bit and just talk a lot. I'm talking a lot anyway, but I don't use MACD. I think it's a great indicator. I think Gerald did a really good job. The reason I created it as a class is because I like to learn about these things. I like to learn about the markets. I like to do this. But I think the concepts that I want to kind of reiterate, that the reason I like technical analysis is I think that it was pretty simple. I think I did an okay job with that. I think you kind of understand how MACD is calculated, why you're getting buy and sell signals. And I think bottom line is you'll all agree that it's completely objective. We're not looking at trying to make guesses based on what we think earnings are going to do, or what COVID is going to do, or what inflation is going to do, or what the Fed is going to do, or whatever the emergency might be. A pure technical analyst would say that looking at the chart is a shortcut to the fundamentals, because everything that's known about the price is built into the chart. And actually, I mentioned Steve a few times. Steve Bigelow would always say that fundamentals don't matter. What matters in a chart is the way that they're perceived. So by looking at what price is doing, we're looking at how technicals are perceived. Okay. The things that I like about this is I could tell you if we bought here and we were currently long that we're profitable. Okay. I could tell you exactly how profitable we are. It's a number, right? If I told you if we went short here and bought here, I could tell you that that looks profitable too. I could tell you, okay, well, if we bought here at, let's say it was like the low, 14.95, and we bought again at 16, actually, we didn't make money there, okay? But I can know exactly where those came in. I can see exactly what those are. And because it's objective, it's also testable. So if I wanted to say, okay, well, I want to trade RGTA because Quack says it's a great stock, I can know exactly if this is a good business plan to use, or if other indicators would work better because I can test it. I could go in and say, I bought here, I sold here. I sold here, I bought here. I know exactly kind of where everything comes in, right? With Metastock, I can automate that process. I can say, okay, well, out of these methodologies, how well do they work on RGTI? And in fact, I can do a couple of different stocks. I'll throw roadblocks in there for fun. So let's go ahead and just show you how that works. I'm gonna go ahead and come in here to what we call our Power Console. We've got a scanner. I've already talked about how much I love the scanner. I use that thing twice a day, almost every day. Okay, sometimes once a day. I get busy sometimes. Let's talk about the tester though. So what I'm gonna come in here and do is I'm gonna come in and I'm gonna say how well. If I took every buy signal and every sell signal, how did that work? Okay, but instead of just doing MACD, I'm gonna compare that to a bunch of other systems. So I'm gonna go ahead and select all of these ACT systems. I don't think any of them are optimized. I wanna purposely avoid those. Now with Metastock, you can create your own system. Let's do this one based on Bollinger Bands. The Big Trend Toolkit is actually Price Headley's add-on. It's not included, so I'm going to exclude those ones. And I'm going to exclude anything that includes variable optimization, mostly because it takes longer to test because you're testing a lot of different values, okay? Let's throw Ichimoku in there. I'm just going to get a few of these, okay? I'm going to come in here actually, and I'm just going to, the rest of them I'm going to select are going to be the Performance Systems Plus systems. Okay. And what I'm trying to do is just make sure that all of the ones that I'm including are the ones that are in the software. Because you can create your own, you can combine indicators, there's a whole language. It's easy to actually write for, but I want to do stuff that you can use out of the box. I know in Metastock there's about 300 methodologies that are included that you can test out of the box. I've selected about 100 of them, and I think that's good for what I want to show. Okay, for the instruments that we're going to use, of course, we're going to use RGTI. Let's also do roadblocks. And I didn't get a lot of symbols. Let's throw Tesla in there. And maybe Meta, although we were the original Metastock. Okay. What I'm going to have the software do is I'm going to have it take these 100 ideas. I'm going to have it take all the long trades and all the short trades that were generated off of them. And I'm going to have it test RGTI, Roblox, Tesla, Meta. I'm going to have it go back 500 records, which is about just under 2 years. And I'm going to say for the trading, I'm going to say we're going to start with a hypothetical account of $10,000. And I'm going to have it trade a default size of 75%. Okay. For broker, I'm not going to put any broker points in there. We don't. And I'm going to have it use realistic market prices, which means it'll buy on the open of the next trading day. Okay, or the next trading bar. I'm testing days right now, but you could use this intraday if you have Metastock real time. Let me go ahead and start it. Okay, because the sooner I start it, the sooner I need to start to get to a point where we're wrapping up a little bit, right? An hour goes fast. While this runs, I'm going to have a little bit of my coffee. And we're running about, something in there. We should be running about 3,000 tests. But looks like I did get something in there that's optimized because we're running about 8,000 tests. So something in there is doing a variable optimization. I missed one, okay? A variable optimization, if you're not familiar with the terms, it just tests a lot of different variables to see what works better. Like, so for example, we were talking about the 13-period moving average and the 26. An optimized system might say, well, instead of 13 and 26, let's test everything between 10 and 20, and we'll see how that works. And then for a shorter one, for a longer one, we'll use maybe 20 and 100. That's what variable optimization uses. And I usually do not do that in the demos just because it takes a little bit longer because we're running 8,000 tests right now. And it's kind of checking through them. You can see how fast it's going. For the 2 years of data, it's gone almost 65% of the way. I think I'm going to stop it though right now, just so that we can kind of show results. Let me go ahead and hit cancel. And then the reports to where they've actually been run up to will be here. Okay. Now, right here, what we've got is these are the different systems. You can see the Ichimoku using the future cloud on this particular batch of securities. We did 3. You can do the S&P 500 if you want. You can do all the stocks and kind of get a lot of information about how well something works and what the drawdowns look like just by doing this test. But if we would have used the Ichimoku future cloud over 2 years on those 3 stocks, we would have had an average percent gain of 696%. And I've sorted them. These are the profitable ones. These are the unprofitable ones. Okay. And the idea here is I want to kind of focus on the ones that are profitable. It's also going to give us the amount of trading. So on our average, we had 8 trades on that methodology, 4.3 to 4.3. And this is all average numbers because we're looking at 3 stocks. And we get the next one is the derivative moving average. The next one after that is ETS trading system, and you can kind of go down the list. I'm curious as to where, because we spent a little bit of time talking about MACD, like 40 minutes, where that actually kind of comes in. And I'm not, oh, there's one based on MACD histogram, and it's right here. It made about 23%, which isn't too shabby. But what I want to be able to do is see what works really well. And with the system tester, I can see exactly what works really well. Now, that doesn't mean it's going to continue to work going forward. But if I'm going to learn about different indicators, I would personally prefer to learn about indicators that work. I also want to talk, because the Ichimoku, actually I do another class on the Ichimoku, but the Ichimoku was the best one. I wouldn't necessarily say that you should open up an Ichimoku chart and start trading with it. I would say in this case, you should learn about the Ichimoku method, why it's giving signals and that kind of stuff on the chart. Okay. I do like to look at how many trades. This one made 8. If we're at 172 trades over 2 years, I kind of think how hard do we want to work? I don't have time for that. Okay. 8's okay. 8's about 1 every quarter, right? Over 2 years, that's 4 trades a year. That's right. Let me go ahead and click on view right here. And actually RidgeD worked really well. Tesla didn't. Meta, and we can kind of get, and then Roblox, I put the wrong symbol in. It's actually Roblox, and it trades on the NASDAQ, so it's a .K, so we didn't get a result on that. So there are all kinds of metrics that we can look at. If I click on view right here, it'll give me my total trades. It'll give me my total long trades, my total unprofitable trades. There were 8 profitable trades over 2 years, 4 unprofitable. It'll give me an idea of what our average profit was, what our average loss was, how many losers we had in a row. There's all kinds of different metrics in here. I'm trying to highlight a few of them just because I don't have a time to talk about all of them. If you click on health though, it'll break down all of them. Okay. For performance, we outperformed buy and hold by about 190%. Our profit loss index was 96.83. Our risk reward index was 100. Okay, we can kind of go through, again, there's all kinds of different values. I do like to look at equity. You can kind of see one of the reasons with RGTA, we had that huge run up, right? And that's one of the reasons we had kind of like a big equity rise right here. So that's something we want to take into account. It didn't exit before that gap down, so that's why you had this big drop here, but it looks like it held on. So we can kind of get an idea of what our equity line looks like as well. Okay, if this is something that I like, if I go in and look at it, again, I would recommend that you use the expert advisor and learn a little bit about why you're trading, because as I said at the onset, discipline's everything. I think most people, they might spend a lot of time actually looking, and even if they do the core things of learning about how to trade and that kind of stuff, we did a bit of a podcast last week with Greg Capra, who just talked, and he said like the biggest place where people struggle is money management. One of the things that kind of And I think that goes directly to your business plan, and it goes directly to discipline. So, because, as Robert Deal used to say, you can win 9 trades in a row and still go broke. Money management. All right. Anyway, let's say I wanted to learn more about Ichimoku, and I do a whole hour-long class about Ichimoku. You know, Ichimoku is a really cool methodology. It was created by Goichi Hasada. And we're certainly not going to, there's all kinds of stuff that you can look at. But if I wanted to learn more about Ichimoku, I'm going to come in here. There's actually a template. I'm going to apply the template, which will apply all the charts. And in the new MetaStock, we have that Ichimoku thing, and it's going to draw the cloud on there. It's going to give you the buy and sell arrows. And if I come in here, we just got a buy signal Friday. I was going to say yesterday, but it wasn't yesterday. But if I want to learn more about what Ichimoku is, I'd recommend you kind of learn more about what you're doing. There's all kinds of stuff that goes into Ichimoku. But right here, you can see that it's bullish, 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 bullish. And if I had a little bit more time, we could kind of go in and read about why the TK signal is bullish, what it's looking at, why the close above the cloud. But this commentary is breaking that down for you. And I think that's cool. So in any case, of course, there's scanning. We've talked a lot about the ability to actually scan through ideas, find the stuff that works for you, all of that kind of stuff. Again, MetaStock itself has been rated 32 years in a row the best software in its price category. The award that we get is from the readers of Stocks and Commodities magazine, not the Redditors, the readers, they vote. And this year we won the 32nd time in a row. So I do want to kind of give you a special offer to go ahead and get started. And the software that we're going to talk about is available as a lease. So there's no ongoing commitments. If it's helpful for you, you're going to keep it. A lot of our customers have been with us for decades. So I did talk on the outset how we get all of our data from LSEG. They spent over $1 billion designing the platform that they work with. They have some of the best news on the planet that's powered by Reuters. We didn't even talk about it today, but as part of the package, if you get real time, you're going to get a product called Zenith. Zenith is a product that we call it MetaStock Zenith, but it was developed and designed to be a competitor to Bloomberg. And to kind of give you an idea, it's a good competitor to Bloomberg. To give you an idea of Bloomberg, I think it's about $1,800 a month per person per license. Okay. You can get everything that I talked about today, plus some of the best news in the industry, some of the best information in the industry, and the cost for that will be about $210 per month. Okay. We also have a DC version. The DC stands for delayed charts. With it, you can do daily, weekly, monthly. You can't do like 60 minutes, but all of your charts update during the day. So you get like about a 15-minute delay on most exchanges for basically that. You can scan during the day as well. And it's only $75 a month. So if you just want to be able to kind of use MetaStock, use the stuff that we've talked about today, $75 a month, I'll get you the software that's been rated #1 in its price category for basically 32 years in a row. Okay. There are some things that we've thrown in, and these are just the bonuses we've included with the last MetaStock. I showed you briefly the Ichimoku Master. That used to be an add-on. I bought it from the creator, and we included in MetaStock. There is a gap identification system. I'm going to call it a $300 value. It'll help you identify and scan for gaps. Includes whether that's gap verified by volume or not, and a simple commentary to help you understand what gaps are. We also do throw in the Michael Marmer's ETS, which is another system that was very, very popular and is very, very popular, and it's just free as well. So, and that's a $299 value. It's testable. It gives you buy sell signals. All of that stuff is included. And we also included as part of this one, Jake Bernstein's expansion contraction indicator. Now, this isn't the full system. It doesn't have the indicator. It doesn't have the expert advisor and the commentary and the scanning, but we're about to start talking about this, and I call it the Swiss Army knife indicators because it helps you look at long-term strength, short-term strength. It tells you if the range is expanding or contracting. We're going to get into a whole thing on this, but Jake just allowed us to include the indicator. Jake and Brian allowed us to include the indicator for free. So we do want to make sure you understand how to use it. It's a subscription. You can cancel it at any time. We don't want you to cancel. That might sound crazy, but we want you to join our customers that have been with us for decades. Like I wouldn't be able to trade well without Metastock. And if you get half the value I do out of it, it's going to be well worth the price that you pay for it. So the Unleash the Power of Metastock is 14 videos that are going to walk you through how to run scans, how to put lines on the chart, how to manipulate your charts, how some of the more popular systems that are in Metastock, all of those are going to be included in the Unleash the Power of Metastock, which is $100 value. We're going to include it for free. We want you to we want to make sure that this works for you. In fact, we want to make sure so much that it works for you. We're going to sit down with you. One of our white glove reps is going to sit down with you. They're going to answer any questions you've got about the program. They're going to walk you through things that you can do with the program. If you want to learn more about testing, they'll do it. They'll walk you through that. They'll walk you through scanning. It's a free one-on-one session where that's all they're going to do is kind of make sure you know how to do your charts and get everything up and running. And we started this several years ago. It's been extremely popular. You do also get unlimited access to our support team. So if you have questions, you can call them, you can chat with them, you can give them a phone call, anything, whatever is the bet. If you send them a letter, they'll send you a letter back. But we don't do much of that anymore. But anytime you have questions, we actually keep more people in our support desk than we have in sales and marketing combined. And one thing I find extremely impressive is they survey everybody that comes in for support. And a lot of times the surveys get 100% satisfied, which when was the last time you called a support desk? Were you satisfied? 100%? Anyway, unlimited access to them. Anytime you have a question, you can call them, you can chat with them, all that kind of stuff. So there are a lot of software programs out there that have been around for a couple of years. You need to try this one. There's a reason we've been working on it for decades now. There's a reason year in and year out, it gets rated #1 in its price category. And I think it's something that's going to be helpful for you. Okay. The offer that I'm going to do is if you buy a month, we'll give you the second and third month for free. Okay. Right now, as we're recording this, it's September 15th. Depending on where you're at, it might be a different day. Like maybe it's the 16th where you're at. However, what we're going to do is if you pay for a month, so $75 for the low cost version, for the DC version of Metastock, if you pay for that, or the real-time version, it doesn't matter, but let's, for the purpose of math, let's say you pay $75, we give you all that stuff, all the support, all of the one-on-one, the training, all of the bonuses. We're also going to give you the second and third month for free. So that means right now, if you sign up right now, you'll be running till 12/15, almost Christmas. Okay. It's weird to think that that's just 3 months away, but that's where we're at. So, and again, so that's about $25 a month just to try it out. If you don't like it, if it doesn't work for you, very low risk, you can cancel your subscription, but you're going to get Metastock DC. You're going to get the data you need to power it. You're going to get that installation support, all of those bonuses. Normal value on that, $1,320, $75. No commitment to keep it if it doesn't work. So you can do this in a couple of different places. Give us a call, 800-882-3040, metastock.com/salespchat, and metastock.com/conf-promo. Whew. All right. I hope that was helpful for you. I hope you learned a little bit about technical analysis or MACD. I also hope you try Metastock. I think it'll be helpful for you. So let's give away another prize. I'm not really ready to do this, so bear with me for a second. I'm going to sign into my other laptop over here, and we'll go for a prize real quick. Okay. The winner of the next prize is a prize from John Thomas. John Thomas is going to speak a little bit later today. He does the Mad Hedge Fund Trader, and he always has a pretty interesting take on the market. we're going to give a 6-month subscription to a service which is normally valued at $9.97. John does a great job. We really appreciate kind of him coming in, talking in. He has a little bit more of a global macro view of things and the way things are going to look. So if you're lucky, you're going to kind of get that. Want to reiterate, now would be a great time, if you haven't registered, if you're watching on YouTube, to go ahead and register, because I'm going to freshen up my list after we get Jake and Brian started. So since Greg had to stop away for a doctor's appointment, he'll be back a little bit later. But what we're going to do instead, let's see, random. Okay, I left this up. We're going to do a random number drawing here. So if you register, if you're on YouTube, there's a pin comment. It'll take you to metastock.com. You can also just go to metastock.com and click on the conference at the top. It'll take you to a registration form that will allow you to register for the event. If you're watching a GoToWebinar, don't worry about it. You're already registered. You're already on my list. If you're watching this on YouTube, hey, make sure to like and subscribe. It helps a great deal. And if you have any questions, asked. So what I'm going to do now, the minimum number is going to be 2, actually, because I have a header row on here. And then the maximum number will be 3967. It's really small. I need to go ahead and just generate a random number, 800. That doesn't seem that random to me, but I'll take Google's word for it. Let's see. Let's go to see who that is. That's a Michael. Oh, I'm sorry, a Brock M. In Canada. So if your name's Brock and your last name starts with an M, you just won a prize, maybe. Unless there's a couple more Brock M's on there. So in any case, congratulations. I'll make a note of that. What'll happen if you win a prize, you have to say hello. I want a prize. If you're watching live, Michael, let us know, because we love it when people are watching live and they still win. So in any case, but you don't have to be present to win. I do want to say thank you. We talked about Stocks and Commodities magazine. I do appreciate all the work that they do. You can visit them at traders.com. I also want to encourage you and invite you to join our forum. We've been putting together a little bit of a forum. We've been working on it for a couple of years. It's growing. Got about 1,200 members up there, and a lot of people come up there. They talk about how they like to trade. They talk about symbols they might be interested in. Very, very active chat. Lots of resources about learning about the markets, and it's all free. All of this stuff that there are some classes that you can buy on there, but everything I just talked about is free. Like, you can join the community, you can be part of it. We'd love to see you there. I'm there, not as much this week. It's just because I'm a little busy this week, but thetradersforum.com, you can go ahead and kind of join the community. Of course, we are Metastock. All of the promotions that we're talking about today, you can find at metastock.com/conf-promo. If you have any questions, give us a call. We want to answer them. 800-882-3040. Our next guest is a twofer. Jake Bernstein's a great friend of mine. Jake did his first trade in the late 1960s. I can't remember what it was, but he could tell you if he wants. He's written a plethora of books on the market. He publishes a newsletter that he's been doing for a number of years. Very, very good mentor, somebody that's been doing it for longer than I've been alive, literally. He's joining us with Brian Latta. Brian actually kind of helped Jake design the JBXC, and they're going to talk a lot about how that works and how to use it. So without further ado, Jake, Brian, I assume Brian's the one I'm sending this screen share to. How you guys doing?
Okay, how about you?
Doing great. I just sent over the screen share to Brian.
Okay.
Although, Brian, I don't hear you just yet.
I'm here.
Oh, now I hear you. And I can't
No.
see your presenter view, though.
That's what I thought. So let me just change that.
There you go. Perfect. I'm going to let you guys take it from here. I've been talking for an hour. I need some water. Your turn. Go.
Thank you, Jeff. I'll take the lead here.
All right.
Thank you so much for allowing me to be here with Brian. You are indeed the most relaxed guy in the business. always ready to make a good joke, always ready to see the best in people and the best in trading strategies. And it's my privilege and my honor to be here again with Metastock. I've known you for many years, Jeff, and please pardon my voice. Got the voice of a man who's got allergies in California in a bad allergy season. So thank you for joining me, Brian. We'll see what we can do to talk about the expansion contraction, which really is something that you deserve all the credit for, not me. So it should really be called Brian Latta's expansion contraction, because you built it from some of my ideas and you've done a beautiful, fantastic job. So let me do the best that I can with my failing voice. And Jeff, thank you again for the introduction and for the confidence you have in our work. I've known Jeff for many, many years. We've seen each other all over the world at Metastock conferences. I can truly say, if you're looking to get a piece of trading software that's very clear, consistent, contains the expert advisor, which will tell you what you're doing and why you're doing it, this is the thing for you to do. Metastock is a great product. It's been around for many years, almost as many years as I've been around myself. So as Jeff said, I made my first trade in the summer of 1967. I've been trading since then, and I'm still trading now. I'm not a wannabe trader. I'm not an academic. I'm a real trader that makes real trades. I'm not a day trader, even though I wrote the 5 best-selling books on day trading for McGraw-Hill, because I believe day trading is not what it's cracked up to be, and certainly short-term trading, as far as I'm concerned, is much better, especially with expansion contraction. So I'm just going to say a few words of expansion contraction, and then I'm going to let Brian take it from here, because he's much better at this, because he's the one who designed the methodology based on some of my concepts. So I'm going to slow down a little bit because I tend to talk too fast. I've got a lot of information that I want to get out to you, but I'll do that nice and slow. Because I have met traders all over the world, traded all over the world, have clients and mentoring students all over the world, I've come to understand more about traders than I have about markets. Because really markets are very simple. Strategies work or they don't work. And with products like Metastock, you can test them and see if they work. So you have the facts that you need. Unfortunately, traders don't want facts, they want profits. They want rules, but they break rules. They don't learn from their mistakes, they don't learn from their successes, and that's very unfortunate. What I'm looking for is a pure system. What I was looking for 15 years before I found it was either buy, sell, stay out, give me my target, give me my stop, give me my profit maximizing strategy. That's all that I need. The beauty of the expansion contraction strategy is it can do all of those. So Brian, if you would be kind enough, since you have control of the presentation, bring up the expansion contraction chart for me. I'll talk about it briefly and then you can come back and explain what it really means. So let's just keep going. I want an actual chart. That's good enough.
Oops, sorry.
So here we have a very simple representation of expansion contraction. There are a number of other indicators on here, including the moving average channel, Kellner bands, and something that Brian will explain. But for me, what's of interest is the bottom of the screen, expansion contraction cone, as I call it. For me, after all the trading I've done, and believe me, I have done a lot of trading and still do. For me, it's very simple. It's either red light, green light, or no light. So when the expansion contraction cone, which you see here in green, is green, I'm long the market or I'm buying support. When it's red, I'm short the market or I'm selling resistance. For me, it's that simple. Brian, who's the brains behind this, has taken my concepts and turned them into something very meaningful here. He will explain what the red line and the green line mean inside the cone. But for now, it's very simple. Brian, can we go to slide number 13? I think you have the same slide numbers as I do. There we go, there's 13. The one thing that we know about traders, especially these days, is this. They love to day trade. Why? Because by the end of the day, if they've got a profit, they feel as if they've gotten away with something. They've done something really great. Buy and sell, trades that don't exist with money you don't have. What a concept. Expansion contraction is a beautiful strategy if you're a short-term day trader or a position trader, because if you're selling, when the bars turn red with the cone, and you're staying short till it turns long at the right of the chart when the cone turns green. It's a beautiful thing. I've taken a 1 minute chart, not because I trade a 1 minute chart. I wouldn't do that, but most people do. Many people do. It's either a 1 minute or a 3 minute chart. Let's see the next one slide, Brian. So here's another one. Go back one. Here's another one. If you don't want a day trade, here's a daily chart, and you'll notice the considerable number of ups and downs in Amazon could get you in and out of the market many times, but you'll notice the stability of the cone expansion contraction at the bottom of the screen. Once it turns red, it tends to stay red for a long time. Once it turns green, it tends to stay green for a long time. And the arrows, and the crossovers in between the cone give you short-term indications within the bigger trend. Let's see another one of my charts, Brian. Let's keep going to the next one. There we go. Here's another one. If you want to trade weekly, you can definitely do trade weekly. And the beauty of this is the analysis of the expansion contraction indicator on the left by the expert advisor tells you exactly what it's all about. Support, resistance, trend, everything you need to know. So for me, that took all of my work and simplified it into a very easy approach, completely mechanical. That's the good news. The bad news is that most traders, unfortunately, are not interested in this. They just want to be told what to do, and then they go ahead and do what they want to do. That's very unfortunate, because if you had the discipline, you'd be making money, or more money than you do right now. The good news is this: if you have an objective system that's completely clear and requires zero interpretation, no fundamentals, no news whatsoever, that's what does it. And that's certainly what does it for me. So if anyone said to me, what have I learned in my 50 plus years of trading? It would be that you want clear rules so that 100 people who have the rules looking at the same information will reach the same conclusion 99% of the time. If you can't do that with your trading strategy, you're not going to make as much money as you could, or you're not going to make any money ever. And that's the bottom line. I hate to be too frank and too stark about it, but it is the truth. So Brian and I have been friends and business associates for a long time. He is truly a great coach, a great options analyst, and will tell you any option strategy that you need for any specific trade. And he does so very clearly and effectively. So I'm going to introduce Brian and let him take it from here, because he's the brains behind this whole thing. I'm just the guy who came up with the original idea, but not for the expansion contraction cone, which, as I said before, is one of my favorite tools, and certainly the way they do it here at Metastock is really fantastic. So Brian, it's all yours.
Thanks for that, Jake. Actually, I'm going to go ahead and go back a few screens here if we can. Oops, I think I just passed it. A lot of the original screens you're seeing are ones that we've done before, and I'm just going to briefly touch these because if you're following the previous webinars that Jake and I have done, we've outlined all of these same things several times, including what are the individual components of expansion contraction. As Jake mentioned, the cone or the cloud, the large either green or red shaded areas are showing us the trends. I've also implemented the standard deviation lines on here over time to help us identify when we're weak. Price would be, say, within the normal range of price, and or strong if we're more than a 2 standard deviation move when price expands rapidly. Like in this instance, we'd be in a strong uptrend. So wanted to use some statistical measurements with the long-term trend at the green or red shaded area, the cone, as Jake mentions. Plus there are the green and the red line, which are the short-term components of expansion contraction. And so we did put down all the definitions on here and also input on here at least a simplified introduction. As Jake was mentioning, it's basically strong up indications on expansion contraction will be plotted with the darker green bars. This way it's color coded and you don't have to look down at the indicator and guess what it means. If you're not familiar with it, it's as simple as dark green, strong up bars, Light green would be weak up bars. In other words, we're short-term bearish, but long-term bullish. We have weak down or light red bars where we would be in a downtrend, but currently short-term bullish in a long-term downtrend. And finally, the fourth condition, strong down, we just see dark red bars on that. And in actually these conditions, including the trigger bar to take a trade, is just simple visual confirmation. Ideally, it just is what it is. Trying to make this as simple as possible. As I mentioned, it does have the normal range using standard deviation instead of getting into that calculation. It's just telling us what's normal. And if we're above normal, we could be considered to be strong up. Or if we're below normal, we could be considered to be strong down. So we did have the example charts that Jake was referring to that not only show the Bs and the Ss, large green Bs and red Ss for the buy and sell setups that are trend reversals. And you'll also see some small lighter green Bs in this uptrend, which are continuation trades. After we went short term down, as you can see through Jake's moving average channel, which this is based on, expansion contraction is identifying how fast price is moving either up or down through Jake's moving average channel. And I just basically added in Jake's setup, trigger, and follow through rules to identify setups and triggers. And the follow through on that is identifying profit targets, stop losses, and in advance, back tested over time, and shown to be consistently profitable in many different timeframes. I'm going to show some examples a little bit later on that. So go ahead, Jake.
Sorry to butt in.
Jump in anytime.
Thank you. The moving average channel is an indicator that's available on Metastock. So if you're not interested in the expansion contraction at the bottom of the screen, which I believe Jeff offered as part of the deal, no charge, the expert analyst will tell you what the expansion contraction actually means. But if you're interested only in the moving average channel, that's an indicator that's available right here on Metastock very easily. Well, let me say one more thing. Why is expansion and contraction important? You will notice when stocks begin to top or when futures begin to top, the trading range will become very narrow. The traders are afraid to follow prices higher or lower. So the expansion of the range or the contraction of the range, very important leading indicators. Now I'll give it back to you, Brian. I'll shut up.
Oh, please jump in anytime, Jake. And I think what you are saying there is that the expansion contraction is also very friendly with divergence setups. So divergence you've also coded out using momentum and other indicators, and then expansion contraction, which is based again on how fast price moves up or down through your moving average channel, is also, as I said, very friendly to divergence setups using your same rules. So basically, that's what I've learned was the setup, trigger, follow through, and applied it to a different system that was exploiting the rapid or slow movement of price in these. And as you can see, as trends move higher significantly, the cloud expands significantly. And as Jake was saying, in these areas that are pulling back, giving some opportunities to buy at the lower moving average channel or on continuation trades, we see some contraction on that as price is weakening. In an uptrend, we see coded all out, all green throughout the whole process on here. So as long as the cloud in the background or the cone remains long-term green bullish or red bearish, we're in a trend. And over many different symbols and time frames, the average trend was some 24 to 32 periods. Although I'm going to show you a few examples where the backtester in Metastock just shows all that data and information. And we did take a look at the short-term day trading. Obviously, there are going to be times where price may move a little higher and reverse. And yes, there will be losses statistically over time in different tests. This has been between the 60 to 70% average win to loss ratio. It meaning expansion contractions, main buy or sell setups on reversals. But since this is a 1 minute chart, you can see in here the timing is approximately 9:53 or so in the morning. We don't need to be precise. but there's a 1 minute trend that lasts all the way past 11:11 on there, and we don't know too many platforms that might keep you in over an hour on a 1 minute chart in a trade. So that will definitely show you some longer term moves with some opportunities to either sell at the upper band, sell resistance in a defined downtrend, are Jake's rules also, and I've exploited those. And a second opportunity as price pulls back up to either sell resistance at the upper band or take a continuation trade on here, as ideally we can get in on initial setup, take some profit, add to the trade, take some more profit, add to the trade, and take some more profit through this process. And I will say typically the last continuation trade, or possibly even selling at resistance in a downtrend, may be a loss, but typically that occurs when there is a trend reversal. And so far, the statistics have shown on reversals getting in at resistance has been small average losses due to how quickly expansion contraction will show prices moved up strongly through the moving average channel and trigger some of Jake's other strategies as well as this. And of course, it is taking into account Larry Williams' accumulation distribution as an additional trend filter, since many of Jake's strategies use that. I've included that here in the rules to help identify the trends up or down and strength from a second non-lagging indicator. So one that I said at the beginning, expansion contraction is different from most indicators because they lag. They might require 10 periods to create a moving average, and that's a lagging type indicator. Jake has mentioned in past presentations that moving average crossover strategies lag enough to be inconsistent for a primary strategy. And so the benefit here, of course, is that we can exploit the conditions that expansion contraction are giving us for some longer term positions on that. So Jake, did you have any other comments that you wanted to make on these charts, including with the moving average channel or any of your other systems?
No, you're doing great, Brian.
Fantastic. So on that, right, I'm just going to get over here to basically say the way I look at this is you should always know what to do. You should be able to tell when conditions are weakening or have reversed. All of these rules have been back tested. You're going to see a couple of examples a little bit better. And again, when I say generally with win more often, the tests that have been run have been in the 60 to 70%. Occasionally a little more or less, but most of the data is in there. And the second part of that is that the average gain divided by the average loss has been positive on that. And of course, ideally, you're looking to trade some of the top weighted stocks in strong trending sectors, as that's what I use for a rotation into and or out of things, as you know, why trade trending strategies in stocks that aren't trending. So we definitely need to have that. And for me, I do use that Keltner channel setting to identify, since that's been tested well and used originally, of course, by Chester Keltner, who created the whole thing to help us identify the average range of price. I've adapted those settings a little bit, as well as price extremes or for profits and targets on that. So, but as a coach, this last statement, almost everybody that I get in coaching comes on and say, well, I'd like to be more consistent and I'd like to have better entries and exits. And of course, this was the idea and why I basically exploited Jake's setup, trigger, follow through process, as that process is proven. And certainly if you're trading any systems that don't utilize that process, it may be a bit problematic for you in the long run. So I am going to just briefly here pop through a bunch of these charts here, if I can get through these as I set those up for Jake. And I'm going to just go back and share my screen again. And so right now you should basically see the same basket trade results as we continue to do these presentations. I've been showing walk forward basically results on this basket, and this has been the same. Now, I didn't include 2024's results here because I included them in previous webinars, but we do want to just see, hey, if we're trading these based on expansion contraction setups, Apple is not doing as well as last year, but that's typical. Sometimes we have better performance year in, year out, and poorer performance. So far, Apple has not been what we would call a real trending stock this year. But I did want to post these results because these are based on, as I said here, not only the expansion contraction buy or sell setups, but the swing trade buy or sell setups and the divergent setups. And all of those rules are in previous webinars that we've done. So I'd recommend definitely getting onto YouTube, subscribing to and liking Metastock's webinars, because you can go back and see that this has been walked forward in essence without some interruption. So stocks are doing well. I also trade currencies. This year, the Aussie dollar and the Japanese yen are underperforming. The other four pairs are doing well. And I'm going to show some more statistics here in a second to see longer term. So on this one with the same basket of stocks with the, these are basically price adjusted or weighting adjusted stock trade setups and the totals over the last 3 years. With Apple, the win-to-loss ratio, the net gain on that one, I have included a Palantir because basically recommended rotating into Palantir last August and out of Microsoft. It stopped trending. That is, Microsoft stopped trending and Palantir was. So Palantir's 1-year results are obviously excellent, and also ran through the win-to-loss and net gain on the currency pairs on that, and that is all green. There have definitely been some drawdowns. Currently, as I said, the Japanese yen is down and has had some consecutive losers in a row. It was actually trading, as you can see here, above the average over of the other pairs on here, but we definitely want to keep track of what we're doing and making sure that that's win to loss and profit to loss ratios are giving us growth.
Right.
Sure, go ahead, Jake. Let me to back up one screen.
No, not necessary.
Okay.
Just one thing. I have personally mentored hundreds of students over the years. People look at a chart and they say, oh, well, here's a chart. It's a 1-year chart. I would have bought here. I would have sold here. I would have put my stop here. I would have bought here. I would have gone short here. That is not what it's all about. You need to get in there and really do it in order to experience what it's like. So I tell people to take the 10 trade challenge. Make the next 10 trades 100% by the rules using a very small position, even 1 or 2 or 3 shares. See what would have happened. Did you follow the rules? That's really the only way to make sure that you're doing what you're supposed to do and to learn how to trade the right way. Otherwise, it's just an estimate. It's just a guess. It's just your personal perception of what you would have done, because what you say you would have done is not necessarily what you really would have done. I know I realize that might sound like a lot of double talk, but it's very important to get in there and follow the rules for at least 10 trades in a row and see if you really have discipline. I'll let you have it back, Brian.
Thanks for that, Jake. And of course, I've coached over 4,000 individuals and those looking to become, permanent full-time traders, and others that are just doing it more part-time. But that's the main thing there, is that they all have that same process of having trouble, A, following the rules consistently, and B, even in a 10 trade challenge, say, if I can get them to get through at least 1 trade following the rules, that's a positive, because it is harder to follow the rules than it sounds. And I bet everybody here, if they think about it, they can definitely remember when they didn't. And I'm going to add myself to that one. I'd love to say I was perfect and I always follow the rules, but there'll definitely be that time or two where your brain kind of goes, yeah, but this time it's different. And I have learned that unfortunately that process then means you're inconsistent. And so, and it's hard to be disciplined. And that's the hardest thing to teach. Would you agree with that, Jake?
You betcha.
So anyway, in running through the Grok, again, just using AI in the past, this was the same as before. We just wanted to define goals and risk tolerance, pick the markets and time frames you're trading, study the data, and back test. Now that means you need rules. And as that says here, of course, it did it a little out of sequence. It said add rules. Well, you can't have rules and back test if you don't have them. So first you got to add rules. And you're saying it's not a hunch, it's a system. And when I started trading, I started trading hunches and quickly realized that that was not consistent, as I could not predict the future with any degree of reliability. It will also run through here and talk about moving average crossovers and even some indicator comments on here. Let us say test it over time with small real trades, ideally, right, or on paper. Ideally, it's live trading because psychologically, live trading is totally different than paper trading. Paper trading, not real. The reality is you could trade on paper and have positive results and go and try to do the same thing live and not have positive results. And the only difference might be your cell phone there, but we do know markets evolve. So one thing about expansion contraction, it is designed, as I said, to be non-lagging and move with Jake's moving average channel. And that's adaptive in itself, even if markets evolve, being a trend trading strategy on that one. Expansion contraction so far has managed to hold up to that. If the markets evolve and the win to loss ratio drops and the profit to loss ratio drops, basically already know what the best and the worst is over time. And so if it's performing poorer than it ever has historically, it might be time to take a look at adjusting a few rules. But that's going to need to be tested and validated before making a change. I don't like making a new rule unless I can prove it's better than the old rules. It did go into risk management. That is absolutely non-negotiable. I'm a 2% of my tradable capital, and I don't take more than 6 trades at any one time with 2% risk to limit unacceptable drawdowns. And ideally, if you're over trading, if you're taking too many trades with risk and over trading, you're more likely to get an unacceptable drawdown. And I've been there, done that once, and I'm sure everybody here probably has too. Main thing is it stops now. Really, if you don't keep a journal of what you're doing, I've showed some examples of logs on a day trading system before that I've been working on as others, and you've got to track what you're doing if you want to stay in control. You understand the metrics of where you are right now. Some benefits, you might spot weaknesses in your strategy. Over trading during sideways or choppy markets is a problem, and this one, ignoring your own rules. Well, I hope to get 100% on that, and I'm working on it. But it does say here the best traders adapt without chasing every shiny new idea. And I've also been there and done that decades ago. So again, following Jake's process, it just has been proven. It isn't about being right every time, right? It's just about winning more often than you lose consistently, and you need a systematic process with the setups on the charts that someone's been able to go back and test rigorously on that one. And if you start scaling up, once you've proven to yourself how the numbers are working right, you should start improving. Now, this was AI's first shot at this with Grok. And what I also did was come in and ask Super Grok, which was the latest version, to critique its previous response, because it was lacking a few things. And it went through here. I'm not going to read every detail due to the length of time we have, but we do have a little bit of time to go through the basics here. On this one, overemphasis on technical indicators without balance does run through and talk about RSI and Bollinger Bands as starting points, but they don't discuss their limitations, lagging, generating false signals. And so again, that can be a bit challenging as those are lagging indicators. It also critiqued its vague risk management. It did pretty good, but it didn't really stress the position sizing and specifics on diversification. All of these things are things you really need to take into consideration, even if you're just trading for yourself. If you really can't answer most of these key components in your systematic or say repeatable process, then you're missing something, and sooner or later that will catch up to you. It's like an out of sample occurrence. That just means I've tested this over 5, 10, 15, 20 years. whatever the length of test was, and all of a sudden something's happened that never happened before. Well, I'm going to have to say, although we're not supposed to guarantee, I'm going to guarantee that out of samples will likely occur the longer you trade a system. And you want to know if that out of sample is a single event or if it's a change in your system. So on that one, if you're not tracking, how are you going to know those things? And it did have a limited discussion on adapting and monitoring on that one. And of course, these are key issues as you're looking not only with your original plan, but asking, hey, what can I do to make it better? And on all this thing. And so it did say you really have a clear goal setting foundation on that one. If you're just using examples like I want to make X amount or whatever, can be a bit problematic. It needs to be clear. And also it was utilizing some of the tools for back testing and such. And to be honest, even Thinkorswim, TradingView, TradeStation, other platforms in their back testing are also a bit limited in what they can do. And so you definitely want to do back testing from more than one platform to make sure that you've got some consistent. And of course, it was saying the good part here, in order to combat bias, we all are biased, right? Rules-based systems combat bias. And if you don't think you're biased, the irony is even artificial intelligence is biased. As I asked it for an example out of 1,000 sample test, and it gave me a number, and then I asked it if that was above average or below average, and of course it did its another series of tests and found out that it was above average. So I gave it a little bit of a hard time and said, seems like you have the performance bias like people do. And of course, AI is built by people, and I think we built in a little performance bias and need to be aware of that. So it does say timeless principles. Well, I'm going to say thank you, Jake, because your principles are timeless. Having seen your own students show back tests that prove your other systems and this are also consistently positive. That's great. And seeing these principles are effective, I should say, over all of these different markets. 100% effective over 100% of the markets. Well, no, as you're going to see that, but it does also encourage learning through testing and journaling. And this is way more valuable than delving into short-term niche trading systems that definitely leave beginners expectations could have been spelled better. But on that one, I also asked Grok on that one, is there any benefit on using AI and incorporating it into an existing quantitative technical analysis strategy? And the answer was yes. It says your goal is a hybrid integration to use AI to augment your technical analysis systems, not replace them. And of course, AI can enhance adaptability. It can reduce overfitting or curve fitting. I've seen people do that over and all. And Jake's process of long-term tests are a way to reduce that and maybe even incorporate some non-traditional data into the setup conditions like sentiment or seasonality. And Jake's DSI, Daily Sentiment Index, is that, as well as Jake's seasonal trader has that. And so fortunately, I think we'll be able to implement some AI into this fairly quickly and get going. So anyway, the benefits. Sure, go ahead, Jake.
There may be some people here who don't know what Grok and Super Grok are.
ChatGPT, Grok, Super Grok, they're all names of the most recent artificial intelligence programs where you can go in and ask questions, draw pictures, all of those little things that are going on. So that is Elon Musk's from
Right.
X or Twitter.
Thank
Sorry,
you,
Jake.
Brian.
Right, so we're using AI to improve technical analysis on a non-lagging system, as artificial intelligence also said, as Jake has clearly, that moving average crossovers lag, and they're inherently a problem, especially in a sideways market where you get lots of false positives and choppy prices and drawdown. So again, running through the Metastock Expert Advisor. It's going to have clearly defined setups and triggers based on Jake's setup, trigger, and follow through, which include the rules to get in, rules to get out of loss, rules for take and profit, when to add positions, and also, as they're saying, this has been back tested in liquid markets, and using the Power Console in Metastock and run some system tests. And here again, you can see the graphic. It's all a little small, but this is all of the S&P 500. And as we can see graphically, the red shaded and the loss area is on the right third, and the gain in over 500 component stocks on the left side says that more than 2/3 of this market was positive, and some of it exceptionally strong. And the strength, of course, on the upside was greater than the weakness on the downside. And of course, if you take a look at something like this and still say, yeah, but how do I know what to trade? That's going to come back from running some tests. So I did, as you see here, popped up the Power Console and did the JBXC stop and reverse, and well, both of the programs here, and ran a simulation of 1,500 days, going back a long time. Actually, it was about 6 years. In the end, as you can see, 2,179 days. And it'll pop up and show the performance on that, the total number of trades and the trade efficiency, average profit divided by average loss. In this case, Broadcom did very well. Yeah, I did pick not the top performer, but in the top 10, put out some bigger names. So AVGO or Broadcom, a tech stock, been around a long time, and shows, again, the simulation on $100,000 equity, shows the trade profit and the trade loss, final equity positions, total number of profitable trades, long and short. It'll show the account variation on that to see the results, and I had to make it a 2-screen shot. So then it shows the average profit of 1,771, highest and lowest, and it'll also show you the average loss, highest and lowest. It's nice to see average gains greater than average losses, along with the win more often. And on the downside here, we can see it did say the most consecutive losses in a row were 8. I've seen 6 consecutive losses twice over the last 6 years, and Broadcom did pop up and show here 8. Although with the win to loss ratio here, 8 consecutive losers is still considered to be statistically normal. Admittedly, you might say, well, that kind of stinks, but we can go over and take a look at the unprofitable timing and see that the total number of days in a trade on that one, and back over on the left also to see the largest, say, excursion or downside, the drawdowns were significantly smaller than the run-ups on the excursions, and so long favorable up $18,000. The short adverse was just down 3,000. So although I would have to say ideally this is 1 or 2, maybe 3 consecutive losers, the size of the losses are small in consolidation, and the average length in profitable trades here at 45 is actually above the statistically 24 to 32 that I've seen in different time frames. That's what we can get is long-term trends that do really well, and short-term swings that may be a bit choppy and give us a drawdown. Ideally, the size of the losses are significantly smaller than the size of the gains in that excursion. But it did just take the Power Console and ran the test in the S&P 500, and then dropped out, as I said, a couple of the top 10 in here to show these statistical results. The second test on the stop and reverse here is BlackRock on that one, and it did the same length of test. It's basically 6 years of test on that one to show the profit and performance. Same numbers again here on that, how well it did, how much it drew down, the total number of trades, its efficiency, the average profit divided by average loss, and the win to loss ratio help us with identifying systems that are net growth objectives over time. And being an individual that doesn't need income, even looking for growth, in my strategies, and that's why I'm trading options in strong trends, because they do give us the opportunity on a small amount of fixed risk to see the greatest amount of reward on that one. Let's hit the second page, because I wanted to go to what's the worst that could happen. I know everybody may show you examples of the best that could happen, but we may as well take a look at this. Yes, there was a $7,000 adverse short drawdown. On the upside, the favorable was at 25 to 30,000, so they're at least 3 plus 4 times greater positive excursion or off of the normal than that. And up here we can also see the average length of the trade was 48 days. Average length in the losers were 9. I'm going to just point out the shortest length of the trade is 1. Yes, 1 day reversals happen. There's nothing you can do. If today's a buy and tomorrow the market tanks and you have a loss, 1 day should be your shortest reversal on that one. As one thing I've seen is you can't stop sudden reversals in the market. They happen. And statistically, it's normal to get consecutive losers, and those will create drawdowns, and you need to be under control of the risk you're taking on those trades. And if you're not, you're likely to see some unacceptable drawdown. So I'm just going to end back. Go ahead, Dick.
Brian, at some point, would you show an example of what the expert advisor does?
I didn't have a screenshot of that, but you know what? I know somebody that's here who is about ready to show us, because I definitely like it when we can, have him come on and give us a few examples on those type of questions. So one of the problems I have to admit to today was Metastock charts did not open up for me today. So a little after this, I got to call support and at least see what I did wrong. Because fortunately I got all the screenshots for the presentation before today, but I got a little bit of a technical problem, and I think it's my fault. That I will fix that as soon as I can.
Thank you, Brian.
So Jeff, are you there?
Yes,
And if
sir.
it's not, oh, you are there. But so I'm just going to at least make one more comment on taking a look at what's happened in here, because we do know the S&P and the Qs have been up a lot and making money on that. With the options, we've been seeing many of those multi-month trends create trades that are 4, 5, 6, 7, 800% up. And on the options trading, that's been excellent. But Jeff, I definitely wanted to get back to you in the last 10 minutes or so, because we always like having you end out and go through, especially if anybody's got any questions, exactly
For sure.
the answers.
Tom wanted to know, are you okay handing out copies of the slide deck?
Yes.
Okay.
Plus, they're recorded, right? And if you go on YouTube, remember, and like and subscribe to the Metastock charts, as those are great. And then you can pause it, if that makes sense, and take a screenshot. I've done that a bunch. When somebody shows something briefly, I've got screen clipping tool and just go, oh, I need a screenshot of that. And the previous sessions also show all the rules that we've been talking about in order to, minimize the length of time today. I didn't show all the rules again, but they are there. If you want them, I'll get them to you. And if you want the slide deck, that's available too.
Right on. Okay. And I don't see any more questions, except for we do have some questions about how to get it. So I want to talk a little bit about that as well. I did put, and if you're interested in this, a few minutes ago, I put in the chat how you can get a copy of Jake Bernstein's annual forecast. So if you're interested in Jake's forecast for the year, Jake, do you want to say a few things about what that is?
What I do is I go through every futures market, including the indices and the currencies, forecast where we're going, where we've been, how high or low we'll get, just some of the major moves. And for the year 2025, practically every forecast we gave in 2024 turned out to be correct in 2025. So it's going to be a real eye opener.
Okay, perfect. And
that's coming up, and that's something not to miss, because that's actually Jake's. Like he said, he might be even understating a little bit, but he's been very accurate over time using his process. And the annual, the quarterly reports are just fantastic.
All right, very cool. let me talk a little bit about how you can get JBXC. As we kind of talked about, the indicator, if you want to play with it, is in Metastock, but you're going to want the expert advisor. It brings so much more to the table. And so let me talk a little bit about what that is and kind of what that is. But before I let you go, I want to thank both Brian and Jake. Thank you for being part of the conference today. Thanks for all the support and kind of working this out, Brian. And Jake, thanks for everything all over the years. Appreciate it.
Thank you so much.
All right.
Thanks, Jeff.
Very cool. All right. Thank you, Brian. I'm going to go ahead and dismiss you guys. So here we go. If I can. There we go. All right. Very good. You kind of come in here. Oh, I need to make myself the presenter too. Larry was just here. And it appears he is not here. So hopefully I didn't accidentally kick him out. And if I did, hopefully he joins us again real quick because he's next. Larry does a great job. Very, very proud of this add-on. It's done really a phenomenal job. It's called JBXC Complete. Jake and Brian talked a lot about it, and it does a really good job of helping you understand the long-term strength of a chart, whether your range is expanding, what the short-term strength is. It'll help you identify support and resistance levels, help you find overbought and oversold conditions, all of those kind of things, divergences, short-term breakouts, all of it is kind of built into the forecast. Your long-term trends, they talked about how you look at long-term trends, short-term trends. All of this stuff is actually available as part of some training that we put together. We do have an expert advisor that'll kind of identify all of the stuff that's going on in chart. And I think I have a screenshot of that. So right here, we're kind of looking at, and I was kind of going through kind of all the different uses for JBXC. And one of the things I kind of thought would be a really, really good idea was to go in and include, you know, all of the kind of different readings as kind of like a dashboard. So right here you see like long term, it's bullish and strong. This is on GE. A couple years ago when we released this, it tells you what the short term strength is doing, whether the range is contracting or expanding, whether you have a breakout, what your support and resistance, all of that stuff is kind of spelled out. And of course you can scan. So if you're interested in finding divergences, you can. If you want to find buy signals, if you want to find stocks that are bullish long-term, bearish, sell signals, whether they're short-term breakouts, anything that you're kind of interested in doing with this, you can with the scanner. So it's all included. Brian did talk a little bit about this stop and reverse and the system testing and the stuff you can do with it. And of course that comes in really, really good. So as part of it, you're going to get, it's a full-blown Metastock add-on. You're going to get the explorations, the expert advisor, you're going to get the ability to do system test, and all of that stuff is kind of put in there and just part of the package. So we did sit down, lots of questions, usually I'm like, how do I make sure I understand how to use this, right? We did sit down and we did a two-part training where Jake and Brian talked about the JBXC and the setups and went into a lot of detail around that. I did a part about how to run scans, how to open up Metastock, how to manipulate it, how to kind of get through that all. And so normally this JBXC is only like $5.99, so it's pretty inexpensive really for what you get. As part of the conference, what we're going to do is we're going to do a $4.99 price tag. So it's going to be a one-time purchase. Of course, we're going to offer it with a 30-day money-back guarantee like we always do. We'll give you a free trial to Metastock if you need it. And you can do that if you go to metastock.com/ I'm going to type this up as a top JBXC. That'll get you to the trial page. You can give us a call, of course, 800-882-3040, or you can chat online with us at metastock.com/saleschat. So all those are different ways you can get in touch with us. It was kind of interesting over the weekend. I haven't answered this email yet, but I did get an email message from a longtime user of JBXC who bought it, and he's like, the program is very good. I love it. So, and I need to answer his other questions, but I just got it over the weekend. I'm going to answer it next. That's why I was looking at it. So $4.99 is the price that you can get it. We're going to back it with a money back guarantee, so you can try it, you can play with it, you can see if it's valuable for you. Our bet is that it is. Metastock.com/JBXC, metastock.com/saleschat, or give us a call at 800-882-3040. So let's go ahead and move on. I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a sponsor of all of our Metastock events since we started doing them back. It's been 14 years or so. It's been a while. With it, you're going to get 17,000 trading articles. You're going to get, they have 1.3 million subscribers, and they've been making a magazine since 1982. You can find out more about stocks and commodities at traders.com. In addition to that, I do want to invite you to join the Metastock Traders Forum. It's a community of like-minded individuals. You can chat, you can share ideas, you can talk, you can ask questions. You can go through a lot of actual resources that are available there. All of that's free. You go to thetradersforum.com to join that. And of course, I want to make sure, we're going a little bit early right now. Okay, that's fine. It's time to give away a prize. Let me go ahead and pull a prize here out of the prize list. And since Greg isn't back from the doctor yet, I'll kind of I'll do the random generator number by myself. So let me go ahead and, where is my prizes list? Found it. Okay. All right. Tomorrow, we're going to have Martha Stokes talk. Martha Stokes runs technitrader.com. Been a longtime partner of Metastock. They do a lot of education. They do a lot of classes. She does a very, very good job, very good educator. Make sure you come to her talk tomorrow. We're going to give away her Methodologies Essential Elite Edition. And with that, you're going to experience what she calls her most valuable course. So it's going to basically be limited time access to that. And I'm going to go ahead and pull a winner right now. So give me just a second. I'm going to get my random number generator. Now, if you want to be on the list of winners, what you're just going to need to do, if you're watching this on GoToWebinar, you're already registered, you're already on the list, no problem. If you're watching this on YouTube, make sure to like and subscribe. It helps a great deal. And then when you're done, go to metastock.com, click on the banner at the top that says register for the conference, fill out the registration form, and that'll give you access. That'll get you on my list, basically. And so when we give away the next prize, you could very well be a winner. All right. What we're going to do here, though, is I do have a header row, so I'm going to start with the number 2, and we're going to go all the way to 3967. Go ahead and generate that number. 3921. That's actually pretty close to the max. Okay, let's go ahead and find out who won that prize real quick. Oops. All right, this is a Vikrant P in the USA with a Hotmail address. So if your name is Vikrant, and I hope I said that right, and you're watching, make sure to say, hey, yeah, I won a prize. But congratulations. If you don't have to be present to win, we understand it's a very long conference. But if you are present and you win a prize, we like to celebrate with you. So let us know. So let me go ahead and make a copy of that. And TT prize. Okay. Here we go. Congratulations. All right. I do want to say, okay, let's go ahead and get this out of the way. As we kind of talked a little bit about, we've been talking about Metastock. Metastock, they literally started to create in the 1980s. I was going to say 1982, but I'm not sure that's right. For the last 32 years in a row, Metastock has been rated the #1 software in its price category. We talked a lot about how you can get a special offer. If you buy a month, you'll get the second or third month for free. I think if I click on this, that banner will go away. So if you did that, you can run Metastock for $75. You can run it until December. It's about $25 a month. During that time, we're going to give you all those bonuses. We're going to sit down with one of our onboarding specialists. Is going to give you a wine club tour of the program. They're going to basically make sure that you have access to training to help you get started, as well as everything else that you need to kind of be successful. I hope you do it. For $75, you can run it until December. If it's helpful for you, you can keep it. To do that, get in touch with us at metastock.com/conf promo. Give us a call, 800-882-3040, or go to metastock.com/saleschat. So there you go. We're at a point now where I can kind of transition to our next guest, even though we're still a little bit early. Larry McMillan wrote what is considered by many, and I've just blanked on the name, to be the must-read book on options trading. And I believe the name, Larry, I'm going to be so embarrassed if I get this wrong, is called Options as a Strategic Investment by Larry McMillan. Larry has been in the market for a number of years, very much considered to be one of the foremost experts on options trading. So without further ado, Larry, did I get the name of your book right?
Yeah, but I'm having trouble with my computer. I'm switching over to my laptop right now. Can you just give me a minute?
All
I
right,
just
no
got to
problem.
pull the PowerPoint over here. I sent you a message, but I guess you probably didn't see it.
No, not yet. Sorry. I need to do something for you? Oh, I see it.
Well,
Yeah.
the link wasn't really working. It kind of thought I was you or something. I don't really exactly know what was going on, but I should be able to just here. Hold on one second.
Oh yeah, take your time. Take your time. I'm trying to think of like a bit of a joke. Mike asked a question. I'm going to answer your question, Mike, instead of telling a dad joke, so you might be saved. Mike says, I got a little confused. I registered a few days ago, but I didn't get a notice to join via GoToWebinar. From past experience, I know I can watch on YouTube. How do I get signed in? Mike, if for that one, I'll have you actually, you're welcome to watch on YouTube. That's fine. If you do prefer to watch and GoToWebinar, you should have gotten a link from us. But if you go up to our sales chat at metastock.com/sales chat, they could get you a join link for GoToWebinar. So there you go. It's unique for everybody. How you doing, Larry?
I'm good. I'm just trying to. Now I need to find the link that says show my screen. Hold on.
Oh, here, that's my job. I make you the presenter, and then when I make you the presenter, it asks you to show your screen.
So let's see if you can see the right screen. You see that one?
I can see you tabbing between. Yes, I can see your presentation. Looks great.
Oh, and I can see audience view, I guess, here too.
Yep.
Okay. All right. I think we're ready to go.
All right. Yeah. I'll get out of the way. It's all yours. Thanks for joining us, Larry. And I'm glad I got the name of your book right. All you.
Right. Okay. We're going to take a little while here and talk about the option indicators as they're relating to the market. I mean, obviously, the market is right now just waiting for the FOMC meeting conclusion on Wednesday afternoon, but it's still rising. So, people are still thinking positively about that. Of course, there's the old saying, buy the rumor, sell the news, and the news being that if the Fed actually lowers rates, maybe sellers will come in. Anyway, just a little background on our company. Oh, let me sorry, I didn't get that pointer option here set right. So we started as a derivatives research company, and, publishing newsletters, selling data, research, etc. Moved into money management during the financial crisis when we were had made some pretty good calls at that time. And we also have an option education arm, which is either webinars like this or mentoring, etc. Anyway, I'll come back to this later, but we are going to be offering a special on our top 3 newsletters, 1 month of each, for a total of $99 for all 3 newsletters for 1 month each. I'll come back to that. As I say here, we'll send you the PDFs of this webinar. They'll be emailed to you, and it's plural because one will be grayscale, one will be color. Anyway, if we look at the indicators, the first and foremost and most important indicator to me is the chart of the S&P 500 itself, because that's really indicative of what's happening with the market. You know, if all your indicators are bearish and the market's going up, well, the market is by definition correct. So that's a very important indicator, which happens to be very bullish right now. Then we'll take a look at put-call ratios, both for the broad market and for some individual stocks and futures. Then we'll take a look at market breadth, where we have an option-oriented way of looking at that. And then we'll spend some time on volatility indices and volatility products, seeing what they have to say about the market as well. So there's a couple of corollaries that I have that are important. The first is oversold does not mean buy. So I don't really have anything that's oversold right now, I don't think, at least not as far as S&P or things like that go. But the corollary is overbought does not mean sell. And we certainly have had some overbought conditions, and really since we came out of that very big decline in April, we started getting overbought conditions really as soon as maybe June. Obviously, you wouldn't have wanted to sell in June. So an overbought condition is not a sell signal. It's just a condition of the market. In fact, strong bull markets are overbought for long periods of time. So that's sort of where we are at this point in time. But just merely being overbought is not a signal of any sort. Here's a long chart, 2-year chart for option shares. That's the long term. And you can see that there are a few corrections. Of course, the worst one being what happened there in April, when we were down 21% in 37 trading days. And then really right at the beginning of April, it was very ugly for just a few days. That all had to do with tariffs, probably a complete overreaction. But anyway, since then, we've reversed upwards in a major V formation, and that's still continuing. We haven't even really pulled back to, below the 20-day moving average, and certainly not below the 200-day moving average. So there are some support levels. They're marked here on the chart. And I'll zoom in on that a little bit on the next slide. Let's just move to the next slide, which is a 1-year chart. So we had a little resistance back here, right in here at the old highs around 6,500, but now we've broken through that. So old resistance becomes support. We also tested this 6340, 6360 area down here a couple of times, the August lows. And then prior to that, back in July, we tested the 6,200 level a couple of times, and those held. So those are all support levels. You might think, oh, gee, that seems like a long ways. It's 400 points from here, but it's really not even, 6% or so. It's just really a minor correction if we were even go that far. However, if we do break 6,200, or especially if we were to break the old highs here at 6,150, the February highs, that would be a problem, because that would cause some psychological consternation. People would be saying, well, wait a minute, we gave back everything since February. What am I doing in the market? And they start dumping again. So, that would be a very negative occurrence. I don't see that being a problem right now, but, things do happen. And so we'll be paying close attention. I circled one gap on the chart here. It's the most recent one. And even that's way back there in the mid 6,000s. It was never filled. The market just took off from there and never came back. There's other ones back there in April and May as well that were never filled, and perhaps they never will be. I don't really know. But it's not mandatory that gaps be filled. They often are, but usually if they're not filled within a fairly short period of time, then they become rather meaningless as a technical indicator. So just to sort of sum this up, we've been making new all-time highs on S&P a lot of times since late June. I don't know how many times it is exactly, but let's just say it's like 15 times, 15 different days. We've got these support areas that I mentioned there. And basically, this is a very bullish chart. And that's the main thing that we need to get from, to gather from this, is that this is a bullish chart. And the thing is, telling us that we want to be on the long side of the market. Now, you can hedge, you can do other things, but still, with the S&P chart bullish, you want to have your major presence be on the long side of the market. Now, another thing we can do with the S&P chart is we can draw Bollinger Bands on it. In fact, we draw what I call modified Bollinger Bands, because when John Bollinger invented Bollinger Bands, he used as his definition of realized volatility, he used the standard deviation of closing prices. And while that might sound good to the average person, that's not exactly what the math guys use. So Black-Scholes, for example, which is the option modeling formula, they use the standard deviation of daily percentage price changes. That's a slightly different number. And since we're in the business of realizing, computing, realizing implied volatility, and our implied volatilities are via the Black-Scholes model, we need to have those be in agreement. So we draw Bollinger Bands using the standard deviation of daily percentage price changes as suggested by the Black-Scholes model. And when the S&P moves outside of the plus or minus 4 standard deviation modified Bollinger Band, then we have a signal that sets up when it comes back inside. So we've been using this for a long time, and it has a good track record. It's been struggling here recently, though, but I'll show you. This is a 1-year chart. And so you can see that, let me just take a portion on the top part here. So this top band right there, that's the 4 sigma band. And then right below it, that's the 3 sigma band. So when the market comes outside of that band, as it, let's say, did back, just even recently here, you can see it came outside of the 4 standard deviation band, went back inside. That gave us a sell signal. That has not performed well. The 2 red letters on there, the buy signals, were very strong. The blue letters were ones that were closed out. Almost all of our indicators, we have a trading system built around them. It's not just, buy or sell and then forget about it. So in this particular case, we would be stopped out if the S&P were to close back above the 4 standard deviation band. You can see it's pretty close there. In fact, this morning it got very close. So that signal is on the verge of being stopped out. It's unusual that we would have 3 losing signals in a row, but anything is possible. The long-term track record here, if you take us up on our offer to look at the Option Strategist newsletter, it goes way back, and it has made thousands and thousands of dollars over the years with this signal. It's just not this year. So we certainly wouldn't give up on those. In addition, we can do that same sort of chart, outside this 4 standard deviation band and back inside for any futures or stock or index or what have you. And so we have a service that we offer for that purpose if you're interested. And the computer calculates all these and notifies you of any new signals that are taking place. And in a lot of cases, you probably want to see how they back tested over the last year or so before you just jumped in and started taking every signal, but we do have that service. So let's move on to put-call ratios. So put-call ratios were invented as an indicator by Marty Zweig back in the 1950s. And it's a contrary indicator. I'll show you a little bit how Marty got into it. But for our purposes, we use the equity-only put-call ratio, which is all stock options that trade. We use that to predict the broad market. And So we'll take a look at a few graphs and things having to do with that. But Marty's original theory still holds. This is a contrary indicator. When he started tracking the volume, which in those days he got by looking at the ads published in Barron's by the put and call dealers, the brokers, and they would list how many puts and calls they traded. He noticed that if there was a lot of put buying, the market tended to go up after that. And if there's a lot of call buying, the market tended to go down. So it was a very retail-oriented thing. It was a contrary indicator. And so that's still the premise we work from today, although we have better ways, I think, of determining what is too much put buying and what's too much call buying. But let's just take IBM, for example. Let's say at the end of the day, we sum up the volume of all the puts traded in IBM, separately sum up the volume of all the calls, divide the two. That's the put-call ratio. So since puts are in the numerator of the fraction, if put buying increases, the ratio itself is going to go higher. And so when is that likely to happen, though? Well, put buying is likely to increase when the stock is going lower. So the put call ratio and the stock price move opposite to each other. The same thing with call buying. Calls are in the numerator of the fraction. So if there's heavy call buying, the ratio, the fraction will decline in value. But when is there likely to be heavy call buying? Well, that's when the stock is going up. So again, opposite direction. So when we publish a put call ratio chart on our website, which we do, we have about 1,600 or more every day. We publish both the stock price and the put call ratio, so you can compare the two, looking for, this inverse symmetry. We keep a moving average. I use 21 days just in case there's something to Fibonacci, but you can use whatever you want. You do need to smooth out the numbers, though. They jump around pretty frantically. So in theory, our put call ratio chart that we show you should look like this. The stock price on top, the put call ratio on the bottom. And, we'll just reaffirm what we were saying there. If the stock is declining in value, people are buying puts, so the put call ratio continues to go higher. Eventually, it reaches a local maximum. And the local maximum for the put call ratio then becomes a buy signal for the stock. So we get a local maximum here and a buy signal here. And then the stock, if it's working right, well, I'm having trouble with that. As the stock starts to go up, let's move over to the left side. As the stock is going up, people are buying calls, forcing the put call ratio down. Eventually, it gets to a local minimum. And a local minimum on the put call ratio chart is then a sell signal for the stock. So very simplistic, but it works. And we have computer analysis programs that can look at these data coming onto here. It knows what's coming off from 21 days before, knows kind of what put call ratios have been running recently, so what numbers will probably be coming on. And with the kind of a tree, like a chess playing tree, it can help you discern whether you're on a buy signal or not, or a sell signal. Now, this is not a current chart, but on top is the S&P 500 index, and on the bottom is the equity-only put call ratio. In other words, all stock options that trade. There's millions of them, and you can see the inverse symmetry that exists there most of the time, and so that's why we use the equity-only put call ratio to predict the broad market. So enough of that. Here's the current chart. So we had a great buy signal back there in April. Local maximum was very high on the chart, and the market went up. We've been zipping back and forth a little bit. Right now, the most recent thing we had is a local maximum here at a pretty low level, but it is a local maximum, so that's a buy signal. So this chart is on a buy signal right now. It's very low on its chart, which means it's in overbought territory, but as we know, overbought does not mean sell. So when it turns and starts to rise, then we'll have another sell signal. On this chart, again, the red letters are successful signals. The two blue ones were not successful. And again, we trade these with options, so we're not asking more than the cash we start with. And of course, we have procedures where we roll up and take profits along the way or stop ourselves out. So as computers became more integrated, we were able to calculate probably a better put call ratio, the weighted or dollar weighted put call ratio. In this case, we're going to measure how many dollars are being spent. So at the end of the day, we calculate in a simplistic manner the option price times the option volume, that option volume for that day, to come up with the dollar volume estimate for that option. Now, you could do it tick by tick, but this is faster and less expensive. So we do that for every option. Again, let's say it's IBM. We sum those up for all the puts, separately sum them up for all the calls, and divide the two. And now we've got the dollar weighted put call ratio over essentially measuring, how many dollars are being spent on bearish opinion versus how many dollars are being spent on bull opinion. Ironically, the signals occurred about the same time. They're just at different heights usually. So again, this gave that buy signal last April, and also most recently here, this little buy signal with the local maximum in late August. It's going very low on its chart, and you can see that here the sell signals have all occurred down here, roughly at this 50 or 60 level. What 50 means is that $50 are being spent on puts for every $100 being spent on calls. So for stock options, that's an extreme number. Last April, we were up almost to 140, which is a complete, reverse and very pessimistic attitude at that time. So right now, these two are on buy signals. The computer analysis program is actually looking at that first chart, the standard chart, and thinking it's about to roll over. But well, since we are so low, I want to actually see some visual confirmation of that. So we follow these constantly. We talk about them in the newsletters all the time and in our daily market commentaries. I don't really go back to the long-term chart too often, but this is a 10-year chart of the standard ratio. So you can see it got very high, and in fact, the highest point here is during the pandemic. But right after that, as we started to come out of the pandemic, we went into extreme optimism, where it fell down below 40. And I showed you just recently. Now over here to the right, that's what we're just looking at. So over on the right, our lows, we saw the most recent lows are in the 50 area, but in the extreme optimism, right, coming out of the pandemic, it fell all the way to 40. So optimism is relative, I guess. So we've reached a somewhat extreme level in optimism here in the last really a year and a half, and we've been down there a couple of times. But, we just haven't really seen the ratio rise too much. Obviously, it did last April. But in a bear market, as you can see here in 2022, when we had this bear market going on right here, the ratios rise steadily and quite symmetrically, really. It's a very patternistic type movement. And so that's what a bear market looks like. The little spikes up like we had last April, or even the pandemic, they're not really a bear market. They're bearish, of course, but it's not a bear market that lasts for like a year or something. The weighted ratio, this is actually going all the way back as long as we have the data, back to 1998. And you can see there that the financial crisis generated a higher ratio than the pandemic did. Or even the end of the bear market in 2022, people were getting pretty crazy there. Spending a lot of money on puts. This is the difference between this and the previous chart is here's where the money is being spent, not just the volume on the puts. But over to the right, that red square, that's pretty much what was on the previous chart that we looked at. And you can see we're down at the low end, we're at the optimistic level. So, that I don't think anybody is too surprised that with the market at all-time highs, optimism is strong and put call ratios are low. So we don't trade off the long-term charts. I'm just showing them for, education, I guess. So what do we buy when we have a signal here from the put call ratios or from the volatility bands or something like that? Well, so I like to buy an option that has a fairly high delta, because if I'm right about my prediction of where the underlying is going, then I'm going to make money with my option. I don't want to buy a delta that's or an option that's so far out of the money with a very small delta that I'm right about where the stock went, but I lost money on my option. That doesn't fit well with my psyche of trading. In any case, the very low deltas indicate you're buying a speculative option. So when you're trading options, you should always at least check the delta and probably the implied volatility of the option as well. So we buy a slightly in the money option, typically SPY options, 1 or 2 strikes in the money, and not too far out, 2 or 3 weeks. So that's going to have a pretty high delta of something like 0.70. Or if I'm going out a little farther, a couple of months, buy an at the money option, and even that's going to have a delta of 0.55. And so as a result, if the stock goes up, then I'm bullish, then I'm going to make some money. Obviously, time decay does factor in, but the delta is indicating that the bulk of the stock price move is in my favor. Now, if you do spread on TV, they always talk about spreading. And I don't think most professional option traders spread nearly as much in speculative situations as they show you on TV. But by spreading, I mean, what you do is you buy a call at this strike. Let's say you're bullish on this stock, so you buy a call at that strike. But then you sell a call at this strike. And why you'd want to do that, unless options are very expensive, that's really a pretty, you're hurting yourself because you cut your profit potential off up here. Now, I know they always say, just like comment on the side, if options are very expensive, it does make some sense, but otherwise, no. But they'll always say on the TV thing, well, you're risking less. You're actually not risking less. In either case, whether you buy the call or you buy the call spread, your broker is going to ask you to put up the debit incurred by that transaction. So you're risking 100% in either case. Yes, dollars, maybe you're risking a few more dollars, but that can be easily balanced out. Instead of buying 5 calls, you buy 4 spreads or what have you. But you want to have the calls. Or I have that wrong. And instead of buying 5 spreads, you buy 4 calls. But you want to you have the potential to get this big move on the upside. Giving that away is very detrimental, I think. So if you do spread, though, if the options are expensive, and believe me, VIX was expensive for a while, and even the longer term options now are still fairly expensive on SPY and the other major broad-based indices. So you might spread. So there's a couple of ways you can mitigate the negative aspects of spreading. One is to widen the difference in the strikes. So right now, if I'm buying a SPY option that's expiring, before October 1st, I'm not even bothering spreading. But if I'm buying something in October and farther out, I would spread the 2 strikes at least 15 to 20 points apart, and that would even get larger if VIX goes higher. And if I'm buying puts, since out of the money puts are more expensive than out of the money calls on SPY and other major indices, I would spread those strikes 30 points wide. So that's one thing. And the second thing, I would roll if the short strike is hit. So what do I mean by that? So let's say, today as SPY trading near 660, let's say you're going to buy an October spread and you're going to spread it 20 points wide. So you buy the 660 call, you sell a 680 call. Okay, so now you got that on and you're fortunate enough to see SPY trade up to 680. So we were talking about this thing here before. So that means that right now, SPY's all the way up to your upper strike. So there's not much room left up here for profit. So you're just about maxed out that spread. Take your profits on the spread you were already in. So sell that spread you bought previously and buy a new one, resetting the strikes 20 points higher, and just keep doing that as long as it keeps going up. There's a couple of benefits on the side from this, I think. First of all, you're taking in some credits as you go along. So if there's a sudden market reversal, you know, you only lose your last debit, not your entire first debit. And secondly, I think it helps you psychologically to know that you've already booked some profits, and you might be able to treat the position a little more logically than you would if you were just felt you were risking everything on a small downturn. So with the prices the way they are right now, and this could actually change with respect to interest rates, but right now an October 660 call costs $9, and an October 680 call, if you sell it, would bring in $1.50. So if we buy 9 and sell for $1.50, we've paid $7.50 for the spread that's 20 points wide. So the max we can make on that spread without rolling it up is 12.5 points. Well, that's okay, but as option trades go, that's not all that great. But keep that in mind for a second. So if we were to look at the put side of the ledger, remember I said on the put side now we're going to spread like 40 points wide. So we buy this put for 8 and sell this 620 put for $1.50. That's a debit of $6.50. But now we've got $6.50 invested, and it could widen out to 40, or we could make 33.30. So that's a lot more like it. I mean, that's a lot more leverage. That's what you'd like to see in an option trade, really, if things really work in your favor. And just in keeping with what I said before, if the S&P gets down to 620, then you would roll both sides down 40 points, which is roll if the short strike is hit, which is actually the subject of this slide. All right, so let's move on. There are some individual put call charts I wanted to show you. There are always some interesting ones. This is Fortinet, and you can see that it gave well back a while back. When I'm dealing with individual put call ratio charts, I usually only use the extremes. So like this little local maximum right there, I wouldn't be trading that because that's in the middle of the chart. But this one at the time was very high in this chart. We can't see back beyond over a year ago, but that was high, and so was this one. And they were both pretty good buy signals, you know, that one especially, not so much this one. And now we've got another buy signal on an even higher level. But I've noticed the stock has been having trouble getting through this level right here, which I believe is 74. And so we put out a conditional recommendation that we'll take advantage of it's 82. I'm sorry, that's 82. We'll take advantage of that put call ratio, but only if the stock can get above 82. Similar, this is Nike, and Nike has had both good buy and sell signals, but the most recent thing here is it's been bumping along at a very low level, and now it picked up. So that created this local minimum down here, which is a sell signal. But if we look, Nike has been holding above 73. So right now, today, it was exactly 73. So if it falls below 73, we're going to buy puts. If it can't do that, then I'm not going to waste my money. So we'll see. That's right on the verge of a sell signal there. NVIDIA, this is one that we had a sell signal in a couple of weeks ago, and it really hasn't done much yet. It's kind of moved sideways from the point where we sold it. But you can see that there were a couple of decent sell signals prior last year. You might not even remember them because you kind of think the stock just goes up all the time. But it really did have some corrections, and then gave a great buy signal last April over here in the middle of the chart right there. So, but now that was pessimism. Now we have optimism. Everybody wants to buy calls on NVIDIA. And so we'll see, but there's a new sell signal there, relatively new sell signal. Just out of randomness, IBM has a very high put call ratio. I'm not exactly sure why all that put buying was going on when the stock was more or less going sideways, but it was. And so now it's rolled over, and that's a local maximum. and a buy signal for IBM. I don't think I've ever seen the put-call ratio this high in IBM. It essentially equates to 450, which means that, again, $450 are being spent on puts for every $100 being spent on calls. Now, sometimes the put-call ratio can get distorted because of arbitrage or hedging activity. So I suppose it's possible that some large traders have been buying IBM stock and buying IBM puts. And that could create this situation, and that might distort the ratio. They're not really bearish in IBM, they're bullish, but they're doing it that way to hedge themselves. We recently had a buy signal in gold, the gold ETF, that is. You can see there was a good buy signal last fall, about almost a year ago. And now we recently had another buy signal here. Came just before this last breakout. So, you know, we bought a couple of weeks ago. I don't know if it's still worth buying, because you can see the put-call ratio has fallen all the way back down to here now. So, but it's still on a buy signal until it actually rolls over and makes the local minimum. It will still be on a buy signal. So that's a corollary of how we treat all of these charts. Once we're in the position, we use the put-call ratio as our guide to when we get in or how long we stay in. Corn, this is an interesting one. So we just recently, so first of all, this is put-call ratio at the bottom of the chart here, which is, you know, normally a put-call ratio, anybody would, hey, why am I not getting this? There we go. So that put-call ratio right there is drawn using the dollar-weighted corn futures options that trade on the board of trade. Now, you may not have a futures account and therefore don't really want to trade on the board of trade, but there is an ETF called corn, C-O-R-N. It trades, you know, regular, just stock, and so you can buy calls on that. This is a buy signal there just a week or so ago. We were waiting for a breakout, and that has happened now. You can see it just broke out on Friday. And so we're long corn options. On the other hand, recently we had a buy signal in cocoa. There is no ETF that corresponds to cocoa. So if you wanted to take advantage of that signal, you actually did have to go have a futures account, or if you're trading an interactive broker, they let you trade both stock and futures in the same account. But you would have had to buy the actual ICE futures options or cocoa futures options on the ICE. There's no equivalent stock ETF for cocoa. All right, let's move on to market breadth. Market breadth is very simply advances minus declines. You can do a couple things with it. One is keep a cumulative total, which we do. And then the other is to create an oscillator of sorts. We also do that. So the way we look at it, an oscillator value, today's oscillator value is 90% of yesterday's value plus 10% of today's advances minus declines. Now, where are we getting our breadth data though? So typically the New York Stock Exchange, that's where a lot of people would think, well, that's, you know, that's where you get breadth. But on the New York Stock Exchange, there's a lot of things that are not stocks. And it can distort the numbers sometimes. So we were looking for a pure stocks only data set, and this is a number of years ago, probably before the turn of the century, but it was evident that we had one right in front of us. All the options that have stocks listed on them, all the stocks that have options listed on them is a great data set for advances and declines. So right now there's more than 6,000 of those. And we have, you know, you have large caps, small caps, New York, NASDAQ, whatever, everything is in that data set. So we call that stocks only. So this is a graph of the oscillator using the stocks only data dating back to 2018. And the green areas there are when the market gets oversold. You can see that, you know, it doesn't get oversold too often, except that in this period right here, this was the bear market, 2022. It was oversold quite a bit at that time. More recently, you know, it was oversold that April decline, the tariff-related decline. But after that, we really haven't had too much in the way of being oversold. In fact, we had a great buy signal from this indicator, and I don't think that chart's up to date. But anyway, there was a buy signal from the indicator in July, and then since then it's just bounced back and forth around the overbought area right up in here. And so it looks like one day you have a sell signal, a couple of days later you don't. So we're not really calling this a particular way right now, either bearish or bullish. But one thing does stand out to me is that breadth should be a lot better than this, with the market making new all-time highs. So I would you see, like, typically when the market's making new all-time highs, especially when it starts doing it, let's say like right here, you see breadth gets very overbought, or back in here, back earlier, you get overbought when that happens. But here, we're not getting that. And, that's a small negative divergence. I mean, the market could easily overcome that. I gave an example today on my the telecast thing that we do for YouTube. And it was, like, let's say on Friday, NVIDIA was up and Nike was down. So that's one advance and one decline. So if you're just looking at advances and declines, that's zero. But if you looked at NVIDIA, it had a volume of 125 million shares on while it was rising. Nike had 10 million shares while it's declining. So the two there net out to 115 million shares advancing. And so that leads us to cumulative volume breadth, which I'm going to talk about in a minute. But just this pretty much just summarizes what I had said there. Now, this is our shortest term indicator, by the way, so it can swing back and forth. But this example with NVIDIA and Nike contributes to something that we follow also called cumulative volume breadth. In other words, volume on advancing issues minus volume on declining issues. And this is a very important indicator. That CVB has made a new all-time high 31 times since May 16th. And so has S&P made a new all-time high many of those days. So it's a good, strong confirmation for SPX. It's not a negative divergence. Sometimes that tops. CVB will disintegrate away and SPX goes on to new highs. That's a negative divergence. That happened at the beginning of 2022. But right now that is not happening. In fact, last week, CVB made a new all-time high on 5 consecutive days. It was like pretty crazy. Anyway, so where the stocks are going up, people are putting a lot of money into them. This is just a chart of what happened coming out of the April decline. So this is the April decline. You can see here CVB had made a new all-time high just a couple of months later, but SPX at that point had not. So that was a buy signal. So we were actually able to buy SPX there and sell it out there, or whatever. I can't remember if we actually sold it or just started using a tighter trailing stop or what have you. But you can see how CVB has continued to go on and make new highs. This is last week where I said it was made new highs like almost every day. And so CVB is very good. And you might say, well, wait a minute, that's stocks only. What about New York? But it's the same for New York. So if you use New York data to calculate it, it comes out the same way. Doesn't always, but it is right now. So again, a bullish confirmation for the market. New highs versus new lows. This is something we just keep track of. Mostly I use the New York Stock Exchange data for this. And they gave a buy signal. If you look on the lower right, the most recent buy signal is back in June. That's still in effect. It will be stopped out if on the New York Stock Exchange here, if new lows, which is this column, is greater than new highs for 2 days in a row. But there was one day way back here on August 1st, and there hasn't been one since. So it would take 2 days in a row to stop this indicator out. So this is on a big roll right now. And you can see that it doesn't trade all that often, just a couple of times a year, a few times a year. So those are all the most recent signals dating back to 2024, late 2024. So let's move on to VIX volatility. This is important stuff. We can do a couple of things with the VIX chart itself. One is we can look for a trend on the VIX chart. It should be trending opposite to the stock market. And number two, we can look for spike peaks on the chart. Those are times when people panic, pay up for puts, and then typically they don't need them and they dump them out in the market rally. So this is a 1-year chart of VIX, and all those Bs are spike peak buy signals. So we have well, all the ones on top, all the red ones and blue ones, not the one on the bottom there, the pink one. I'll talk about that in a minute. So all those red Bs are mostly, they were all successful. We had a couple of crazy ones. A year ago, VIX shot up to 65, and then of course, during the tariff sell-off in April, it went way up into the 60s as well. Didn't get into the 90s like it did back in the pandemic or in the financial crisis, but it got very high. Most of the time, though, it doesn't get that high, but it does spike up and spike back down. So the most recent buy signal that we had was the one in right at the beginning of August. Now, we have a trading system that we built around these signals, and the trading system says when we get a buy signal, we hold it for a month. So that last buy signal in early August was terminated in early September, and it was profitable. That's why it's a red B. And so right now we don't have a VIX spike peak buy signal, but if VIX spikes up, and it will, then we'll look for the next one coming down the line. Meanwhile, I said earlier, the trend of VIX, VIX should be trending opposite to the stock market. So we have a specific definition of trend that we use in this case, and it's when the 200-day moving average or the 20-day crosses below the 200-day and VIX is below the 200-day. That's a buy signal for the market that indicates VIX is trending down. Stock market should be trending up. We got that buy signal back, I think, July 6th or something like that, and that's still in place. It would be stopped out if VIX closes above its 200-day moving average for 2 consecutive days. You can see it actually did blip above it a couple of times, but that has remained, on a buy signal. So that's also just all that stuff. By the way, I do want to mention, and you sometimes see this, well, there'll be an article say, oh, VIX is so low, it's time to get out of the market. That's not really true. VIX being low is an overbought condition. And again, overbought does not mean sell. We've had periods of time where VIX stays low for like 16 months, in which case, if you were out of the market for those 16 months, or worse yet, if you were short the market for those 16 months, it would have been very painful. I think the last one that went really a long time like that was in 2016, 2017. But we've had others in the past. So a low VIX is not a problem in and of itself. It's only becomes a problem when VIX begins to rise. So that's why I say if it gets above the 200-day moving average, then you want to get out of your longs and think about maybe going short. So you can't trade VIX, but VIX does have futures and options. So VIX futures, there's a number of them. If you line them up in price and you look at how they slope upwards like this in price, that's what happens during a bull market. That's called the term structure of the VIX futures. And if it's sloping upwards, that's bullish for stocks. Occasionally, you get this. We had it a lot in March of in the pandemic of March of 2020, but we had it this year in April a little bit. And so a downward sloping term structure is bearish and can get very ugly as well. So we pay attention to that. Here's the term structure as of Friday's close. And you can see VIX closed at 1476. And here's the futures prices. You can see there each one is higher than its predecessor. So the term structure is sloping upwards. And they're all selling at a premium. The futures are at a premium. So, for example, if I take 1559 and subtract out 1476, we get 83 cents. So that's the premium. And these others are trading at even larger premiums. So the large premium is fine. And if you ever see an article that says, oh, the long-term futures have a big premium, that's bearish, that's wrong. So the term structure is sloping upwards and the futures have a big premium because of it. That's not the other way around. So this is a positive picture for stocks. If you're not looking at the VIX futures, by the way, you can quote them on the CBOE's website with a delay, slight delay. But the CBOE does publish 6 volatility indices, the 1 day, which is mostly useful for trading 0-day expiration options. The VIX is 30-day, you got a 3-month, a 6-month, and a 1 year. Here's their prices on Friday night. And again, you can see they slope upwards as we go out in time. So again, that's bullish. So right now, the term structures are bullish. The premium on the futures is large. That's bullish. The September VIX futures are expiring next Wednesday, so October will become the front month on that day. And so then we'll be comparing October versus November. That's the first early warning sign. If the October futures start trading at a higher price than November futures, that would be a problem. But right now, they're well below it, so that's not a worry at all. As I said previously, we did have some inversion of that sort back in April. So just one last thing, realized volatility is something we follow occasionally. And normally it's just kind of in the middle and not doing anything too crazy. But in August, the 20-day historical volatility of SPX fell to 6%. That's very low. And so when realized volatility started to rise, typically rising realized volatility is bad for stocks. So it then rose up to 10%, and that gave us a sell signal in, I think, late August, I guess. But now it's back down to 9%, and if it falls back to 8%, that signal will be stopped out. So that's probably going to end up being a losing signal. So here's all the indicators that I just talked about. So on the bullish side, we've got the spike peak. We have the trend of VIX is bullish. New highs versus new lows is bullish. The chart of S&PX is bullish. The spike peak is neutral. I should have moved that over there. Sorry, we don't have a spike peak right now. The equity only put call ratios, remember they were very low in their chart, so that's bullish. But I didn't move it all the way over to the left because they're so overbought, and then, as I said, the computer analysis is calling one of them as being on the verge of a sell signal. So we'll just say that's not quite as bullish as it could be. But then the construct is what we just looked at, the term structures, that's all bullish. So what's not bullish? Well, we do have that McMillan volatility band sell signal, but it's nearly on the verge of being stopped out. The breadth oscillators just can't seem to get out of their own way. And then realized volatility is the thing I just talked about. That's almost stopped out. So basically, this is a bullish set of indicators. There's a little bit of nagging negative stuff there on the right, but not that much. So our basic attitude is, we're going to stay long on this market. We'll take any new signals as they occur. And as I said at the very beginning, if we were to drop below 61.50 and wipe out all the gains since February, that would bring up a lot of sellers. I think that we often roll our deeply in the money spreads or calls upwards just to keep taking credits out of the positions, and but we still remain in the original trade. So if we're bullish, we're rolling calls up all the way as we go along. So I mentioned the offer. This is the offer we're making. All 3 of our newsletters, 1 month of each, our major newsletters, 1 month of each, total $99. So we have 3 newsletters in that category. There's the Option Strategist, which comes out weekly, and that's in its 34th year of publication. There's the Daily Strategist, which comes out twice a day. There's a market report in the morning, a volatility report in the afternoon. And then there's daily volume alerts, where we basically look for, we basically trade all these signals I've talked about today, but we also look for any situations where there might be some high volume, indicators happening in stocks Typically, if people get greedy, they'll buy calls ahead of an announcement and then hope not to get caught by the SEC. Anyway, there's a new one of those, WBD. So we just today were buying calls on WBD because it does look like a pretty good takeover situation, and Disney is looking at buying them. So, I just sort of summarized that stuff. We have a YouTube channel. I record a video every Monday, and we have a couple of other newsletters too, if you're interested in those. As I said, we will be emailing the PDFs of this presentation to you, and this is the link to sign up for the 3 newsletters for $99. That's our contact information. If you're interested in the money management, you would go to this URL. That is, I should just mention that our minimum account size is $100,000. So, Jeff, I'm back to you, I guess.
All right. Thank you, Larry. Appreciate that. I put those links in the thing. I don't have a lot of questions for you. So I'm going to go ahead and just type out the information for you.
Okay.
Thank you very much for coming on here, Larry. We appreciate it.
Okay.
All right. Thanks, Larry. Let me go ahead and kind of take a little bit of a run here. I'm going to go ahead and do this. Okay. And let me make myself the presenter, and I'll go ahead and show my screen. John, I know you're in a little bit, and you're a little bit nervous that your audio wouldn't work. Let's do a little bit of an audio test real quick, and then we'll kind of move over to you.
Test 1, 2, 3.
Hey, that worked first try.
Great.
All right.
No, we only spent about an hour on GoToWebinar settings. So.
Oh, okay. Okay. So it wasn't necessary. It was only my first try, not your first try.
Hey, it's always great to have a backup plan and a plan B.
All right. Very cool. Well, since you're talking, I'm gonna have you help me real quick. I'm gonna employ you. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. You can find them at www.traders.com. They've been a great sponsor of the event. They've been doing it for a number of years, and we appreciate the help. They do a great job. So, John, you might wonder what I'm going to have you do.
I'm sitting here with bated breath.
You know, we give away prizes all the time. I'm going to give away one of yours, I think. Let me go ahead and kind of just look up what the conference prize is. We do have this 3 subscriptions to the Diary of the Mad Hedge Fund Traders Global Trading Dispatch for 6 months. Do you want to talk a little bit about what that is, and then we'll give one away?
We are long short macro, which means we trade everything all the time, long and short, stocks, bonds, commodities, precious metals, energy, and real estate. And we send out about 200 trade alerts a year on all of these asset classes, both long and short. And as of now, we are up 55% on the year. So we get a lot of great testimonials.
Yeah, I'd imagine.
Prize gets it for free.
Right. It's a $9.97 value as well. So, right. John, let's pick out somebody lucky. What I need from you.
It's a lot more than $9.97. We give it away for $9.97 for or nothing.
Fair enough. Fair enough. For this case, it's even freer for the next winner.
Can't beat freer.
Freer, yes. All I need from you to kind of pick a winner is give me a number between 1 and 3,967.
Are you asking me or the audience?
You. Yeah. Give me any number. It can be, actually, it needs to be 2.
With 1952.
1952? 1950.
That's the year I was born.
Okay, there you go.
Eisenhower was president.
Our winner is, well, I'm sure this is his last name, Mark Trader.
What a great name to give a trading service to.
If you registered with the name of Mark Trader, you maybe just won. And so we'll get in touch with you next week, and they'll give you information on how to win your prize. If you are here, Mr. Trader, say hi in the chat. We love it when you're here, when you win a prize, and we can celebrate with you. So in terms of all of the specials we're doing today, thank you, John. I'll be right with you. In terms of all the specials that we're giving away today, like all of the specials, the promotions, that kind of stuff, you can get them at metastock.com/conf promo. If you haven't tried Metastock yet, I'd recommend you try it, of course. $75 will get you going through December 15th. It's about $25 a month. Metastock.com/conf promo, metastock.com/saleschat, or 800-882-3040 to get there. We've already had John come on. He already gave away a prize, and a very good prize as well. John is somebody that we have at all of our events. I really like kind of the view that he has on the markets. He always gives some really good recommendations and has some good advice, and we always bring him back. So without further ado, John, we know your microphone's working. Let me go ahead and make you the presenter, and we'll make sure we can see your slides as well. And it should have just popped up a screen that says, hey, do you want to share your screen?
Yeah, I was looking for my false teeth. I always take them out to eat lunch.
Okay.
Sound like I have a lisp? That means I couldn't find them.
Oh, okay. All right. I hope you can find them.
Someday. You know, they're clear colored, so that makes them impossible to find. Okay, show my screen. And what do you see?
I will tell you, it usually takes about 5-10 seconds. I'm just waiting for it to kind of share over. And I'm not seeing anything just yet.
Okay, we're not on Zoom, so I can close that.
Okay, now I see it. Okay, good.
You know.
What I am seeing right now is your PowerPoint in the non-expanded view.
Right, so let's do this. And there's that good-looking guy.
Yeah. What you want to do is actually swap the views. I can see the presenter view. So I can see like the next slide part. There was a slide up in the corner that said swap views, which would just like,
there we go.
There we go. Okay, perfect. You know, John?
Yeah, I just unplugged my other screen.
Oh, okay, that works.
The screen.
All right. Everything's looking good on this end. I'm going to get out of the way. It's all yours.
All right. Thank you very much, Jeff. Always great to work with you. You always have a great roster of fascinating speakers. And I have to tell you, every time I attend one of these, I learn something myself. Who says you can't teach an old dog new tricks? So I'm going to talk about how to play the year-end rally. We're broadcasting from Silicon Valley, California, the center of the universe. You can't help but pick up stock tips everywhere you go. So I'm going to share some of those with you. And if you have any questions, just type it in the chat box on the right. And I will be monitoring that with one eye and giving my presentation with the other. So let's see. So here is the long-term view. Let's cut to the chase, not waste any time. The global economy is being fundamentally remade by artificial intelligence, and those companies in the forefront, like the Magnificent Seven, will deliver the best investment performance of a lifetime. Never underestimate the earnings power of U.S. tech companies. Notice how well big tech led the last rally. After the current correction, they will lead every new rally from here on. Trade wars, inflation, recessions, politics, and exploding national debt are just temporary distractions. Keep focused on the big picture, and that's me looking for orcas on the Alaska cruise I took last year. Okay, so take out your pen and paper to take notes or start typing into your smartphone what I'm about to tell you will blow you away and change your life. For I am in the early retirement business. Your early retirement. Learn what to buy, when to buy it, and why. And I'm going to be showing you a lot of pictures of the different airplanes I've flown over the year in air shows. This particular one is Spitfire in Biggin Hill, England. I flew for the D-Day anniversary that was last year. So how would you like to trade for a living full time? How'd you like to do nothing but trade? Well, 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 17 years publishing the Diary of a Mad Hedge Fund Trader on one of the oldest newsletters in the business and one of the most profitable. I am one of a handful of founders of the modern hedge fund industry, and I keep doing this because I love absolutely every minute of it. This is the other reason to listen to me. 51.32% average annualized return for the last 17 years versus 26.82% for the S&P 500. Notice that the S&P 500 goes up, down, up, down. We go up, sideways, up, sideways, up, sideways, much preferable to your own retirement fund. But don't take my word to it. Listen to one of my own clients. Oop, we lost it. Let's try it again. Nope. It's getting harder every year. Well, I think we're going to have to give up at this point.
Hi, my name's Wilson, and I've been with the Mad Hedge Fund Trader and John Thomas since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80-90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
All right, let's see exactly what trades Wilson did to make all this money. And it wasn't just he alone, it was a lot of people. He made 482% on NVIDIA, another 811% in NVIDIA, 421% on Berkshire Hathaway, 412% on JP Morgan, 394% on Palo Alto Networks, 350% on Vertex Pharmaceutical, 113% on silver, and 87% on JP Morgan again. And notice these performances are far greater than what the underlying stocks did. And of course, the way we did it is with a custom design option strategy, which reduces the risk and increases the profits. And this is what every single professional trader does for his own account in both New York and in Chicago. This is our secret weapon, the Mad Hedge Profit Predictor, we call it. It's a market timing index, an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. Took a team of mathematicians 1,000 hours of calculations to come up with this algorithm, and it's a learning program. It learns every day and improves its performance every day. And just to give you an example, I've only had one losing trade since April. out of maybe 100 trade alerts that we've sent out. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. Does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades myself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you're on your own, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of signals from our market timing index. Notice you get a lot of buys at market bottoms, a lot of sells at market tops, buy, sell, buy, sell. It's a huge advantage to have in the marketplace. And I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithm driven. This is the last 12 months of our market timing index. And you get sell signals above 70, you get buy signals below 20. And what does this look like? This looks like the best interpretation of a head and shoulders top I've ever seen. So watch out when the Fed makes their announcement on Wednesday, no matter what it is. So why cover all asset classes? Sounds like a lot of work to me, which it is. Well, information about one asset class that sheds light on all the others. For example, knowing what the bond market is going to do, and therefore interest rates, is incredibly useful advantage when picking stocks. Some asset classes will be doing great, while others are dead in the water. It will point you to where to trade and where the winners are and how to avoid the losers. Give yourself every advantage. Know what's happening all the time, everywhere. So what happens when the euphoria comes off? It's going to happen sooner or later. This was incredibly useful information to have in February, and some of our clients got 20-fold returns on their money catching the February-March meltdown. And this is how they did it. Become a bear market expert. So the easiest one of all is just to buy the SDS. That's a 2x short S&P 500 index ETF. That means for every 10% the S&P 500 goes down, the SDS goes up 20%. And if you look at the numbers, it tracks fairly closely. Here we were at 18 in February. We went up to 28 at the lows in April. And if you want more leverage than that, a 2x, there is a 3x short S&P 500 ETF called the SPXU. And again, this one went from just over 19 to 38 on a 20% meltdown in the S&P 500. Of course, there are a lot more tools in the tool chest here. You can always sell call options against your existing long positions, or you can just sell them naked outright, which is what professional options traders do in the markets all day long. In this particular example, if you sold short the October 25, the October 370 calls in Tesla, you would have made $38 outright as long as Tesla stayed below $370. Now Tesla's trading right around 400. I can't look at the market now, but you have all the way until October 17th for Tesla to close below that strike price to make $38. And what's your break even on this? It is $408, which is actually $6 higher than where the Tesla stock is having now, even after a 23% move in a week. And just for fun, let's see where Tesla is now. Tesla, where are you? We're at 410 or up 14 on the day. So this is another way to bring in extra income against existing long positions. And of course, we put this on when Tesla was all the way back here at 300. So, you know, the rule of thumb is that we put on positions that make good profits, even though the stock goes $100 against you. You can do this with Tesla, you can do it with NVIDIA and other high volatility stocks. Okay, there's another way to play this. That is to buy volatility. Previous speaker was mentioning that. And volatility, let me give you an exact number. And let's see, VIX is at 1563 today. It has traded as low as 14. How high did it trade in the April meltdown? It got all the way up to 60. That's a 4 times return on long VIX players who bought it back here in February at the market bottom. Where are we right now? We're at a market bottom. It's a great time to buy volatility, very low risk, very high return. Just make sure you go out, you know, 3 or 6 months so you can catch the bigger moves over time. Another thing that happens in falling markets is that IPOs collapse relative to the stock market. And you can see how this happened in February. There is, like everything else in the world, there's an ETF on this called the IPO. And this particular one went from 46 down to 31. Okay, that's about a 35% decline. And then it bounced back from 31 back to 51, or a 66% return, as people piled back into IPOs in the wake of the great meltdown in April. There are more ways to play falling markets. You can buy or you can sell the MTUM, which is the momentum ETF. And you can see here the MTUM completely collapsed in February, right at the market top. It went from 225 all the way down to 170, and then from 170 back to 250. So that is also about a 40% return, just playing momentum. What's momentum doing now? It's kind of rolling over and ready to go down again. My bet is we see the 200-day moving average at least at 220. Okay, next, another way to play down markets is you want to sell short beta. And beta is the amount that individual stocks will move in any given time, and that tends to decline in falling markets. You can see the beta ETF went from 97 down to 65, or down 30%, and then went from 65 up to 105. So that's up 66%. So even if you don't trade these on the long and short side, it's great to just watch these all as market timing indicators. And many of these are in our own market timing index. They're part of the big calculation. You know, you get a good read on momentum and beta and IPOs. You have a big head start over everybody else in watching the market. You can also just buy an ETF that is a hedge fund. And here you have the HDGE. And this one bottomed out in February. And hedge funds tend to outperform the market in falling markets. And what did this one do? It went from 15 to 20, or about 33%. And then when the market recovered, 20 all the way back down to 16. So it dropped by the same amount. So this also is looking like a great buy right around here. And with this particular one, you don't have to worry about time decay eating up your profits, as happens in the options market, especially the short-dated options market. You can just hang on to this for a year, and anytime a correction comes along, this thing will pop right up, just like it did in February. If all else fails, there's the ultimate safe haven for all investors, and that's to buy 90-day Treasury bills, which are currently yielding 3.93%. The brokers don't promote these at all because there's no commission for them whatsoever. But it is government guaranteed, has endless liquidity, it trades like water. You can use 100% of the value of your T-bills as collateral for options trades or margin trades. You can lock in a guaranteed income. You can sell it any day and you get paid all the way up until the day you hold it. This will survive any bear market. Also, you don't have to pay income taxes on the interest income until the day you sell it. So you could literally, buy a T-bill in the end of January, run it all the way until the beginning of January the following year, and the taxes aren't due until the following year. So, and they're really not due for 2 years because then you don't have to pay until April the year after that. So it's a great tool to have when all hedge funds do these. And by the way, Warren Buffett owns 300 billion of these, so he really likes these. So stocks, waiting for the Fed. We're all just sitting around twiddling our thumbs, waiting for the Fed to make the move, as we have done really all year. Goldman Sachs says that the AI trade could be cooling off a bit. We could be entering a small correction or a long sideways period. Oracle soared by 23% on spectacular cloud growth forecasts, making Larry Ellison the richest man in the world for at least a few minutes. Robinhood joined the S&P 500. That's a great play on millennial traders and market volume. Their entry was delayed because of their close association with crypto. Health and Human Services have been bad-mouthing Tylenol, and that demolished the Johnson & Johnson spin-off, Kenvue, taking the stock down 14% in one day. Broadcom scored the biggest chip orders in history, $10 billion worth, and that went to one of the large language models. Kraft Heinz split up and no longer be able to buy your ketchup and mustard from the same company. I'm sure there's huge consequences to that. I just don't know what they are. And then Marvell, another chip company, dived 16% after the AI chip makers' data centers revenue fell short. So let's go through some of the top stocks that we like for the medium and long term. Of course, banks do really well in this environment because of falling interest rates and deregulation. We've been long this for many years, and we expect to get another $100 out of this next year, with JP Morgan going to $400. Okay, Citigroup, also same story. We're looking for $130 next year. Berkshire Hathaway is a great play on industrials and banks, and it's also the largest outside holder of Apple. We are targeting 500 for 2026. We did get a 20% sell-off here when Warren Buffett announced his retirement. We're starting to put the premium back into the stock now. And Goldman Sachs, one of the top financials, we're looking for $800 a share at least next year, and we have positions that expire at max profit right now on Friday. Morgan Stanley, where I worked for 10 years, they also benefit from increasing assets under management, falling interest rates, and deregulation, and also a big boom in mergers and acquisition business. I'm looking for $200 a share for Morgan Stallion, which is what we used to call it. And BlackRock, one of the top money managers, I see 1,500 a share sometime in 2026, buy on the dips. Interactive Brokers is benefiting from exploding options volume. They're opening new markets in the betting markets where you can make bets on the outcome of certain economic data, elections, and so on. I heard they made a fortune on the last presidential election. Apparently, one guy a guy in France made $50 million correctly betting the outcome of the election. Second half of the barbell, these are all technology plays. Tech stocks always come back, at least they have for the last 50 years. AI innovation is still the leader and is growing exponentially. AI is enabling tech companies to shed jobs and overhead, allowing profits to explode. Makes a great counterweight to deregulation and interest rate plays. We could spend the next 2 years rotating back and forth between the two groups. So NASDAQ, of course, in the business of selling shovels to the gold miners. We think they're a huge beneficiary of the digitization of financial markets, and certainly the stock market believes that. They've gone from 15,000 to 22,000 since the April bottom, and we're looking for 25,000 next year. Tesla, I've been trading for 15 years. My average cost in my personal account is $2.20. That's split adjusted 10 times. And Elon Musk surprised everybody by buying $1 billion worth of stock for his own account on Friday to create a short squeeze. He's done this many times over the years, and I'm sure this isn't the last time either. And the company is basically transitioning from cars to robots and AI. So I think you can get another 10 bagger from this level up to 4,600, but it may take 10 years to get there. So after this current run up, get ready to buy the next dip in Tesla. And by the way, you can short options $100 out, both on the upside and the downside, and make money almost every time. I just shorted a bunch of the 530 calls in Tesla, and I feel comfortable about that position. It expires in 24 days. Microsoft, another huge leader in the tech area. It knows every keystroke you have made on a PC for the last 30 years. They basically own all the data in the world as a result. And we've just had a tremendous run. We're targeting $500 a share in Microsoft. We're going to be recommending that on every dip. And by the way, I mentioned airplanes. This is a B-17 bomber from World War II, and I am one of about a dozen pilots in the world now who's qualified to fly the B-17. Okay, so we got this one. Got Microsoft. Meta knows every social media post you've made for the last 25 years, and that is going to also give an advantage on the data front moving forward. They're currently investing literally hundreds of billions of dollars to expanding their AI capacity. I'm looking for $1,000 for May to next year, and that's me in front of a B-24 Liberator, another World War II bomber that was built at the Ford plant in Willow Run, Michigan. Amazon, another big winner, knows everything you bought or even thought about buying or window shopped for the last 25 years. Antitrust suit is dead, so is opposition to their nuclear power plants that they're planning to buy. We're looking for $300 next year in Amazon, and that is a B-26 Marauder, another World War II bomber. NVIDIA, of course, we all know NVIDIA. It's probably the largest holding of everybody watching this webinar today. And that monopoly in high-end chips will continue. We're looking for at least $220 a share next year, and that may be a low comparison. And it's one of my favorite planes, P-51 Mustang, one of the fastest planes in World War II. I think it was the fastest, actually. And then I fly this one about once a year. It's based in Florida. Okay, Alphabet, Google, another big winner, knows everything you search for the last 20 years, and just had another big win as an antitrust suit was settled. This is looking for $300 a share in 2026. That's me in front of an early generation P-51 Mustang built in 1942. Palo Alto Networks, hacking never goes out of style, and the faster AI grows, the faster the cybersecurity companies will grow. They just took over CyberArk, caused a dip back here in the spring. Since then, it's been on fire. So we're looking for $300 a share in Palo Alto Networks. Oh, and by the way, that is a Mitchell B-25 bomber. That's another 2-engine bomber. Oracle, spectacular earnings forecasts in the cloud, got a 23% move in one day. I expect this to sell off back to the pre-announcement levels, but we're looking for $400 a share next year, so it's another buy on the dip type situation. All right, let's talk about the bond market, see where the interest rates are going to go. U.S. yield curve is steepening. That means the economy is getting worse. So all bond market traders think the end of the world is at hand. U.S. Treasury yield curve, crucial barometer of how the economy is doing, has steepened on fears of mounting public debt, increased by $5 trillion this year, in the president's attempt to exert control over the Federal Reserve and his tariff policies. The shift has direct implications for bank net interest income, like bad implications. It also shapes the lending decisions of banks, since banks borrow short-term and lend long-term, relying on the spread between the two groups for their profits. Bad news for the economy, and the stock market is coming, but who knows when. Here is the TLT, got a huge pop on that disastrous jobs report that we got last week, which means that we are in a jobs recession now. We're seeing a jobs crash. These are the employment is falling at the fastest rate since the pandemic. And to the bond market, that means the recession is here, and bonds always go up in recessions, as they have done in the TLT since last week. And here's the interest rates. You get a collapse in interest rates. And we got all the way down to the 4% handle. And that's down from 460 in the spring. And looks like we're going to, at the very least, test 390 in the short term. Foreign currencies, lower interest rates means the value of the currency goes down a lot. We've already dropped 20% this year. We're likely to drop another 20% going into next year. If you think those European vacations are expensive, wait till next year. Well, they'll be up 40% just on the currency, and that's not counting the European inflation. So you want to buy every foreign currency play that's out there on dips, and there are fortunately a lot of those. There is the Australian dollar, which has been trending up all year, the Japanese yen, the euro, which is close to a multi-year high, the British pound also appreciating. Okay, so next we get, we have oil, which saw a brief increase in the price over the weekend when Ukraine sent drones to blow up their largest export facility in Europe. It's the Promark facility right next to Leningrad, and that created a short rally. But the main problem for oil this year has been recession fears, and I think eventually we get down to $10 a barrel for oil as it is replaced by alternatives over the next 20 years. A better way to play energy is to go nuclear, and the great play there is Cameco, CCJ. We've been in this thing for the last year. It's one of the largest uranium producers in the year. It's already gone up from 35 to 82, and we think this is just the beginning of a nuclear renaissance and could go much higher. So buy Cameco on dips. Precious metals actually has been the best performing asset class in the world after the Magnificent Seven. We're up about 45% year on year. U.S. credit downgrades and eventual default have been a dream for gold bugs for the last 50 years, and that's what we're getting now. The U.S. borrowing itself to death is a dream come true for gold owners. Gold is the last flight to safety asset and is benefiting from attacks on the Fed. My target is $5,000 an ounce. Gold ETFs saw 226 metric tons worth $21 billion pour into them in the first quarter. Central banks are still buying, and your average Chinese is buying gold at every single opportunity. Keep buying all gold and precious metal plays. And that's me in the Istanbul market a few years ago doing some early Christmas shopping. Here is the breakout, the upside breakout after a 4-month sideways move. Nobody would sell gold here, and that was the great tip-off that an upside breakout was coming, which we got. Much higher highs beckon. GDX is going up even faster. This is the gold miners ETF. And Barrick Gold, one of the world's largest gold miners, had even still a bigger move. Another big winner is Newmont Mining. And it also has nearly doubled since the beginning of the year. Of course, if you don't like gold, you can buy silver, which tends to go up twice as fast, and certainly playing a catch-up gain this year. It's gone from 26 to 37. We're looking for $50 an ounce in silver by next year. Here's the silver miners also having huge gains. And wheat and precious metals, which we've been in forever, we've got about a 400% profit in it now, and we expect another $100 or so going into 2026. This is both a gold and silver royalty trust. And if you want to know what that is, you can read our research report on the company. Harsh truth is, you really need my help in the markets. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. You need a real pro to guide you through the market. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 93.74%, that's our trailing 12-month return. And again, notice the performance, up, sideways, up, sideways. Even in the April meltdown, we were only down 5%. we made back that money immediately. It's easy to make money in the options market when implied volatility is 60%. In fact, it's almost impossible to lose money. We can show you how to do that too. Richard made millions following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them on the California coast. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla power walls, and a Tesla Model 3, and still has enough money to send 3 kids to college. So Bob turned $500,000 into $27 million in 2 years, and let's hear how we did it.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right, Bob, thank you very much. So what do we do about all this? Well, stocks, you want to sell the big rallies and buy the dips. Bonds, you want to buy dips. Commodities, buy dips. Energy, stand aside for now. Currencies, buy dips. Precious metals, buy dips. So if you're not up 96.14% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. Up 51.32% average annualized return for 18 years. You get those kind of returns, you get to do things that other people can't do, like take the owner suite on the Queen Mary from New York to England. And once you get to England, you can take the Orient Express to Venice, or at least you used to. Now it leaves from Paris because of the border chaos caused by Brexit. This is a very long view on where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That'll create an economic boom that'll last another decade that started in 2021. So when was the last time we had a market with these conditions? Well, that was back from 1982 to 2000. And what did the Dow do? It went up 20 times in 18 years. Are you ready for a replay? Well, if we did get such a replay and went up 20 times in 18 years, that would take us to Dow 120,000 by 2030. And if you think that's an insane forecast, this is where we are now. We're already 3/4 of the way there, and we only need one more triple to get us up to Dow 120,000 in 5 years. Easy peasy. Except this time we have AI as a tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI-based products and services are just starting to roll out. The development of a quantum computer means computational ability will increase 1 trillion-fold at no cost. World's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. Just ask AI. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. 2020s will have 10 times this number of new technology drivers. So who show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 96.14% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And that is a 1932 Tiger Moth, which I fly every time I visit England. It's made, notice the gas tank directly over your head and no brakes. That's why we can only land on grass fields. This is a typical month for us. You can see here we made 16.3% on the S&P 500, 8.6 on Treasuries, 14.8 on the Russell 2000. We bought Amazon, bought Apple. Oops, we stopped out of Biogen for a small loss. We always stop out of losers very quickly with trade alerts. It's easier to dig yourself out of a small hole than a big hole. And then you can see every other trade that month made money. 10 out of 11 trades were profitable. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going into the second half of 2025, which is exactly what's been happening. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. Here's how our service works. Our algorithm spotted NVIDIA for an upside breakout back in January of 2024. So we sent out a trade alert. Looks like this. Buy NVIDIA at 480 or best. And these are pre-split prices. And in this particular trade, you had to buy 21 shares for a $10,000 exposure. What happened? Well, NVIDIA went up 45% in 22 days. Did we just sit around and pat ourselves on the back? No, we sent out a sell alert saying sell NVIDIA at 695 or best, closing trade. And on this trade, we made $4,515 on a $10,000 investment. So here are a history of Mad Hedge 10 baggers. Stocks that we recommended went up 10 times. Those include Zoom, that was a 10x. Lam Research was a 10.6x. Square went up 25 times. Moderna, we bought pre-pandemic, and it went up 40 times. NVIDIA went up 70 times. And of course, the granddaddy of them all, Tesla, went up 178 times. So I gained financial independence for life, and so can you. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me sending out a trade alert from the coast of North Africa when it's 120 degrees, kind of hot. With our service, you get instant trade alerts sent out at market sweet spots, about 200 a year or one per trading day, and all the reasons to execute them. Live bi-weekly strategy webinars and an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, access to a 16-year database on investment ideas searchable by name. And I'll even give you the name of a surfing camp in North Africa. Watch out, it's a lot harder than it looks. This is a one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford in-house research departments. Get in before the next melt-up begins. This is what you get. You get global market comments in your inbox 5 days a week, every morning. You also get Mad Hitch hot tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge customers who get my personal cell phone number. And I'm not going to charge you $3,500. That is the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars with the best customer service in the industry. Running it costs millions more. Here's the offer you can't refuse. 6 months for just $997. That is a 71% discount to the website price. We only take 25 new subscribers at a time because we don't want to screw up the trade alerts that we have in process for our existing customers. So it's first come, first serve. I can't wait to make you a top drawer trader. Click on the link in the chat box, and Jeff will put in a link in the chat box, and that'll take you to the sales page, which is only available today. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right, and there is a monster link in there. Jeff, are you sure that's the right one? That's a YouTube link. Okay. Here's the offer you can't refuse. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the best money in your life. The markets are closed now, but you can get an order in at a good limit tomorrow morning at the opening. 90% of these trade alerts make money. And I'll, just as a tease, I'll give you a chart of the trade alert stock that I'm about to send you. Again, 90% of these trades make money. So sign up now and you will receive my free video course, Options Trading for Beginners. That's a 12-chapter course about everything you ever wanted to know about options, written for the basic beginner. And there's the link, madhedgefundtrader.com. So click on that link. That'll take you directly to our dedicated sales page. So if you're going to work with me for the next 6 months, best to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League Baseball and becoming an Eagle Scout. To fellow Eagle Scouts out there, I say hello. There wasn't much to do in rural California in those days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the time I was 17, I spoke 4 languages and had visited 50 countries. And there's a somewhat thin John Thomas hitchhiking in southern France. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned how to fly and jump out of perfectly good airplanes. There I advised the allies of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And after 10 years of government service, I got this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered Asia all the way down out to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And yes, this is my original ID card from 1983. Yes, the years have been cruel. I served as a tank commander in Desert Storm in 1991. We lost 1 tank and the Iraqis lost 5,000. As you can see, I like to win. I rapidly became the top performing hedge fund in the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say when your income goes from the thousands to the tens of millions, it has a big improvement on your lifestyle. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Zermatt, Switzerland, and Lake Tahoe. And I've quit turning millionaires into billionaires. There's far more job satisfaction leveling the playing field and teaching them how to trade, and that includes you. If I can take a $50,000 account, turn it into $500,000, that is far more job satisfaction than I can get anywhere. Ultimate luxury, of course, is to give to those who need it. I'm a major donor to Wounded Warriors. So let's go flying for a few minutes. Let's see if I can get it to work. Okay, when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed on for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which are today worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the countryside. Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy clouds, and I commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions for you, as I've done for thousands over the last 14 years. I look forward to working with all of you. So just 6 months for $999. Let me show you how to make the money to pay for your own subscription. And I'm just going to check my store right now and see how many buyers have come in. I can see here we have Tracy from Grand Junction, Colorado, Michael from Corpus Christi, Texas, Peter from Shreveport, Louisiana, Jeff from Plattsburgh, New York, Judy from Memphis, Tennessee, and Ian from Cambridge, England. So I can see we're going to hit our 25 limit pretty quickly. So if you're sitting on the fence, hemming and hawing, please jump in now before the store closes. And I look forward to working with all of you. And yes, we've had a bunch more people come in. Let me take a look and see who they are. We have a Christopher from, let's see, what is this? Esther, United Kingdom. I don't even know where that is. And I know England really well because I flew over it for 10 years. Let's see, here's another one from Adam from Durham, South Carolina, just came in. Thank you very much, Adam. Please check your inbox for the trade alert. If you can't find it, look in your junk folder. That's where they go sometimes if you're a brand new subscriber. So, Jeff, you haven't asked me why I need to wear false teeth.
I've not asked you that. Did you want me to?
You can if you want.
Why do you need to wear false teeth?
I was in Ukraine a couple of years ago on the front lines with the Russians. I threw a hand grenade at the Russians. It landed in a river in between, and they took off like a rocket. And I went to my dentist a year later because I had a loose crown. And I said, well, can you please glue the crown back in? So they took it out. They said, oh no, you're not getting any crown back in. You split your root canal in half and you need 3 dental implants. So that's why I've been visiting Utah so much recently. One of the top implant specialists in the country is in Salt Lake City, and it's a 6-month process, and every day is agony. How about that?
Oh, my wife just did some big dental dirt surgery, and yeah, she really is glad she's done. Let me say it that way.
Yeah, I bet you're always done. Glad. Okay, well, I'm done for the day.
All right.
Let me check my store one more time. We got Frank from Columbus, Iowa, and we have Karen from Cody, Wyoming. All right, Jeff, great to work with you. Thanks for inviting me back, and look forward to working with you in the future.
All right. Thank you very much, John. All right, let me go ahead and do this. You're gonna make me the, okay. Well, all right, let's go ahead and do this. I do want to say thank you as we kind of transition to the next feature. I want to say thanks to Stocks and Commodities Magazine for sponsoring the event. I'm talking right into the camera, but I just realized the light's not on, so couldn't see it. In any case, I want to say thanks for Stocks and Commodities for sponsoring today's event. And I want to encourage you to join the Traders Forum. You can chat with other traders, learn about the markets, share stock picks and things that you're interested in. It's a growing community, a lot of free resources up there. Highly recommended, thetradersforum.com, a great resource for that. As we kind of migrate over to the next, I do want to give away another prize. So Greg, I know you are back.
I am here.
Let's go ahead and do a prize.
I say yes. Oh, I forgot to turn my lights. Alexa, turn on desk lights. There, is that better?
I can't. I actually hid my thing because it was going full screen. I can't see the cameras, so I'm sure it looks great though.
Right.
All right. So the next one, we're going to give away the Trading Winds Premium service, their professional service. It's normally about $97 a month value. We're going to give away 1 year of it. It has premium nightly updates from Vince Fora and Rahul Aurora. Both of those guys are speaking this week. Trade ideas, live trading sessions 3 times a week, and chat community. So Mr. Lewis.
Sounds great. Yes.
Go ahead and do a random number. I need any number between 1 and 3967.
1 and 3967. How about 1,106? 110.
That would be a Saturna Z, would be the name on that one. Let me go ahead and kind of make this a note of this. All right, thanks for the assist, Greg. All right.
You are welcome. I'm here if you need me.
Yeah, for sure. All of the Metastock offers can be received today if you go to metastock.com/conf promo. You can give us a call 800-882-3040, or you can go to metastock.com/sales chat. So again, it's been rated #1 in its price category for 32 years in a row. Give it a go. $75 to get you 3 months. Metastock.com/conf promo. Our next speaker is Melissa Armo. Sorry, my apologies. Melissa has been a frequent guest. She likes to talk about gap trades, and she does a really good job with it. We're going to go ahead and bring her on here. Melissa, how are you doing?
Testing, testing. Can you hear me?
I can hear you. You sound great.
Perfect.
Let me go ahead and make you presenter.
Slides. Hold on.
All right. And I'll tell you, oh, I can see your screen already.
Perfect.
All right. I'll get out of the way. It's your turn. Go.
Thank you. Good to be here, everyone. It is 5:04 Eastern Time in New York City, where I live. And let me tell you, this is going to be a big week to trade. Why? There's a Fed meeting on Wednesday. And if you're not aware of it, this is going to be a very contentious meeting, I think, for the Fed, because everyone is expecting the Fed to drop rates dramatically on Wednesday. I don't know if it's going to happen, to be honest with you. I think it's probably going to be a 1/4 point. But either way, it's going to create opportunity. Could be to the upside, could be to the downside. We're going to talk today about what I do specifically, which is I'm looking for institutional money, and I'm looking to see what institutional money is doing. And I'm looking to see it in the gap. And then we're going to talk about what is a gap as well. I also appear on TV, and I talk about stocks. I talk about the economy. I talk about the stock market, which is very exciting, and I love to do it. And it's convenient because I live in New York. If you have questions after tonight, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. And again, you can follow me. Probably the best place to follow me is YouTube, because I have a lot of videos on there as well. Excuse me. Now, as we're going along today, you can feel free to write questions in the room. I will see them in live time. And today is, oh gosh, today's September 15th. We're halfway through September already. That is crazy. Can you believe it? So I only have 3.5 more months left to the end of the year. It's a very busy time to trade in the fall. Again, now is the time when you want to trade, you want to hit the ground running, you want to make money before the holidays. It's earnings season in a few weeks, and then the Fed this week, and it's going to be a busy time where we have a lot of volume. And again, when you have volume, when you have momentum, that creates opportunity as long as you get the direction right in your trade, okay? So for me, when I started out trading, I was doing mortgages for 17 years, and I wanted a new career. And then I got involved in it, and I thought I'd figure out how to trade and make money in the market really quick, in like 6 months. It didn't work out that way. It took me 3 years to develop the program that I do. And you know, when I started doing it, it was that I wanted to change careers. But as the years have gone on, and I've gotten better as a trader, again, experience counts, I've realized that financial freedom really means peace of mind. You know, I mean, if we rewind 5 years ago, it was COVID, you know, and now we're in an environment where I still think we have very high inflation. So when you work for yourself and you are good at what you do, you feel more empowered, okay? You don't feel like someone else controls your life. And when you have money in the bank and you have savings, then you're less stressed. And I'm sorry, but that's just a fact, okay? Now, I put the stats in here year to date for my trading room. I run a live trading room. I'm mostly short, which we're going to talk about here, which seems ironic considering how bullish the market has been. But I risk an average of $4,000 a trade. These are margin trades, okay? Pretty good week last week, right up until, again, halfway through September. It's hard to believe. but up 902,896. Again, this is through last week. Been looking forward to getting into it, getting really pumped, you know, for the fall trading earnings season, which is really the busy time, which will start at the beginning of October. But I think this week is going to be a gateway into that. Do you know what I mean? Like, if this week could be a big week. I don't know what the direction is going to be though. But again, today is only Monday. So far year to date in the room, we have a 62% win ratio. Again, $4,000 is my average risk on those trades, and they were margin trades. I also do options. I'm just risk more of my options. So my option stats are, again, my profits are more because I'm risking an average of about 8,000. My stats are win ratio of 65% for options. You can risk less. You could do one contract. I get this question a lot. If you want to risk, say, $500 a trade, then you have to stay within those parameters. So if something costs $5, you do one. If it costs $3, you could do two. Okay, that would be 600. That's okay. So you must choose your risk, and it should be consistent per trade, the dollar and cents amount. Okay. So year to date, so far, again, this is using my Golden Gap system, the same system, but doing options and day trades, almost 4 million. Again, we have 3.5 months ready to go, and I like to take time off over the holidays. So I'm ramping it up. I'm going to be working my butt off, focusing on trading September, October, November. Again, the time to relax is the end of the year, get ready for next year. Now is the time to work and trade. So how can you make your dream of becoming a successful trader come true? You have to be focused. You have to take it seriously. I found, and again, I've had the stock switch now for 14 years, that a lot of people don't take it seriously enough. They just think they can just, you know, buy every dip. Now, again, the market's been very bullish this year since we had the sell-off. So I'm talking about after the Liberation Day, beginning of April, the market's been bullish. If you bought every dip in the market, you'd be up. That's not going to last. Does it end this week? It might, it could. But nothing goes straight up and nothing goes straight down. And it's very interesting because a lot of people have been making money going long and missing out on opportunities to short. And then when we sell off, or if we sell off again, they're going to miss out on those opportunities too, because they've been going long now for the last 6 months, thinking it was going to last forever. Here was a trade we did actually last week on the 10th, which is kind of funny here, that we shorted Apple because it's a very strong stock, but we did. So we did Apple, 9:10. Here was the day. So what do? I get up in the morning and I'm looking for stocks that are gapping. Now, if you don't know what a gap is, I'm going to explain it to you. A stock gaps when the closing price one day is different from the opening price the next day. Okay, so I'm going back here to the 9th and the 10th. So Apple closed here at 4 o'clock and opened lower at 9:30 the next day. So we shorted it. This was the 10th. We did a day trade. Again, this is the margin trade. We shorted at 230.50, exited at 228.80. This kept going. This kept going. This came all the way down to 226 and change. So I got out of this as a day trade, and it was an early morning trade quick, but I could have made more. We did a put in this too. We did the 230 puts too, all right? But anyways, a gap is due to the close and the open, and then I'm trying to determine what this gap is going to do. Is it going to fill the space up? Is it going to fill the gap? Is it going to fall and continue in the direction of the gap? I always play the gap in the direction of the gap, just so you know. So again, if I rate it using my checklist system and I determine that it rates well, I'm going to go after it in the direction it's going, which in this case here was a short. If I rate it and it doesn't get a good rating, fails in the rating system, and I say, oh, this could go up, I'm not going to go long it because I never, ever, ever go against the direction of the gap, even if I see that it's going to lift. You know what I mean? One of the ones that we didn't do was Microsoft on earnings that failed, sold off like a hot cake. And again, any questions, let me know here as we're going along. So here was Apple. Again, this was the day that we did it. It was just a couple of days ago. We shorted it, got in, got out, got the drop. Again, I wanted to show you in here how it came down to 226. I was way out of it because I got out of it up in here quickly in the morning. I like to trade fast in the morning, half an hour, maybe 15 minutes. I could be in and out of trade in 5 minutes, but I'm looking at the morning period here to get the moves for the day trades. Options I will hold, but day trades I'm out of fast. So the one thing, again, for me is I'm very, very consistent with my results year over year over year, week over week, over month, because I'm doing the same thing. I'm mostly shorting, number one. And number two, I'm only trading gaps. And I'm looking for the fast trades, quick trades. Now, why do I mostly short? You say, well, wait a minute, the market's been bullish. Why aren't you going long? Some trades we've done long. I've gone long some things, but I'm mostly shorting because I find that shorting gives me a niche. Stocks sell off way, way faster than they ever rally. I'm also very good at shorting, okay? So this allows me the opportunity then to also see when something's really strong that if I do want to go long, okay? But the consistency counts, it matters. And I think a lot of people are too all over the place with their trading, doing too many different things, or even taking the same stock in two different directions the same day. I never ever do that, okay? I never ever do that. And it's very problematic to do that because then if you're doing that, you really have conviction in nothing. Does that make sense? Any questions here so far? How's everyone doing? Okay, I'm gonna keep going. Like I was saying, again, consistency helps you stay in this business. Then you don't blow up your account, have to refund it. And you also never get good if you're doing too many different things. And again, excelling in something, getting really good in it with trading with a specific system or strategy helps, just like if you were doing a sport or if you had a certain career path. You know what I mean? Like if you're an accountant, if you're at a CPA license, if you've been doing accounting, you know, for 15, 20 years, you know a lot about tax law, okay? Taxes. If you're jumping up and down doing a million things like people do, always trying to catch the next get rich quick thing, you're never going to really get good. And so for me, it was always about trying to find the best trade a day and honing in on one thing and then adding the size to it and then adding the size. So one of the biggest trades in the last month that I did, again, was PLTR, which I'm going to go over here. But how did I know to do it? Because I rated the gap. So this was PLTR. We shorted it, okay, was a put. We got in it, and I called it on 8/14 right here. And again, here is the gap. Stock closed here, gap down, open, rallied, dropped, closed here, fell off a cliff. So we did the 180 puts, which we took here, was above the strike. When we did it, we bought the put and I sold it to exit it, okay? So again, this is a sell-off. This is panic. Panic comes into a stock big and quick, and here was the newsletter. So if you decide to come and join my group, this gets emailed to you. The newsletters get emailed to you. This was 11:38 on the 14th, and we did this trade. This was really actually relatively cheap. $3.25 for one contract, sold it at 35. Return on investment was 977%. Profit was $95,250 on a risk of $97.50. Now that's a big risk, but it was a huge trade. What you could have done is you could have done two. You could have gotten the drop, got out of one, held the other one. Now, if your risk is smaller, I call it a beginner risk. It's a little bit more really because I have 1,300 here. You could risk on average 1,000, or like I said, you could do one. 4 contracts sold at 35. You could have made $12,700. Again, this is taking it, getting the sell-off, letting the panic come in, get out. Again, this was accurately predicting that PLTR, I'm going to go back to the chart here, would in fact continue in the direction of the gap. And that's what happened. Okay, that's what happened. So again, this could have flipped. For those of you that don't know this stock and haven't been following it, most people have been following this. This has been one of the popular stocks to trade in 2025. It's been strong, okay? It's been in an uptrend, but that was one of the biggest shorts we had in the last month. So again, whether you want to trade full-time or part-time, the idea is that you want to get the accuracy. You want to have the consistency. The idea is you want to make money. It doesn't mean that every trade that you take is going to work. Every trade you take is not going to work. And if anyone tells you that, don't believe them. So I've been trading now for 17 years. I have trades that lose. That's why I showed you the stats, okay? Bottom line is you have to have more winners than losers. That's how you get somewhere. And then on top of that, you have some big winners. So when you have more winners than losers, and then sometimes you have the big winners like the PLTR, it not only covers the trades that lose, it gets you ahead, okay? And again, you know, we would all be risking our whole accounts every day if we, you know, never lost. That's not realistic. Even people that, I live in New York, I live in Manhattan, I live in one of the wealthiest neighborhoods in the country. There are people that trade, that run hedge funds, they take losses. I mean, it's just like, the only difference is when someone has a lot of money and they take a hit, it doesn't seem as, you know, emotional for people that have a small amount. But I will tell you that there are people that sometimes run hedge funds, okay, or take even positions, they're professional traders or they're trading large size, that take hits that emotionally affect them as well, even if they didn't blow up their account, because they might have taken too much risk. You know what I'm saying? You've seen that with certain market moves and stock moves. Again, the tariff situation that's been going on all year. You've seen a lot of people that were just shocked by that when we had that big sell-off, you know, that was February into March. So again, there's lots and lots of things that are going on all the time. We can't always predict everything that's going to happen. You might sometimes get stuck in a trade that something happens that's unpredictable, okay? Again, it doesn't mean you give up, but if you're sizing yourself correctly and equally, then it's one loss and you get up the next day and you proceed, okay? So you need the right tools to be successful. You need the right tools to get the good results. And for me, my tool is what? My rating system. I was talking about this. This is what I do. I get up in the morning and I look at the gap and I rate it on the daily chart. I have a 26-point rating system that helps me determine the direction that the stock is going to go. Is it going to keep going up? Is it going to keep going down? And then I know the direction to take it. Sometimes I do a day trade and an option in it. Sometimes I do one or the other, okay? But again, sometimes I do both. So if you only like to do options, you could do it as an option. If you only like to do day trades, you could do it as a day trade. So we did a bunch of trades in this PLTR. This trade was a nice trade too. It wasn't as big as the 180s because we were in that very, very early and it fell, you know, all the way down, broke 150, but we did do the 160s too. So here on this particular day, this gapped again. Stock closed here, gapped down. We did the 160s and it fell off a cliff right in there for 2 days. That was a quick one. So we did it on the 19th, 10:47. You would have gotten the email. Again, this was a 279% return on investment. It went quick and fast. And again, just because something expires on a Friday, even if you have 7 days left or 8 days left, it doesn't mean I'm holding it. Again, I'm a momentum trader. So when I say I'm trading on the side of institutional money, I mean the money side that's making the big moves, the momentum moves. When I started talking today, I said, I think this is going to be a big week. Why? Institutional money is going to take action this week. I guarantee you that's going to happen between Wednesday, Thursday, and Friday. But what actions they will take, I don't know, because I don't know what the Fed's going to say. And even if I did know what the Fed was going to say, I don't know what the reaction of the big money is going to be until I see it anyways in the gap, which would be when? Wednesday night, Thursday morning, Thursday night, Friday morning, okay? So again, the market's been up. We've had a big rally. People are long. Institutional money may dump it, may take profits here into this meeting results, you know, whatever Jerome Powell says, or they may continue buying the market. So again, it's exciting to trade when you know you have the side of the big money with you, because it's very, very easy to make money, and because you're not pushing it. And then whether you have one contract or 100 shares, a small size or big size, it's easy to make money. You don't have to take big size, actually. If you've got the institutional money moving the stock 10, 20 points. Here is a beginner risk, a smaller risk. Again, if you took 3 contracts and sold at 18, this is, again, the 160 PLTR trade, okay? So anyways, I use a checklist. This helps me determine the direction the stock will go in the gap based on a daily chart, which is using what? Technical analysis. So again, what is technical analysis? It's looking at past price data to predict future price data. And that's what I do. So again, you can look at something and say, okay, well, this is here. Where's it going to go next? Okay, now you say, well, what causes a gap? News can cause a gap. Fed meeting, we're going to have that Wednesday, could cause a gap. Market move could cause a gap. Sector related could cause a gap. Earnings reports could cause a gap. Terrible accidents. Sometimes you have the plane crashes. Then you have some of the airline stocks. So it could be all kinds of things. CEO quits. So you have a lot of things that can create, or you could say reasons for the gap. Okay. But I do prefer to short. I prefer to short. And I consider myself lucky that I know how to short, because the fact that many retail traders don't know how to short or don't like to short. And then when stocks fall, they don't know what to do. They don't know what to do. They kind of freeze, like a deer in headlights. So again, I will go long. Sometimes when I go long, it's for a day or two, or maybe in a day trade, or maybe I'll go long the market sometime. Not right now, I'm not long the market here. We went long CDX, which is oil, and that worked. But I don't go long most days. I'm mostly short. I feel like it gives me an edge, and I feel like, again, I get the biggest moves to the downside. So I'm not saying that panic buying doesn't exist. It does, but it's very, very, very rare. And so more than not, you get panic selling, okay? And so again, it's something that is fun to trade because you can get the big moves. So how do I determine what the smart money is doing? I use my tools. It's my rating system. It is based on technical analysis in my gaps. I get up in the morning and I do the work. I never skip it. So I started trading in 2008. I developed my system over the course of 3 years. I don't skip around. I don't guess. It's a 50-50 crapshoot kind of thing. No, that's not how I think. That's not how I trade. When I take a trade, I believe it's going to work, and I size myself accordingly. But I do the work in the morning. I get up early. You got to give yourself at least an hour to prepare and get ready to trade. I go through my process. I go through my checklist. I make a small watch list, and I try to narrow it down to 1 or 2 things. And again, you know, if I have 10 things, then I'm still trying to narrow it down to do the best thing, because it's very difficult to do more than 1 day trade at a time. I'm not saying I never do. Sometimes I'll do 2 things at a time, but it's a lot easier to do 1 trade at a time. Now, here was another one here. We did Walmart. Again, I'm looking for accuracy. Accuracy what? In the pick. In the pick, I'm looking to make the best pick that's going to have a big move and get the direction right. Walmart up here. Again, this was back in the middle of August. Not quite a month ago. Stock closed up here, gap down. Again, this is a gap. So close up here around 103 and change, or 102 and change, almost at 103, gap down here to 99 something, open, dropped, boom, boom, boom. So again, this sold off. I actually got out of this early. You could have done a day trade here, could have done a day trade here, could have done a put, could have held it all the way down. So I did do puts in this and day trades, but I actually got out of that a little early. 822, we did this. I shorted at 98.45. Again, this is a day trade. You need a margin account. Got out at 97.38. That's a good trade. Give me $1. Boom, out. Again, chunk it, chunk it, chunk it out. How am I getting these results that I showed you earlier? I take it, get the move, get out. Take it, get the move, get out. I'm not buying and holding forever. Just like I'm not shorting and holding forever. Okay, it's called putting together a week. I'm an active trader. I'm a momentum trader. All right, I'm not a swing trader. We're not buying and holding stocks forever. Okay. So again, this was a nice trade here on this day. This was the 22nd. We shorted it. Profit was 32.10. Again, you could have done 1,000 shares. Could have made a little over $1,000. Again, $1,000 a day is $5 grand a week. What's wrong with that? Nothing. Nothing. I mean, to be able to do these trades in several minutes and just, you know, I don't trade all day. So the room's up in the morning for half an hour. I'm not sitting at my desk from 9:30 till 4. I'm doing other things. And again, that's the one nice thing about being a professional trader too. So I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock and where to take it and when. Again, it's about being professional, thinking of this as a business, taking it seriously, which I've found that a lot of people just don't take trading seriously now. I mean, they say that they do, but they really don't. They really don't. They don't think long and hard enough about the stock picks that they're going to take. They don't think long and hard enough about their targets, about their entries, about which direction they want to take something. And if you want to get good results, you have to think about it. You know what I mean? And so that's important, okay? So I trade inside of institutional money for the momentum moves. Big money is where it's at, and that means big momentum. So here was the day trade then that we did, or this was a day trade. I'm sorry, this wasn't that one particular day. This was 8:25. Shot close here, gap down, open, drop. We shorted PLTR here on 8:25. Entry was 154.90. Exit was 153.50. Profit was $3,500. We got in, got out. And you said, well, this is a tail. It closed green. There was a short here. There was a short here. We did a day trade. Again, I'm looking for $1 or more. In, out, done, boom. Call it a day. Again, this was a margin trade. Okay. So you have to have a margin account to do margin trades where you're shorting it, whether it's 500 shares, 1,000 shares, okay? Any questions here so far? How's everyone doing? I don't know if the questions are on, Jeff. Are they on?
Yes, they are.
Okay. Very good. All right, I'm gonna keep going. So I was talking about the Fed, okay? I was talking about the meeting that is coming up on Wednesday, okay? If you're trying to trade the news or predict the outcome after the news or trying to look at fundamentals, or if you're like trying to predict what the Fed's gonna do, don't. Again, you don't have a crystal ball, you don't know. But when you see the price action, okay, that's fact, okay? You see it, you say, oh, the stock is trading at, 182.50. That's not up for debate, okay? And that's why technical analysis is so powerful. And again, what is technical analysis? It's looking at current price data and then trying to predict future price data by looking at current and past price data. That we can see and we know, and it's real, and it's in the candlesticks, okay? Predicting what the Fed's gonna do, what bond prices are gonna be, 3 months from now, 6 months from now, these are impossibilities, okay? But actual data, live data on the daily chart, current time, the market's closed right now, it's 5:30, but during the day, we see it, we see the open tomorrow morning, we can see that is factual data, and we can use that to help us make decisions about taking trades, okay? So again, my tool is a rating system. You have to go through, you have to use your brain, you have to go through the points on the daily chart. I use this tool each morning to determine what stock to trade and when. It's a very useful tool in any market, but particularly in this type of market. It is also can help you decide if you should exit a long. Say you're in a long and the stock acts down against you. It could sell off and say you're up, or say you're upside down. You want to get out because it could keep falling more, you could lose, okay? You could lose more or you could lose your profits. So it's a very useful tool and it takes the guesswork out of your trading. But, I found when I started trading, it was very, very important to get good at one thing. And the longer that I trade, the more experience I have under my belt, I realized that too. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. Again, what is power money? Large professional traders taking large size, hedge funds, big banks have trading desks too. They take size. It's a type of size that moves the stock, okay? This brings momentum and opportunity, and you want to trade with the side of power. Reading this is a skill. The skill can be acquired with education, okay? And, when I started trading, I took one class, and I didn't learn how to make money in that class, but I did learn the basics of technical analysis, and I realized that was important. And then I developed my own system. But, if you're not following someone that knows what to do and you don't have a good system, it's going to be hard for you to make money unless you're in a trending market. Like now, the market's trending up. So people are just going long and making money and thinking they know what to do, but it's not going to last. It could end this week. It could end in a month from now. It could end February 2nd. I don't know. But the point is nothing goes straight up or down. And then when people don't know what to do after they thought they would know what to do is when people tend to lose. And they tend to risk the farm and risk too much money and go all in and double down and then lose all the profit that they made for the last 6 months if they've been going long and lose it very quickly, okay? So in any market conditions, bullish or bearish, you need to know how to trade and you need to have a set system that works under any market conditions. I can't stress that enough. I just can't stress that enough, and I don't think people understand that, Some people have been trading a long time that I teach. Some people are trading longer than I'm alive. Some people have never traded at all that I teach. But trading education is very important. Far too often, traders don't understand exactly how important it is. People feel like they don't need education when the times are easy. Just go long anything, the market's going up, making new highs every day or every week. It's important under any times, but in the easy times, people don't realize how important it is. But it really is important actually all the time. But in the hard times, it's the make or break you. You know what I'm saying? Because you don't want to lose your capital. You don't want to lose your initial stake. So let's say you open up an account, you have 25 grand in it. You don't want to lose that. Do you know what I'm saying? So if you build at 25 to 50, you don't want to blow it all. And again, this is why knowing both directions, how to go long and how to short, is extremely important too. But it is okay to ask for help and admit you do not know. It's also okay to admit that what you're doing is not working. If you're trading and losing and you're like, I have no idea, I don't understand this. Just admit it. It doesn't mean you're dumb or stupid or there's anything wrong with you. It just means you don't have a system. That's it. Or you're not using the right system, or you're not following the right mentor. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, the faster you can turn it around. And you can turn it around very, very quickly. So how can you become successful trading? It's not really by risking a lot. Anybody can risk a lot. Again, you can throw your whole account in something. If it's a bad trade, you're going to lose the money though. That's just risk for risk's sake. I developed a system not to take risk for risk's sake, but because I felt like the risk was worth putting my money on the line. When I started trading, I was working my mortgage job full time. I didn't want to lose my money. And even when I figured out what I was doing, I still didn't really want to lose my money. So I was like, okay, if I'm going to risk money in this trade, then it better darn well be good. Now, it didn't mean that every trade loses. It didn't mean that every trade wins. It meant that I had more winners than losers. And it meant that I felt it was worth taking the risk. It was worth taking the risk. Like, if I don't take this, I'm crazy not to take it kind of thing. Do you know what I'm saying? And I felt like if I get 20 points of 26 points, like I'm crazy not to take it in my mind. I still feel like that now. Okay. And that's what makes me do the trade. Do you follow what I'm saying? But it's about the consistency and then having the focus. And then of course being practical and professional, which again is not that hard. It's not that hard to do. It's just that I think a lot of people are all over the place and they need a focus and they need to just calm down. You know, if you have an account, you want to grow it. It's not by doubling down and becoming a pig or over trading. It's getting good at one thing. It's taking time. And like I said, it's chunk it, chunk it, chunk it, chunk it out. So you need a winning strategy. For me, mine is called golden gaps. So what is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So there's gaps every day because guess what? It's very rare that something would close at 32.02 and open at 32.02. Yes, it can happen. That would be called a neutral gap, but it's rare. All right. Now, what is a gap? Let's take a look at AMD. This was just last week, 2 weeks ago, whatever. Stock closed here, gap down, open, dropped. Okay, this was a Friday. So AMD closed at one price here at 4 o'clock, gap down the next day at Monday, and open, or Friday, I'm sorry, and open at a different price, lower. And I said, you know what, this looks like it's gonna fall, and then it did. So again, this is a short. You would have wanted to be short. You could have done a day trade, you could have done a put. Here's another example of a gap down. Again, stock closed here, gap down. Stock closed up here in the 130s, gap down here under 125. Again, you could have shorted it, could have done a day trade, could have bought a put, could have done both. Fell, boom. Had another gap here actually last week too. There's another one. This closed here, gap down, open, drop. So again, a gap is a difference between the close and the open. I'm just focusing on bearish gaps, but I will go long, but I prefer to short. The reasons I explained earlier, but it's determining who's in control. So who's in control of the market right now? The bulls. Market made new highs today. So again, if you determine the control, again, this isn't about the trend. I'm talking about on the live day. You want to take a trade right now, make money today. Because if you said to me, well, the bulls are going to be in control, for the next 2-3 months, you don't know that. Nobody knows that. And that is my point. That's my point, why you have to learn how to short and go long. And on top of that, it's actually not that hard to make money shorting, even in a bullish market. It's actually a lot harder to make money going long in a bearish market if we turn. And again, I'm not going to go off on a tangent about that. That's a whole discussion for maybe another webinar. But again, one of the reasons why I found that shorting is so successful is because you can short a lot in a bullish market or a bearish market. Do you know what I'm saying? And again, short moves happen quick, fast. So here's the WMT. Here we go. Stop close here, gap down, boom. My point about getting the right pick in the direction right is that you have to get the direction right to win. If you get the direction wrong too often, you'll lose. And again, you got to get your sizing right too. But I developed a system. It's a 26-point system that I turned and coined the term the golden gap. A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You do the trade as a day trader option. I do both. I'm figuring out on the daily chart. I'm taking the trade of the 1-minute chart. So how do I know ahead of time where stock will go? I rate the gap. I use a 26-point checklist. This checklist tells you what to trade and what to look for each day. And again, I'm doing active day trades, but I sat down this year and I made a list of stocks that I want to do in my retirement account. And then I made a list of targets. I'm very good at figuring out targets too. And again, I'm young, okay? I'm watching for my entries in those stocks that I want to get in, none of which I've taken yet, to be honest with you. So the thing is that, again, you can use this system for long term, which I am going to do for my retirement account for myself. I have a self-directed account. But that's not something you're actively doing on a daily basis. On a daily basis, day over day, week over week, if you decide you want to trade, the point is to make money where it's income generation. The point of long-term swing trades or a retirement account, again, is just what it is, your retirement account. It's long-term investments where, like, so again, I wrote some targets down, which I'm not going to get into. This is a whole nother discussion. Some of them are probably crazy targets. You can probably laugh at me and say, there's no way in hell that's going to get to that number or whatever. And these are actually all long positions because I'm just going to buy the stocks that I like. They're crazy targets, but I've been trading so long now that I have a feel for how things move with institutional money that I can tell these stocks over my life are going to get to these numbers. Now, how fast or when, I don't know, and I don't care because, again, I'm young. When I get in the position, I'm just going to let them ride out. But the point is, it's very useful to understand, no matter what you're doing. If you're working full time, if you don't want to do this as a job, if you just want to do this on the side, it's very useful to understand technical analysis for even something like your retirement account, because many of these money manager people, and again, I hear with them all on TV. I hear with them all on TV. They don't know how to read a chart to save their life. They may as well be blind reading the chart. They don't know how to do it, okay? You could better manage your own accounts, okay, even if you don't have a self-directed account. But you could even manage your own, because you can go and say, I want to be in this thing, I want to be in this thing, I want to be in this thing when you're in a fund. And you can better look at your long-term positions too. But again, retirement money, long-term savings money, it's not something that you're generating income for right now. That's for when you're not working at all, when you retire, money that you want to live on. And anything that people think that they can live on now, just add a couple zeros to it, fast forward 10, 15, 20, 25, 30 years from now. Because look at the cost of inflation, what things cost. Again, we probably have a lot of different age groups here. But I mean, the cost of things now, look at how much it's changed in 5 years. Go back 10 years. Go back 30. So, I mean, again, there's just no downside to understanding how to trade, actively trade, read a chart, technical analysis, long-term investments, all of it, okay? Like, the more knowledge you have, the better off you're going to be for yourself. So again, how do I determine who is in control? I rate the gap. This gives me a daily focus. So again, this seems really funny now that we did Q puts and made money, but we did. So on 8/18, I shorted the market. I did the QQQs 570s. We had a nice sell-off here. This was an options trade. What day was that? That was the 18th. Oops, here's the chart. So we did it here. So I bought puts here. Remember this? We sold off. Again, we did a put, and you could say it was kind of aggressive, but it worked. It was a big trade. So we did the 570s. Look where it went. Again, that was just a couple weeks ago. So they were cheap, $1.70. $1.70. Sold at 1040, 518%. Return on investment profit was $44,000. If you took 6 and it was 1020, you could have made over $5,200. That was buying QQQ puts at 570. Again, I'm not short the market now, but I'm also not long it right now. But in that particular week, institutional money came in and sold the market. I don't even remember why. There's always a reason why. I don't even remember that it was like a month ago. But again, I rated the gap. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. The benefit is that you can win big trading on this side of power. So I started out today saying a lot of people all over the place. That's the case. Too many people are all over the place. You have to have a system that gives you a focus. And for me, it's gaps because they're really the most powerful show of price action in a chart. Gaps have large moves. The gaps can move up or down. Some of the biggest momentum moves in a daily chart come actually from a gap. And when I trade, I'm looking for in trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. So I do this with the checklist. I go through and rate the gap. Again, if it rates 20 points or more, I'm taking it in the direction of the gap. This helps me determine who's in control. Because again, if the bulls are in control, you've got to be long. If the bears are in control, you've got to be short. So it's like, again, it's a back and forth control between the bulls and the bears. And again, I'm talking about daily control. This has nothing to do with the trend, okay? But it does have to do with momentum and money, and a big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. It is, okay? So again, I look for gaps. I'm only trading them when they rate good. I'm chunking it out every single day in the room. And I really am in and out of my day trades very quickly, very fast. I'm looking to not sit at a computer all day. My options, I'll let them ride out. It's about working smarter, not harder to get good. Any questions here so far? How are we doing? Just looking at the clock. I have a little bit more time here. Any questions, let me know. So gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you. And like I said, shorting is a specialized thing to do because most retail traders don't like to short, don't understand shorting, and won't short. They go long. And then when the downturn happens, whether it's in the market or a particular stock that they're trading or any selling at all, people get scared, they panic, they don't know what to do. They go long, the stock sells off further. And so again, like I said, you should know how to do both sides. But for me, I'm mostly short. And this just, when you think about it, you're like, oh, okay. I'm gotten good at one thing, and that's really all you need to make money. Like all you really need is one good trade a day to make money too. So be consistent. It helps you in any market. And again, when you think about it, following the institutional money, following the big money, it does make sense. So I have a system. I developed a system. I've been doing it now for 17 years. It's hard to believe. It's a long time. The system tells you how, what, and when. How to make money in the market. Trade a strategy system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap or rate 20 points or more per the Golden Gap 26-point rating system. Trade the gap in the direction of the gap. When do you trade them? Early in the morning on the open when they set up and trigger, and you must have a structure in place in order to make any money at all consistently. It is about the consistency that many traders lack in their systems. So I'm measuring gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, preferably, like Walmart, like AMD, like the Apple last week. I want a big move, okay? Want a big move, early confirmation of the bias of the move between 9:30 and 10, gotta have it, or I'm not doing it. Like, I'm not doing trades in the middle of the day if I didn't see anything in the morning. And precise entries with follow through and a good risk to reward target potential, and that's what you'll learn in the class too. Someone has a question here. How can you check all 26 indicators in a very short time to decide which gap is good or bad? It doesn't take that long once you know how to do it. If you're brand new, might take you 5 to 10 minutes. Like if you're new. Class is this weekend. Say you trade Monday morning, you just did the class, Saturday and Sunday. Monday morning you get up. An hour, okay? 5 to 10 minutes if you really need to go slow. But again, I've been doing this a long time, but I still don't rush it. So you're not going to rate 10,000 things. You're not going to rate every gap in the world. You're going to automatically go through and say, no, no, maybe, 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 no, no, no. And then you make a list of the maybes. And then you might have like 6 or 7 things. You go through and you rate them. You follow what I'm saying. You're not rating every single thing in the world of gaps. So you put a plan of action in place. Trade only golden gaps are rated according to the 26-point system. So you have a high rate of success in your directional bias. Get the best entry you can with precision early in the morning to get good risk to reward trades, and create a money management plan for yourself to achieve your goal of becoming a professional trader and then working for yourself. And I say to people, take your time. You have all the time in the world. You don't want to lose your starting capital. You have all the time in the world to learn and do it. And you want to keep your mentality positive. You want to stay positive. If you've been trading for a long time and you've been losing, you know, again, losing makes you feel like crap. But consequently, again, making money is great. But if you're high on the hog or high on the horse and you're big in the head thinking that you're some great person now making money for the last 6 months just buying every dip in the market, that's just because the market rally. It doesn't necessarily mean that you're doing anything, that you know what you're doing. So you have to stay steady. Don't get too big in the head and don't feel like crap when you lose. You go steady by steady by steady, and you go use the same consistency with the risk, with your system, chunk it. That's when you're going to get where you want to be, where you're building your account, and then you're getting good, and you're learning as you go, and then fast forward 6 months, fast forward 12 months, fast forward 5 years, and you've got a lot of money in your account, and you're risking a good amount, you know, an advanced trader risk. I tell people, don't go too fast. Even if you have a big account now, go slow. The system I use to find the right gap each day is called the Golden Gap 26-point checklist. And you need conviction to make money, and you get that from understanding why. I get people want trade alerts and things like that. You have no idea. You have no idea where the person called to trade at all. If I just had a trade alert service and you didn't understand what I was doing, you wouldn't have any clue why I called the trade, and you wouldn't understand it either, and you might kill it, and then it might go into work. So, I mean, again, understanding why actually is how I can do so well. And it doesn't mean that every trade works. Sometimes things don't work, and sometimes there is a reason why it didn't work. Sometimes there isn't. But if you know why I'm doing the trade and why I'm holding it out to its natural position or move, giving it time, like I do weekly options, it'll help you through the wiggles and jiggles, because the wiggles and jiggles is what kills people, okay? Truly, people can't hold on to a trade and give it a chance to work. And most of the time, that's because they don't understand they also have too much risk on. So your dreams are possible. Be realistic and grounded so you can attain them. I cannot stress enough how being grounded in what you're choosing to do will help you attain your goals. So empower yourself today. If you want to learn how to trade, I can teach you. Again, the Golden Gap course is a complete system to use to trade. I teach this class once a month. Again, I appear on TV during the week and trade during the week, during the weekends. Once a month, I teach the class. There's only a few more classes left this year. This is the class you'd want to get in on if you want to trade with us for earnings season. So the class is called the Golden Gap Course. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. It's September 20th and 21st, 9 a.m. to 5. Again, this is this weekend. Cost of class is $69.99. Class is online. You can be anywhere in the world and take it. And I'm doing a welcome fall special. This picture I took with my phone. Can you believe I took that with my phone? It should be a postcard. This will be all fall colors in the next 30 days. It's gorgeous. But this is, I just took this picture over the weekend, but this is one of my favorite pictures in Central Park. I live along the park. So the welcome fall specials, if you sign up for the Golden Gap course by 9/19, you will get the options newsletter subscription free to the end of next year. That's more than a year. That's all of this year and then all of next year. It's a long time and it's a lot of trades. And again, I showed you the year-to-date stats and they're just for 2025 for the first 8.5 months. The newsletter, the trading room, and the market report subscription all through the end of next year. So you can take your time and you don't have to rush it, okay? Any last minute questions here from anyone? I'm trying to think if there was anything else I was going to say.
Hey, Melissa, did you see the question about the 26 indicators?
I think that was the last one that I answered.
Okay, I just wanted to make sure.
Oh, you don't say what 26 points your presentation? No. The class, I teach that in the class, whoever asked that. The class is 14 hours. This is a 15-minute presentation. One, I charge money for that information. It's really good information. It's worth the cost of the class. And number two, it's 14 hours. 14 hours. Jeff's only letting me talk for 50 minutes. And I felt like I was talking really fast. Was there another question? Any other questions?
Those were the two that I saw.
Yeah. So anyways, think about what I said tonight. Again, a lot of good information, a lot of good takeaways from today. You got to watch this week, people. You have to watch Wednesday. If you're in the market, if you're in trades going into Wednesday, you're taking a risk not knowing what the outcome is going to be of the Fed meeting. Please be careful. Don't forget to chunk it, book money. And if you're interested, email me at melissa@thestockswoosh.com. Am I happy with 26 points? Yes. I mean, if I could come up with 126 points, I would, but I haven't added anything into my method for a while now. I think I've added things personally, which I can't necessarily communicate in a point when I'm trading, which is just experience, which is why being in the live room really helps, where I'm seeing something and I'm saying, no, we're not doing that, or we're doing this one, or get out, or I say something like that when we're in a trade and I'm like, take it. So that's just not a point. It's just experience of reading live trading action, which is the room, which is if you're in the room with me, and if anyone's here and you're in the room with me, you know, the live, my brain works fast, the market moves quickly, I can see something fast, and I'm talking and trading at the same time, and you gotta be there, you gotta be in the room to get it. That's the only overlay, which is not a point, but it's just my experience of trading for a long time. Any other questions? Listen, have a great night.
We did have one more from Kwakthon, and he wanted to say, what do you think you needed to add to increase your winning rate?
Well, my winning rate year over year for the last umpteen years by the end of the year is between usually 70 and 80%. Someone's asking that. I'm showing the stats right now. I'm at 65. We're only 8.5 months into the year. So if you want to get on my marketing list, you can email me, check back, or go back on YouTube where I have stats from 2024. So my end of the year stats is probably going to be close to 80. But again, I'm still making money. So it's sort of I'd love it if I was at 100%. 90 is ridiculous. 85 is very hard. There are weeks where every trade I do works, but on an average year-over-year basis, I'll hit over 70% by the end of the year. I don't know if I'll hit 80 this year or not. We'll see.
I have a good feeling about it.
I'd love to make as much money as I can in the next 3.5 months, but I'm not gonna go crazy. You know what I mean? So we're in some longs and we're in some shorts going into tomorrow. but I might get out of some of those before Wednesday because I don't know. I'm just telling you, I don't know what Wednesday's outcome is going to be. And I know a lot of people have 100% conviction that they absolutely know what Jerome Powell's going to say. They don't. They don't.
For sure. And he's always he's had a tendency to surprise so far. So we'll see.
That's very, very true. Listen, Jeff, I was thinking about you with Utah over the weekend, so stay safe.
Yeah, we'll do. Definitely.
All right, have a good night.
Thank you so much, Melissa. Good to have you.
Thanks.
All right, I'm going to do this. Okay. And then I'm going to go ahead and just turn the presentation back over to me. Hope you guys are all enjoying the show, the event today. Appreciate your being here. We got one more presenter, and I happen to like him quite a bit. So we're going to start in just a second. I do want to say, as we kind of wrap up and get into the last session, I want to say thank you to our sponsors, Stocks and Commodities Magazine. You can find out more about them at www.traders.com. They've got 17,000 articles that they've done. They've had 1.3 million subscribers. They've been publishing since 1982. So there you go. I also want to invite you to join the community. We have a growing community of people that like to trade, like to talk about their trades. They're technical traders, get a lot of really good stock ideas. Myself there. If you go to thetradersforum.com, you can get, we do interviews, we do Q&As with market experts. We do lessons, we'll just sit there. The last thing we talked about was the Ichimoku method. And it's designed to be a community of traders looking to help each other. And it's been done a really good job at that. So if you haven't yet, I'd sign up for free. You can sign up for free at thetradersforum.com, and I'd recommend it. And if you do, I'll see you there. So we are, of course, Metastock. Metastock's been rated the #1 software in its price category for 32 years in a row. Greg, are you available too? Michael says he's enjoying the show. I know that we've had a bit of a long day, but what I want to do, you know how so it's really important for engagement for people that ask questions, make comments and that kind of stuff, right, Greg?
Yes.
So instead of doing a number, we're going to give away the grand prize of the day, which is, of course, going to be Metastock. So what we're going to do is we're going to basically look through the comments and we're going to randomly pick one. But as we get started, I want to kind of be clear about what we're giving away. We're going to give away a 3-month subscription to Metastock. Real time.
That's a lot.
Yeah, that's a $300 value right there. Metastock, as we just said, is 32 years in a row, award-winning software. We've been talking about how good it is at scanning and testing and all that kind of stuff all day. So I'm going to give away 3 months of that. If you're a Metastock user, we'll extend your subscription out for 3 months too. So we'll give you 3 months of the real-time news service. This is a news service that's basically a competitor to Bloomberg. We have a white label, we call it Metastock Zenith, but Bloomberg's about $1,300 per month. It's the $20,000 a year subscription, and a lot of the same information news. It's an institutional quality feed. It's actually the same type of a news service that you'd subscribe to if you're a hedge fund or an institution. So we're going to give you 3 months of that. We're going to give you 3 months of Learn Metastock, which is normally $99 a month. It's how we train and onboard all of our employees. And all of that is going to go to the next winner. So, Greg, you know what I'm going to have you do? Yeah?
Yes, you're going to spin the wheel, and I'm going to tell you when to stop.
Exactly.
Something to that effect.
Exactly. But first, I'm going to tell you a joke.
Okay, I'm all ears.
You know this one. What did the ocean? Yeah, I think so. What did the ocean say to the beach?
I just waved.
It just waved. All right.
Well, are we doing this? Is he not here?
No, he's here. He's
very
here.
nice. Okay.
Yeah. We're gonna stop.
Whenever you tell a dad joke, I'm feeling this coming on.
You feel like there's a technical problem or something, right?
Well, but really quick, the question that we asked people on YouTube, the survey question was, is this fall going to be a rally or a fizzle? And what would you get the results of that were?
I absolutely know, because I'm looking at the poll right now. But what do you think? I think,
well, I'm looking at it too, because I was going to answer the question. They say rally, 68% say it's going to be a rally, 32% say it's going to be a fizzle. I'll keep on asking that question all week long, but I have to say, anytime that I ask our fine listeners and viewers, if they think it's going to be bearish or bullish coming forward, they almost invariably say bullish. We have very confident viewers.
Well, and the market's at an all-time high, so there is. Yeah, I would say that there's Jake Bernstein spoke a little bit earlier, and he did like a seasonal article on the Dow that looked at 100 years. And generally speaking, one of the biggest pullbacks in the year historically for the Dow Industrial is September.
Oh.
And early October. And then November and December are unusually bullish. So that doesn't necessarily mean that that's going to be what happens this year. But seasonally, there's a tendency for there to be a bit of a pullback in September and October. So.
Okay, let's give away this prize.
All right.
And get on to Barry Burns.
I'm at the very top of the list. I'm gonna start scrolling. I'll look, and then I'll just have you tell me when to stop. And whoever made the comment where I stop is the person that's going to win the Metastock Grand Prize. So
okay.
I'm gonna start scrolling right now.
Stop.
I scrolled quite a distance there. Actually, the person that won was Mitchell B. And I'm surprised I went all the way to the bottom because what he said was pick me.
Wow.
Congratulations.
Put out good vibes. Good things.
There you go. I thought we had more. Yeah, like that. I would scroll to the bottom of that quick. All right. Congratulations, Mitchell. You're picked.
Congratulations, Mitchell.
Yeah. All right. Greg, thanks for the assist. I appreciate it.
You got it.
All right. Our next presenter is a good friend of mine, Barry Burns. Barry's been a partner of ours for, decades. I like his top dog trading methodologies. Actually, we talked about some of the interviews we did. We just did an interview with him a couple weeks ago on the Traders Forum, and he did a great job. So today he's going to talk a little bit about his 5 energy methods for stocks. It's a method that he's been using for decades, and it works great. So without further ado, Barry, let's go ahead and get you started.
All right. Hey, Jeff, how you doing?
I'm great.
All righty.
I just made you the presenter. If you want, I can give you another dad joke. It's up to you.
Oh, okay. Go ahead and do another joke while I'm pulling up my screen.
Okay. What do you call a boomerang that doesn't come back?
I don't know.
A stick. All
right. That makes sense.
Yeah, that tracks, right?
That tracks. It does. It does. All right. Let me. Where is my? There it is. All right. Kablambo. Now, can you see my slide presentation?
I can see it. Well, no, not yet, but it usually takes a few seconds. So I'll let you know as soon as we can see it come through.
Oh, okay. So, and then I also have a webcam. I could share my ugly mug. See if that works. Oh, there I am. Where am I?
All right.
There.
I do. See, I don't see your presentation. Greg, do you see his presentation yet?
I do not. I see Barry, and I'm actually envious of his shirt and his studio, but I do not see his presentation.
All right. Let's see. It says people can see your screen. Well, but you can't. So, all right. Let's.
I can grab it again and send it back to you. Sometimes that's what it needs. Kai says the actual answer to that is not a boomerang and not a stick. It's a lost rang.
Ah.
All right.
I like
Barry,
stick better. Okay, I can see somebody's presentation. 5 energy method.
Barry, I send it back to you, so it should be asking you to share your screen again.
All right. Try. Maybe if I share it in a different way. Let's see. I shared the slideshow. That didn't seem to work. Maybe if I show my whole monitor. I don't really want to do that. Share both screens. No, that's not really a good way to do it either. Well, let's just try it again. Says off air. No one can see your screen. Click to start sharing. Okay, okay, click.
Try that. I bet it's going to work now.
Let
Maybe.
me try it. This is very bizarre. Okay, let me,
Barry, I think I've seen at least 25 of your presentations, and I don't ever recall once having a technical issue. In fact, you
no.
were with us. I'll let you focus on what you're doing while I relay to people that Barry probably doesn't remember this, but he was with us for our very first live stream about what, Jeff, 15 years ago.
Oh my goodness.
And I remember him saying to me, "Yeah, we've tried that. It's not easy and it doesn't go well." And there were issues on our end, distinctly as I recall.
As I recall, we were rerunning wires around the studio for a few minutes.
Oh, there were men behind curtains, there were buttons going off, alarms. It was horrible. Hey, there we got something.
I see something.
Okay. Whoops.
Oh, and we got your high school photo.
Okay.
Hey,
All right, you're good to go. Thanks, Barry.
yeah.
Good. Okay.
I'm gonna get out of the way. It's your turn, Barry. Thanks.
All right. Thank you, gentlemen. And just to make sure, I have until the top of the hour. Is that right?
Yeah, we don't have a hard set time. So you're the last speaker. We saved the best for the last. So do what you need to do.
Okay. All right. Well, I'll respect everybody's time, and I'll still use the top of the hour as my end time. So just so everybody knows, yeah, I don't plan on going over time. All right. Well, welcome, everybody. I can see the attendees here. So welcome. Great to have you. Great to be here. Yes, Metastock was the very first trading platform I ever used in my entire life, and still using it to this day over 2 decades later. So quite a history, and very, very honored that such a prestigious company would, you know, allow me to come and to share. So without any further ado, there is my high school picture. Just a little bit about me, just so that you understand that I do have a little bit of credibility under my belt. I am a published author. Wiley & Sons asked me to come and to write a book for them. You know, they have the Dummies series of books, and so they actually called me out of the blue. I didn't even want to write a book, but they said, hey, we've done some research. We're looking for an author for a book. We've already come up with the title, Trend Trading for Dummies, and we've vetted a lot of people. We want you to do it. I said, oh, okay. Well, that was a great process, and it's available wherever the better trading books are sold. Stocks and Commodities Magazine, Jeff already mentioned them. I've subscribed to them for many, many, many years. Highly recommended also. And very proud to say that we've won many Reader's Choice Awards in that magazine. I've also helped other authors with their books and given talks at the Chicago Mercantile Exchange, the Eurex Exchange, and oh, it goes on and on. I could give you 100 different references. So important disclaimer, I know you've seen this before, but whenever there is a multi-speaker event, I know people come in and out of these events for different speakers. So I think it's important to not only make our lawyers happy, but also to be responsible and to share this information. So please read through the disclaimer there. Very, very important. I'm actually going to talk about some of the application of some of these for the practical application of these legal disclaimers in your trading to help you be more profitable. So who are you? Well, I've got my questions box up here, so let's make this a little interactive. I invite you to not just sit back and listen, but actually go ahead and type into the questions box, if you would, right now, the answer to this question. What are your most common trading problems, struggles, and frustrations? And obviously I've got a PowerPoint presentation here, so it's already pre-rendered, but by you answering this question, I can customize this presentation for you because every audience is different. So if you say you have one particular problem, I could spend more time on that, less time on another one that you don't have. So yeah, go ahead, type into the questions box. What are your most common trading problems, struggles, frustrations. I have a pretty good idea of what most traders struggle with because, oh gosh, I've trained over, I know I've got over 10,000 students now in trading. So I have the privilege of getting feedback from people. And I do at least 4 live webinars every single week. So I hear from people what they're struggling with, what they want help with. People email me. By the way, at the end, I'll give you my email address. And if any of you want to get some help with your trading, you can email me for free and ask me a question. Be happy to answer that without you having to buy anything from me. So I'm really in tune with what people are struggling with in their trading. So here we go. We've got several. Mitchell, by the way, congratulations, Mitchell. Lost range, says Cal. Lost ring. Oh, that might have been something else. I'm not sure. But anyway, Carol, hi Carol, says where to enter a trade. Well, that's a good one. I mean, that's a great one. That's where it all starts. Where do we enter a trade? And you're in the right place. I will be showing you exactly where I enter a trade. So you're at the right place. Neil says turning points. Again, I will address that very, very clearly and in detail in today's presentation. So, oh, Greg says exit strategy. I mean, really, that's what trading is all about, right? Where to get in, where to enter, and where to exit. So you pretty much covered the whole gamut, and they're both very important. And then I'm sorry, I don't know how to pronounce your name, so I apologize for that. But this person says, I'm a swing trader, and timing to enter and exit is a struggle for me. So it looks like we have some common denominators here. Well, I've done a survey in the past asking my subscribers what their most common problems were. And here are the top answers. So see if these resonate with you. People would say, and I would ask them a little more detail than I'm asking you. So they'd give a little more detailed answers. So one was they would say, well, I enter the market, and let's say they buy. And as soon as they get in, then they get stopped out. And then right after they get stopped out, then the market goes back in their original direction. And my mentor at the Chicago Mercantile Exchange, he addressed this and he said, you know, Barry, one of the biggest problems the traders have is they're right, but at the wrong time. And what he meant by that was they might be able to see what the trend is. Let's say it's up, but they don't enter at the right time. So they're in the right direction, but then they get stopped out, and then the market continues to go up. So that's what people are saying with that one. Getting out of big moves too soon, and so not making the huge profits. So Greg, there you go. That's one that a lot of people are talking about, exiting, when to exit the trade. Getting stopped out too often. Number 4 was not knowing the best place to exit the market. And oh, here was number 5, trading a trend that doesn't follow through. You think you're catching a trend, but then as soon as they get in, that's when the trend ends. So if you are experiencing any of these 5 issues, please understand you are not a uniquely bad trader. There's nothing wrong with you. In fact, everything that you're experiencing, other traders are experiencing as well. That's very important to understand. I don't want you to feel bad if you're not making money at trading. These are the common problems that every single beginner trader has. But the good news is there's answers to every single one of these problems. And that's what professional traders do. We learn the answers to these questions. And I'm going to share those with you right now. Now, first of all, I want to address the number 1 reason that people fail at trading. It's actually that they have false expectations on how the markets really work. They're looking for something that doesn't exist, and so they never find it. And a lot of people don't even know about this, but it's really not about an indicator or a moving average or a candlestick pattern or any of that. It's just that their concept, their paradigm of trading is totally false, totally wrong. And until they change that paradigm of what makes markets actually work, It doesn't matter what they will do. It's like living in the matrix, right? If you're in the matrix, no matter what you do, you're still in a false reality. You're in, so people are basically in the world of the Tooth Fairy, Easter Bunny, and Santa Claus in trading. So here's the number one assumption that people have, I found, is that they think that trading is about predicting the future of what's going to happen in the market. And, Jeff even talked about that a little bit. People talk about it all the time. Well, what do you think the market's going to do here in September or October or by the end of the year? And these are questions people ask all the time. And it's very common. Nothing wrong with asking the question. But the important thing is to understand that as traders, our job is not to predict what the market will do. And I know this assumption is there because, again, I get questions from traders all the time, and they will ask, it always starts with, well, how do I know if? So it could be, how do I know if the market will go up? How do I know if the market will go down? How do I know if the market will go sideways? So anytime you ask, how do I know, K-N-O-W, you're asking a question that you should not be asking because we never know. Trading is not about knowing what's going to happen in the future. There was a famous book called Random Walk Down Wall Street. And this book demonstrated that most of the time the markets are a random walk. Think about it. What's going to happen between now and the end of the year? Well, we could have any kind of economic news that we have no clue of right now. Political corporate scandals, major industry recalls. We could have war, disease, natural disaster, or it doesn't even have to be real. It could be false, rumors, gossip, social media, hysteria, and the markets react emotionally even to unconfirmed information, and so it will affect price action. Well, all these things are unknown in the future, and these things do affect the market. And this is just a few examples as to why the markets are a random walk. Other things. Traders all over the world. We have an international trading world now. And so people are trading different time zones. I mean, not only in the US, but in different countries, Asia, Australasia, Europe, all over. And then with different internet speeds. So those orders are hitting the market and people are looking at a chart, but by the time the order hits the market, it could be faster or later than someone else's order hits the market, looking at the same setup. Traders using different strategies, traders using different indicators, different time frames. And then there's dark pools, and dark pools are where 50%, over 50% of stock trades are placed. And dark pools are what they kind of indicate. They're dark. In other words, the order is not seen, it's not even placed through the public exchange. So if you're trading volume, you don't see that volume. That's over half of the volume of the stock market that you don't even see in real time, which is what really matters, real time. Now, they do have to report it to the public exchanges hours later or maybe even a day later, but by then you've already placed your trade. So, and then you got the opposite of that, you got high frequency trading, where trades are just coming in, they're just computerized, they're just going in milliseconds, in and out, in and out, in and out, in and out, faster than you can even blink your eye. And so you put all these different factors together. Okay, again, unexpected economic news, unexpected political corporate scandals, industry recalls, war, disease, natural disaster, rumor, gossip, social media hysteria. Whoops, where did it go? There we go. People trading with in different time zones, internet speeds, and then some institutions actually have their servers located right on the exchange floor so that boom, their orders hit really fast, so they don't have to, they don't have that distance. And then others are across the world, different time intervals, dark pools, high frequency trading, chaos, random walk. So how do you know is a bad question to ever ask. You should never ask that question. As soon as you ask that question, stop yourself, listen to yourself talk. Say, well, how do I know if, or how do I know when? Right away, you are going in the wrong direction because you're asking yourself about prediction. How do we know what the market's going to do 2 minutes from now, 5 minutes from now, 60 minutes from now, tomorrow, the next week, month, or year? You don't. So what is behind the market? What makes the markets really move in the now? Because now is all we have. You know, trading is very much like life. In fact, I'm going to be writing a book someday, haven't even started it yet, about how life lessons parallel trading lessons. And so this is one of them. And you've heard probably the phrase, be here now, that the only reality, the only life we have is now. Whoops, that now is gone. Okay, now, whoops, that now is gone, right? And so don't be anxious about the future. Don't worry about or don't get upset about the past. All we can do is in the now. Same thing in trading. All we have is the now, this instant. So what do we base our decisions on in the now? And the answer is supply-demand imbalance. Very basic. Now, this is super simple stuff. You all know this. More demand than supply, prices go up, so you buy. More supply than demand, prices go down, so we sell. If there's no clear imbalance between supply and demand, then we just don't trade. Market's just going to chop sideways, and that's a lot of the time, by the way. Markets quite often do not have a clear, distinct opinion on what's going to happen. A lot of times the markets are just feeling very uncertain. And so they just kind of chop sideways. And then remember, supply demand, we're trading it in the now, but we have to be aware it can change at any moment in time. And therefore, we trade bar by bar. And I like to use the term bar by bar because then that's universal. If you're day trading and you trade 5-minute bars, you trade a 5-minute bar by 5-minute bar by 5-minute bar. There's no period of time. If you're trading a daily chart, you trade daily bar by daily bar by daily bar. And what we're doing then is we take the trade when there's a clear supply-demand imbalance, and then we trade in that direction. And then we manage our money and we manage our risk around what happens bar by bar in the future. Not knowing, not pretending. I don't even like to watch the news. I don't like to watch financial news. I don't like to listen to opinions because I don't want those seeds in my mind. People are going to have opinions, and that's fine. I don't want to know what their opinions are. I don't even want to have an opinion. I just want to trade the supply and demand bar by bar on my chart. And the other thing that's really, really important to understand about the markets, they don't move on logic. Sometimes the markets go up on bad news. And you can see this, one of the easiest ways to see it is if you go through a chart and you look at the earnings reports on a historical chart, and it'll tell you what the expected earnings were and what the actual earnings are. And it's amazing how many times earnings will come below expectations and that stock goes up. and the opposite as well. Sometimes the markets go down on good news. And either way, the markets tend to overreact to news because when news comes out, people have a knee-jerk reaction quite often, and that's a very emotional and it's an overextended move. And then things calm back down. So the irony of this is very, very, very smart people often have a hard time becoming successful traders. I was talking to a friend of mine about this who has been, he's been teaching trading for, I don't know, a lot longer than I have. And I've been trading for and teaching for a long time. But he even said to me, he said, Barry, the 3 categories of people I have the hardest time becoming successful are accountants, engineers, and doctors. I said, well, that's really interesting. Why is that? And he said, because they're just too darn smart. They're logical, they're very intelligent, but the markets mostly move on emotion. People are very emotional about their money. And when we're talking about the markets, we're talking about really mass psychology, which the principles of mass psychology are different than the principles of the individual psychology. And so in mass, and we've all seen this, people tend to do things that they wouldn't do on their own. We see that with riots and things going on in the streets, in looting. Most people wouldn't just go around and loot a store by themselves. But when everybody else is doing it, then all of a sudden people who normally wouldn't do it will join in. And so the markets are kind of like that. Now, so far, so good. We're moving forward on how to trade in the reality of what the market really is. Get rid of our false expectations and deal with reality. But we still got a problem. And we talked about it a little bit already. Simply following supply and demand isn't enough because, as I mentioned, there are dark pools. There's also OTC markets, over-the-counter markets. And the bottom line is over 50% of the daily stock volume is hidden from the public. So how can we trade supply-demand imbalance when we don't even see 50% of it in real time? It's hidden from us. So here's the solution that I came up with. And what I'm doing is I'm putting together 5 uncorrelated variables of money flow. It's still all about the money flow. It's the old saying, follow the money, honey. So we got to follow the money because actions speak louder than words. And the actions in trading are where people are putting their money. They'll have opinions, they'll have ideas, they'll have, their theories. All that's great. But I don't care what anybody says. I want to follow their actions. And in trading, actions is, are they buying? Are they selling? Or are they just keeping their powder dry, staying on the sidelines? That reveals their real belief. And I don't care about their belief, but this is what makes the price move. So what we do, since we don't have all the information in supply demand, we have to be a little more sophisticated. So I look at 5 uncorrelated variables of money flow. It's still about money flow. When all 5 of these are bullish, I buy. When all 5 are bearish, I sell. When they're mixed, I stay out of the market. And the operative word there, if it's not obvious enough, is uncorrelated. Capital underlined. My English teacher would be really upset that I double emphasized a word. But it's so important. So there's people who will put, for example, they'll have 5 indicators on their chart, but they might all be trend indicators. Well, that's redundant. It's frankly dumb. Why would you put 5 trend indicators on a chart? So no, we need 5 indicators that measure different aspects of money flow. So what are those 5 energies of money flow? Number 1 is trend. Number 2 is momentum. Number 3 is cycles. Now, cycles is the timing. So for those of you who typed in, oh, I need help, and where do I enter the market? Okay, and also, by the way, that also helps answer the question, where do I exit the market? Because cycles are about timing, when to get in and when to get out. Now, just a real nuanced distinction here. Cycles are not about where to get in. They're about when to get in. It's about timing. And I'll show you more about that in a moment, but I just wanted to make that distinction. Sometimes the dollars are in the details. Number 4 is support resistance. Most people are familiar with that. And then number 5 is the fractal energy, which is just a fancy term for using a higher time frame. So I use a shorter time frame and a longer time frame. I base my trade setups on the shorter time frame, and then I confirm it with the energy in the higher time frame. All right, again, the key that makes it work is that these are uncorrelated energies of money flow to each other. All right, so I liken this to taking a trade to court. Again, we have no certainties. We don't know what's going to happen in the future. We're just trying to create a probability scenario, which is why risk management, money management are so critical, because we don't know. Therefore, as the market moves bar by bar, we manage our risk around that movement. So I liken this to this example here, taking a trade to court. Let's say a man is accused of stealing bananas. I didn't want to make it anything too serious and maybe a little, silly. But how do we decide if this dude is guilty of stealing bananas? How do we decide if he's innocent? So we take him to Banana Court. All right. And let's say there's 5 witnesses that go up to the witness stand. And those 5 witnesses, it's one of them is his best friend, another one is his brother, another one's his cousin, another one's his girlfriend, another one is his mommy. And they all say, oh yeah, he's innocent. He didn't steal the banana. Well, is the jury going to really take that very seriously? Since all of these 5 people are related to each other and related to the accused, there's a low probability that their testimonial is reliable. All right, now let's move on to another scenario. 5 independent witnesses, but these 5 people, they don't know each other. They don't even know each other. And they don't know the accused. They've never met him before in their life. And they all say, I was there, and I saw with my own 2 eyes, I saw him steal them bananas. Now, since they're all unrelated to each other and unrelated to the accused, there's a high probability that their testimonies are reliable. Again, no certainty. Sometimes people do go to jail who are innocent, but the probability is he stole the banana. All right. I know that's a little bit of a silly one, but I didn't want to make it too serious. So let's look at some charts now, and let's look at how we read these on charts. Energy number 1, trend. We start with trend because trend is direction. It's the extended general direction of the market. It's the long-term trend, by the way, long-term direction of the market, not a short-term. The short-term direction of the market is not a trend. Webster's dictionary actually defines trend as the extended general direction. And the reason that's important for traders is because we want a small risk, but a big reward. So we want a long-term move. That's what trend trading is all about. Low risk, big reward. All right, so I wonder, I'm not gonna mess anything up here. Can you guys see my pointer on my, let me know if you can see my pointer so I can point at things. And I don't know if you can see it or not.
I can see your,
can see it.
I mean, I can see the arrow.
You can see the arrow? Okay, good.
Yeah.
Awesome. So, by the way, I'm using the Metastock add-on for the Top Dog trading system, which they created, which is amazing. It makes everything easier. So I use the 50-period simple moving average, that's this red line, for trend. Now, the add-on actually created a ribbon here. The programmers at Metastock added this ribbon just to make it super clear, right? Boom, downtrend, uptrend, trend changed right there. So it can't be any easier. Now, there's 2 things about trend though. It's not just that we want to trade in the direction of the trend. A lot of you have heard the term, the trend is your friend until the end. Why is that phrase so important? And what does it really mean? How do we apply it to trading? So the way we apply it is, since the trend is a friend until the end, what we want to do is we want to enter as early in a new trend as possible. Because the longer that trend continues, the less likely it is to continue, or I'll use that word again, the less probable it is to continue. So in my methodology, we use wave counts. So as soon as the trend starts, then we get a wave 1, a wave 2, there's a wave 3, 4, and 5. Now these are not Elliott waves. I want to make sure that we don't confuse these with Elliott waves. They're similar, but they're not subjective at all. They're very, very mathematically objective. And so again, Metastock was able to program these wave counts right into the charts. And so again, you don't have to try to guess what the wave counts are. They'll pop up right on your charts in real time. So the earliest we can get into a new trend is wave 2. And we call that a first retrace in the trend. So the trend is up, 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 up. We enter on the first retrace, that's wave 2, boom. And 1, 2, 3, 4, 5. 5 waves are the average length of a trend. Now, with my trend counting methodology and my wave counting methodology, unlike Elliott wave, you can get more than 7 waves because it's an algorithm. All right, we're not imposing on the market saying, oh, every trend has 5 waves. No, we're literally using the information, the data from the price action, and we are counting waves. So you can get more than 7 waves, but when you do, that's telling us, oh, we are in an extended trend. We're beyond the time when the trend is highly probable to continue. And so in top dog trading, we will take the first retrace in the trend, wave 2, or the second retrace in the trend, wave 4. Those are the only 2 times we'll enter in the direction of a trend. Once we get to wave 5, then we look actually to see if we get a wave. If we do get a wave 7 or 9, then we look for a trend reversal trade, because now the trend is no longer our friend, so the counter trend is our friend, and we do trend reversal trades. Okay, so that's trend. That's number 1, but that's not enough to trade with. So what else do we need? Well, we need support resistance. So what I use is this black line is my 15 exponential moving average. And the reason I use that as support in a trend trade is because the basic meta pattern of a trend is for an uptrend. You want strength going up, weakness coming down, strength going up, weakness coming down, strength going up. Why is that? Because that means there's a lot of buying power. So the big money is buying, 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 buying. And then when it retraces, that's just a little bit of profit taking or maybe some amateur shorting. But we don't want the pros coming in and shorting this heavily. So the line of demarcation for that is the 15 exponential moving average. As long as it retraces just to the 15 EMA, we're still good. That's our support level for weak retraces. That shows that there's not a lot of institutional shorting coming in against our position. Energy number 3 is cycles. So now this is, again, directly addressing the questions that were brought in. Where, not only where, but when do I enter? So where you enter is off the 15 EMA. So think of where as the y-axis, the price axis. That's where, that's the price level you're going to enter. When, which very few people actually have any type of timing indication on their charts whatsoever, which is crazy because it's 50% of the information on a 2-dimensional chart, right? You got a y-axis, price, you got an x-axis, time. 50% of the information on your chart. So how can you establish a probability if you leave out 50% of the information on your chart? And yet very few people trade cycles at all or have any knowledge of cycles. That to me is just insane. So this is the top dog cycle indicator. And so when do we want to enter? We want to enter when the cycle indicator comes down here to this lower line, and then we just wait for it to hook up. See how it goes down, 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 hooks up, and then the bar that causes it to hook back up, bam, that's the one I'm going to buy. So I would buy, even though that's a red bar, I'm still going to buy that bar. My protective stop goes right below the lowest low. This is the cycle low. And my entry goes right at this, at the high. So my risk, look at my risk. The risk is the range. It's less than the range of the green bar, actually. So my risk, when I trade this way, it's very small. And see how precise it is? These are what I call precision entries. It's the confluence, and I learned this from W.D. Gann, which I don't use a lot of W.D. Gann's actual tools, but some of his concepts are fantastic. And the one that I found to be most powerful is to look for the confluence of time on the bottom, time and price. And that is exactly what we're doing here. Now, I do it in my own way. This is how I do it. I combine the 15 EMA with my cycle indicator. When those two come together, boom, that's where I'm in. And I don't have to guess. I'm not chasing the market. This is also what helps me not get stopped out so much. People who get stopped out, that problem that I showed from the survey, where people said, oh, I'm right about the trade, but I get in, then I get stopped out, and then the trade goes back in my original direction. The reason that happens to them is they don't know how to time their entries. They're not buying cycle lows, and they just don't know how. It's not their fault, just nobody ever taught them, because it's not really taught that much anymore. So this is how we prevent from getting stopped out so often. All right, so energy number 3, cycles. And energy number 4, momentum. Muy importante. All right, now I know we've got people from all over the globe, so I wanted to add a little international flair with my entire spectrum of the Spanish language has now been exhausted. So hope you don't mind. I throw a few dad jokes in there myself. I just make them up as I go along. They're not as good about as, you know, the ocean and the beach, but anyway, I just wing it. So we've got first retracing the trend early in a new trend. We've got support of the 15 EMA. Our timing, boom, cycle low. But now we still need to determine whether this trend, and remember, this would be the right edge of the screen right now when we're trading it. Is this trend a strong trend or a weak trend? Remember earlier I said the dollars are in the details. Trading in the direction of the trend is not enough. Trend only means direction. And it only means direction at that snapshot of time you're looking at the chart on the hard red edge of the screen. So to increase our probability, we don't want it just no direction. We want to know, is the market moving up direction on strength or on weakness? A momentum is what tells us that. And this is the top dog trading momentum indicator down here. And it's above 0. This is the 0 line. So it's a strong bullish momentum. And where'd my arrow go? There it goes. That's what we want to see. If this was down at 0, I wouldn't take the trade. If it was below 0, I wouldn't take the trade. Because then it's a weak trend, and weak trends don't follow through. Remember how I said the average trend is 5 waves? Well, that means that some trends don't go 5 waves. They go less. And the ones that go less are weak trends that don't have strength behind them. And then finally, energy number 5, what I call the fractal energy, just a fancy name again for multiple time frames. So here we go. We're always I'm using the same example here to give you continuity. So we're early in a new trend, wave 1 or retrace 1, which is wave 2, cycle low, strong momentum, support. Now we look at our next higher time frame. And here, what we're looking for is just one thing, momentum. There'll be a lot of people who teach you multiple time frame trading. That's not unique to me, that's for sure. Been around forever. But some people teach, oh, you should only trade in the direction of trend of the longer term time frame. That is not optimal, because you could be trading in the direction of a weak trend on the longer time frame. So the most important thing is we want bullish strength, momentum, moving up, and here it's really shooting up. Look how aggressive it's moving up. It's also above 0. So we've got strength on the long-term chart, bullish strength on the long-term chart, bullish strength on the short-term chart, and that is what you want to see for a market that's really going to haul, let's not use that word, really going to haul patootie. That's what we want. We want strength confirmed, bullish strength confirmed on multiple time frames. And again, there's a logic behind that. We're involving more traders, more people, more money, right? More demand, more shares, more contracts, more lots, all coming in from people trading one time frame, people trading another time frame. And then we got all that strength behind us. And again, adds to the probability of the trade following through. So here you go. This is a summary. So, I always do it in this order. All right. So this is literally, you could see this as a 5-step checklist. In fact, when people take my course, at the end of the course, I have a half sheet of paper. It's a summary. So I teach everything with the videos and manuals and things like that. And like I'm doing now, I explain everything. I give the logic behind it because I want traders to be educated. I want them to be self-empowered. I don't like to just give out trade signals or anything like that. No, in Top Dog Trading, our goal is to create self-empowered traders so that you don't need me. You don't need anybody else. You are truly, I mean, if you want to be financially independent, you better have independence in your skill, in your knowledge base, in your wisdom. That's what gives you financial independence. You don't want to be dependent on somebody else. So that's our whole goal at Top Dog Trading. Create independent traders, self-empowered traders. So in my courses, I go through and I explain, like I'm doing now a bit, although I do it some more, why all of this works, what I call the market logic behind it, so that you're not just taking my word for that it works or why it works or whatever. It actually resonates with you and you say, oh, God dang, that actually makes sense. There's a reason these things work, a logical reason. Yeah, there is. So, and then, like I said, at the end of the course, there's a half sheet of paper. That's the 5-step checklist. I'm basically giving it to you right now here. So step 1, are we in a new trend, early in a new trend? If yes, then we go to step 2. Do we have support? If we do, then we go to step 3. Are we at a cycle low? Is it time to enter the trade? If not, we wait for the cycle indicator to come down here. Okay, then once it gets there, then we look, oh, is it a strong trend or a weak trend? Is momentum above 0? Yep, it is, all right. Now that we got those 4, then we go to our next higher time frame, and we look for bullish momentum on the next higher time frame. Once you've got all 5 of those, 1, 2, 3, 4, 5, boom, 5 independent witnesses. Again, uncorrelated energies of money flow. Now you have a high probability trade. And that's the Top Dog Trading 5 energy method in a nutshell. Now, this is for trend trading. I have other types of trades too. I mentioned in passing trend reversal trades. We have those. We have a reversion to the mean mathematical models for trading. We've got consolidation trades, triangle trades, things like that. So I don't have time to go through all the trades, but this, I thought showing you a trend trade would be maybe the most easy and the recognizable way to help you understand the Top Dog Trading methodology. So again, determining probability scenarios, we simply ask at each point, how many of these 5 energies are aligned? And you give each, set up a score, literally a score, 1 to 5. The higher the score, the higher the probability of the trade. Like taking each trade to court, 5 independent witnesses to establish a preponderance of the evidence. So what we're doing is we're waiting for the alignment of 5 energies to put the odds on our side, and I put it all in one sentence here. So I gave you bullet points. All right, now here's another way of looking at the same thing. You're welcome to write this down if you want to. The whole Top Dog Trading trend trading methodology is summarized in this sentence. We're looking to get in early in a new trend that is strong at the right time with support at your back and confirmed by the bigger scale. That's it. We can all count to 5. It's robust and adaptable. So people ask me all the time, well, does this work for, this market, that market, whatever market? Yeah, it works for stocks, commodities, options, currencies, futures. Oh, I can add crypto to that now because I trade crypto pretty actively. And the reason, again, give you the reason it works for all these different markets is because all these markets have the same thing in common. They just move up and down based on supply demand. There might be different fundamental reasons, sure. There might be different considerations with regard to what catalysts really move them. But the bottom line is, does money come in? And these 5 energies apply to any of these markets. What time frames does it work for? Another question I get. Any time frame, investing, swing trading, day trading. I do all 3 of these, and I use the same 5 energy method for all 3 of them. So the only thing that I would say, I'll give a little caveat here, and this would really be true for most any trading system, I would say. You want to trade a market that has good liquidity. So any market that doesn't have good liquidity, then the supply demand, the evidence, all of that is you're just not going to have as much data to deal with, good data. So my method is very simple. It's completely objective. Again, we're counting to 5. So, and fortunately, Metastock has created an add-on for Top Dog Trading Toolkit. And you've seen it already in the charts, but I want to just point out a couple of other really super cool things they added that is not available on any other charting platform. These are Metastock exclusives. So this is what's called the commentary. So you see this little dot or this red triangle? So you could click on that. It'll bring up this commentary window. Actually, you can keep this commentary window up if you want to. And it'll actually tell you, oh, that is a first retrace in the trend long. Well, sure it is. We can see that, but, and then it'll tell you, oh, your entry price right there, your initial protective stop, your targets. I mean, boom, right there. Talk about objective. And then if you want to learn more about this first retrace in the long, then there's a link to a web page where I've gone in and I've given a full explanation of the first retrace in the trend. And so you've got that whole extra educational resource there as well. So every setup, every one of the Top Dog Trading setups will have a little triangle pop up on there, and you can bring this up and get all those details. And not only that, but you can scan for the Top Dog Trading setup. So you go into the Explorer, the Metastock Explorer, and there's actually more of these, but these are just the ones that I could make show up on the screen. So we've got, like I said, I don't just have trend trades, but we've got what I call dad trades, rubber band trades, trend trades, triangle trades. There's your reversal trades, etc. And so you can go in here and you can run the scanner, and then it'll bring up any stocks that are meeting any of these Top Dog Trading setups that you scan for. And so it goes and finds them for you, automated. Beautiful. All right, last slide. I guess I did go over a smidge, didn't I? Anyway, no, I didn't. I came in 5 minutes early. Oh my gosh.
Yeah, you're doing great, and your jokes are always welcome. So.
Oh well, thank you. Yes, my jokes give my daughters a lot of eye exercises because they're always going like that. So as I said, I promised I would give you my direct email address. So Barry@topdogtrading.com is my direct email address. Feel free to send me any questions that you might have. Also today, I want to give everybody a free gift. So I'm actually giving you a trade strategy, the rubber band trade. You might have seen it. Actually, if I go back here, yeah, see right there, Top Dog rubber band trades. Okay, so I will teach you that trade for free. It's not a trend trade. So this is a different mathematical model. It's actually a reversion to the mean mathematical model trade. And I have, I think there's 4 videos in there, a little mini course is what it is. And I give you all the rules, everything about that setup, complete rules, including exactly where to enter and exit. And it's included in this little mini course, how pros trade different than amateurs. I'll also in that same little mini course show you my cycle indicator for precision market entry triggers. And this is a little follow-up webinar. It's a recorded webinar, about 45 minutes long, but it's recorded so you can watch it anytime that you want. And I'll show you how to set up my cycle indicator on any charting platform. And you just go to rubberbandtrade.com. That's a pretty good name. I'm surprised I was able to get that URL. Rubberbandtrade.com, and you get all this stuff for free. So pretty good price. All right, well, that's it. Jeff, I imagine you probably have a few things to say, either about this or to close out the day. What an amazing day. And wow, you brought together an incredible group of people. And of course, got many more coming throughout the rest of the week.
Well, it's always good to have you, Barry. And I want to talk about how to get the Top Dog Trader because it's a really, really good add-on. So I'm going to talk a little bit about that. But before I let you go, thank you for spending some time with us. I appreciate it.
Oh, my pleasure. Always, always, always a pleasure and honor. And like I say, you and I, not just me and the company, but you and I, we've known each other for at least 20 years.
Oh my gosh, yeah, for
right,
sure.
It's just always a pleasure to work with you. You have such integrity, you're fun, you're professional, and you're so smart.
Go on. Yeah,
and,
yeah.
Wise and spiritual.
It's always good to talk to you, man.
And okay. Your wife's gonna watch this recording, right?
Yeah. She is now.
Oh, she is?
Oh no. No. I remember one time I showed my daughter asked me, she was very young at the time, but she's like, hey, do you have any videos on your new laptop? It was a new work laptop. And I'm like, yeah, I have some videos. And so I played her one of my videos. And after she watched a few minutes of it, she wanted to know if I had any good videos on my laptop.
Oh my gosh. Ouch. What's that musical? Thank God for Little Girls.
For sure. Anyway, I'm trying to, I am the presenter. You can't see my screen. I've been trying to kind of switch the presentation over. And Barry, thank you very much. I appreciate everything you've done. It's a great little add-on. I'm going to show everybody how to get it. But thanks for all the support over the years. I appreciate it.
Well, thank you, brother.
All right. I'll see you soon.
Okay.
All right. And then, with the Top Dog Trading Kit Toolkit, Barry did a good job about talking about the commentary and what's in there and what's included, the momentums. He's got patterns that are designed to find new trends, momentum trends, long trends, reversion to the means, triangle pattern trades. All of those are there. You can scan for it, of course. It has everything set up, architectured for you. Normally it's $4.99. $3.99 here at the event. You know we're going to back it with a money back guarantee, so you can try it, see how well it works for you. It's going to work fine. That's why we back it with a money back guarantee. To take advantage of that or any of the specials that we have today, visit metastock.com/conf promo. Give us a call, 800-882-3040, or go to metastock.com/saleschat. Want to say very quickly thank you to everybody that we had that came and spoke today. Thank you for being here, being part of the thing. Thank you again to Stocks and Commodities, as well as if you haven't yet joined the tradersforum.com, you can go do that now, www.thetradersforum.com. And again, here's the information if you want to take advantage. We talked about a lot of really good add-ons today. If you want to take advantage of that and or any of the Metastock trial stuff, the extended trial where you buy a month and get 2 free, all of those offers can be found at metastock.com/conf promo. You can give us a call, 800-882-3040, or you can go to metastock.com/saleschat. We have another great lineup tomorrow, full of really, really good speakers. I'll see you in the morning. 8 a.m. my time. I don't know what time it is yours, but if you're in Eastern, it's 10 a.m. We'll see you tomorrow. Thanks for being here. Stay healthy. See you in the morning.